Yo, 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 good morning, everybody. How are we doing?
Yo, what is yeah. What is good, people? How are we doing? Oh, what
What's
is going on with me today? How you
with
doing, man? What's good, Rush?
not too shabby a night. I'm a bit tired. I don't know. It's a rest day today. I didn't go to the gym this morning. It's a rest day for me, so
Nice.
only going to the gym Mondays, Tuesdays, Thursdays, and Fridays now.
What's just happening?
That was weird.
I don't know what just happened then.
I think we should take the intro off of loop.
Yeah,
Sorry about that, guys.
I think that may be. I think that
Yeah.
may be a good idea. All right, I'm just going to switch over onto my mobile data.
All right, mate, you do that. So yeah, so like I was saying, Wednesdays now for me is a rest day. I feel like I need it. I've been I've been going to the gym every single day, Monday through to Fridays, and then on Saturdays we've got a park run as well. So the only day that I'm not exercising is on Sundays, and it's caught up to me. I was tired. I was tired yesterday. I was tired the day before. I'm tired this morning. So it's it's a bit rough. It is a bit rough. So okay, that's me done complaining. I'm done complaining about exercising and being tired and whatnot. Let's get straight into the market, mate. Let's just go for it.
Did you have a good little whinge?
Yeah, yeah. This is complaint over. I
That's good,
complained
man. Hey,
successfully.
look, sometimes it's hump day. It's hump day. Sometimes we deserve to have a nice little whinge now and then. So it's good for us.
Yeah, a little hump day. Yeah. So, dude,
Yeah,
yesterday's
absolutely.
event. Uh, how cool was that? Futures finally released.
Mate, I know. It was awesome. Dude, I was so happy to watch some of the event. Obviously, I couldn't watch all of it as I was super tired, and then I did end up hitting the sack. So I'm gonna watch the rest of the event today. But how exciting is that? It's officially launched. That's amazing, man. It's
Yeah.
Dude, I'm going to be implementing this into a bit of a plan. I don't think I'm going to be doing it while I'm in Hong Kong. I think I'm going to wait until I'm back in the UK, just so, like you said, I can have my home set
Mm.
up and my comfort zone ready to launch into this new venture. But as soon as I get back to the UK, guys, I've got some really exciting stuff coming through into fruition, which you guys are going to be seeing on live on the Fiverr stream.
Yeah, no, I think the futures thing is going to be pretty awesome. So
Yeah,
I'm looking forward to also getting into futures as well. But first and foremost, I'm going to have to go through some of Dave's his teachings. Let's put it
yeah,
like that. So
yeah.
I'm going to be going over to the futures channel and just learning, just be a student of the market all over again. So yeah, that I'm looking forward to that. And everybody else in chat, if you haven't already, go and sign yourself up for the futures program. What they're doing is they're releasing the they're releasing the futures participation in batches. So if your name is on the list, let's say hypothetically, I don't know the exact number, but let's say it's 1,000 participants. They let 1,000 people join the futures program, and then once those 10, once 1,000 have been given their accounts, the next 1,000 as an example. So there's a bit of a staggered approach right now, but it's done in batches. So because this is the beta section, so it's going open to market participation effectively. So if there's still bugs and issues and stuff like that, they can always go back and just fix them, and then we can carry on. So yeah, I'm very excited for the futures channel and the futures trading as well. So very excited. Oh,
Yeah,
and
man, 100.
dude, we hit 100K subscribers yesterday.
No,
100K,
how exciting is that?
dude, just before the event. I think it is just it blew my mind because I was
Yeah,
actually
man, it was
speechless when
really.
we rocked up on stream, and it's just like we've hit 100K, and it's on the 10-year anniversary of the Fivers as well.
Yeah, it was a really exciting day. Really, really exciting day yesterday. The energy was up there. You know, I feel like I brought a lot of energy, so like I feel like I'm gonna give you guys a break today. I'm gonna try and be a little bit more zen. Gonna try and be a bit more mellow today.
I can be the more flamboyant, outspoken. No, actually, we've got LJ, we've got Jonatan, and we've got Dirk coming in a little bit later. They can
Yeah,
carry us.
I feel like the guys had a lot of will yesterday, so I feel like I gotta like just turn them down a little bit now. So you guys get to see that I can be normal-ish. Absolutely, Judy. Absolutely.
Yeah, so we'll just say hello to everybody in chat. If I've brought your name up already, then you can assume that
While
I've
you do
said
that, I'm going to refresh my page because none of the chat is showing up. So give me 2 seconds to refresh the page while you have a bit of catch up with everyone.
Awesome. I'm just gonna, like I said, if I've brought your name up already, it is with. You understand that we've already said hello. Like I'm saying hello to everybody that I've already brought up. Fiola Peterson saying good morning, Richard Ewell. Good morning to you. Fake Baba Boy, interesting. Hearts. Nguyen is saying any trades today. Well, we're gonna go and look at some trades very very soon. Yes, hello, fake Baba Boy. Disciplined Trader saying, have a nice day. You as well, Disciplined Trader. I hope you have a good day as well. Is it Jorge? Georges?
Jorge.
I think it's Jorge. Gold will have a look for you on gold. Well, more specifically, I think will have a look at gold for you.
I can.
Gombiji is saying, good morning, Coffee Club. Remember,
Good morning.
complaints expired yesterday. We don't want to hear complaints. CMA saying, good morning, guys. Good morning to you. FX Darth Vader is saying, I think Doctor Strange will come. Market volume will come. Yeah, if Doctor Strange rocks up today. Who's Doctor Strange again?
Doc Lock.
I think it's Doc Lock, yeah. Doctor Strange is going to be.
He is a bit
DAX
strange.
analysis, we can get into DAX 40 for you as well, my friend. So we've got gold, DAX, and NASDAQ.
NASDAQ.
I can have a look at NASDAQ for you. Spio is saying, good morning, Richard and Williams. What's up, Mr. Williams?
Was good. How was yours?
Stephen is saying, good morning. Where can I find info on trading the new futures? Funny that you would ask. In the description box below, right below, you have 2 links. The first link is a link to the Fivers hub, to the Fivers website. And then from there, you can go to the hub and you can order yourself a futures account. The second link is to the futures YouTube channel as well. So don't leave us. Don't leave us. Stay with us. But later, when you have an opportunity, go to the futures one and go and look through the videos that Dave has pasted there for us oh so nicely. Like we're very fortunate to have Dave do all of that stuff for us. So go and have a look there. There's a few videos there already you can have a look at.
Mm-hmm. Absolutely, absolutely.
10 years later. We are just getting started. You know what's the funny thing? Is that even though 2026 is the 10-year anniversary, we're not having one event. We're having several. This whole year, we've got events planned for every single month.
Yeah, 100%. It's gonna be a really exciting year. 2026 is gonna be a good year.
We've got a tire brand, like a car tire brand called Goodyear. So we joke sometimes saying we're going to have a tire.
Tire,
yeah, tire. I hope your ear is like a tire, not a Pirelli, but a Goodyear. So it's a stupid joke. Anyway, carrying on. Stephen saying thank you.
Oh wow.
Stan is saying, good morning, guys. I hope you guys are having a good one indeed. Richard and Jonatan. Don't forget Will. Don't forget Mr.
I'm well.
Yeah.
I like
Jonathan,
I'm like the better looking Welsh version of Jonathan.
well, you're the only Welsh version of Jonathan because he's Swedish.
I'm the better looking version of Jonathan, and I'm Welsh.
Yeah. Well, you're Welsh.
Ouch! All right, all right.
Nah, dude, you're a good-looking boy. You're a good-looking boy.
Stop it.
William, it coffee or not chocolate milk?
Uh, no, it is coffee. I just put too much milk in. Uh, yeah, it's a bit light. So my bad. I
Yep.
did put too much. I
Nice.
kind of slipped with the milk, and now it looks a bit like tea. So no, it is coffee, not hot chocolate.
Nice.
Although, could smash a hot chocolate right now, you know.
Uh, Interesting question here. Do you guys have any good trading courses that has worked for you, or is, that we can tell you about? Um, if you go to the Fivers and you go and look at their academy section, I am 100% certain you will find something in that academy section that will assist you. That is about as far as I would go in terms of courses.
Hmm.
Here's the thing, you can find out everything that you want to know about trading on the internet. It's all there. You don't have to go and pay for a course to get that information. The Fivers does it for free. You can go to their academy section. It's for free. You can have a look there. And then also you have us, myself and Mr. Will over here. If you have any questions, we can try and explain as much as we can. All of the traders that's going to come up later in today's segments, they all have their own ideas around trading as well. Jonatan has got his CMT2 certification, which makes him probably the most qualified technical analyst that we
Yeah,
have.
yeah. Well, he's literally he's literally qualified. Air quotes in the
Certified,
long place. Yeah,
certified
yeah. There you go. He's a certified.
technical chart technician. Yeah.
Yeah.
So when it comes to technical analysis, there's nobody that knows as much as he does because he's done the CMT curriculum. And then LJ, if you want to know about fundamentals, LJ is our residential
Macro
fundamental expert.
guru.
Yeah.
Yeah, absolutely. Having said that, with courses, it's a bit of a tricky one. I've bought two courses since learning trading, like my whole 7 years of trading. One was from a friend. The other one was recommended by another friend.
Mm.
And the first one was garbage. I'll be honest, it was an absolute waste of time. The second one was a little bit more expensive, and I did actually take a lot away from it. But then I realized a couple of years later that I could have found it for free if I just looked a little harder.
Mm.
So, like I've been very tempted. Like so many people have said, "Will, can you please make a trading course?" But yeah, Rich is Doctor Strange. I see.
Okay, well, now I know. I need my cape. That's what I need. I just need.
Yeah, yeah. Take the hat off and get some crazy hair going. But like I've been very tempted to actually create courses, but it would feel wrong of me. I probably will eventually, just because the amount of people that ask me compared to the amount of people I tell that all the information is for free, and you can find it. And like even if you come watch us here at the Fivers, a lot of the information we give here for free, people will pay thousands for in a course, and you just don't be lazy, go look for it, and come ask us in a live chat on the live streams with the Fivers. However, if I was to create a course, I would quite obviously put it out there that this information can be found for free elsewhere if you're not lazy enough to look.
Yeah. Henry's
So
saying
just
Michael. Sorry, Michael now has CMT. Yeah, but Michael's not on the stream, is he? So my statement still stands, Henry.
oh man.
Link's Void is saying any free account. Not today. Yesterday we gave away $2 million worth of accounts. some 100K boot camps, some 50K, and some 20K, and some 10K high stakes accounts. We don't have a giveaway today, unfortunately. However, it doesn't mean we don't have giveaways. We do have giveaways that we will be doing throughout the month, throughout the year, and whatnot. So just rock up every single day, and you can ask this question every single day, and one day
Maybe
you'll
there'll
get
be a day.
yeah, one
Maybe
day
one day you'll be right.
we will do account giveaways. But I'm gonna tell you this straight up. Account giveaways are on a RNG system, meaning it's a random number generator. We don't give free accounts to individuals who ask for it. We give everybody in the community a fair chance to win an account. So
Unless we really like you, then we will give you an account.
that's how Will got his accounts. We really liked him.
Yeah, they just
I just
really
wanted
like me.
I just wanted to say something about the 20K bootcamp account. So if you're in the hub, you will see that if you order or if you open up ordering a new account, if you click on the bootcamp side on the CFD side, you will have three options: a 5K, a 25, and a 100. So how this works is the 20K is the 5K. How it works is you have three phases. Your first phase, you will start with $5,000 that you need to then make your 6% on. Then once you've passed that one, you will move over to 10K. Once you've made your 6% on that one, you will move over to 15K. And once you've passed the 15K one, you will have 20K in funding. So don't let the 5, the 25, and the 100 confuse you. That is just the initial balance that you're going to start with. But it will be double that. The 100K one starts with 100,000, and then you will work your way up from there. So the 100K starts at 25K, and then the 200 starts at 100K. So don't let that confuse you. The 5K that's showed there is the 20K account, because once you're funded, you will have 20K in funding. Okay, and that is for $22 initial payment, and then only once you've passed all three phases and you've become a funded trader with the bootcamp account do you pay the difference. So just go and have a look at that. That is now currently, along with our 2.5K account, high stake account, our cheapest accounts that we can have.
Yes.
Akash, this question: in futures with the Fivers, you guys give Black Arrow as the software. But can you confirm, do we get overflow tools in the Black Arrow or only the basic package? Now, we did a Q&A yesterday on the Futures channel, the Futures YouTube channel. I wasn't a part of that Q&A. That's first and foremost. And secondly, I don't know all that much about the Black Arrow software. So what I would say is, if it wasn't mentioned in the Q&A yesterday, this afternoon, when the Futures channel goes live, or when the YouTube channel is running, go and ask Dave that question and just get feedback from him. He will be the best person to give you that information, first and foremost. Secondly, you can always go and ask our very wonderful and very, very competent technical support team. You can ask them whether or not the software will have that information, and they should be able to give you an answer. Unfortunately, I don't know much about the Black Arrow software, so I can't give you an answer on that one, unfortunately.
No.
Anyway, shall we? Shall we jump into the markets, mate?
Yeah, absolutely. Bombi G saying coffee with honey. Yes, my friend. Of course.
Obviously.
Coffee with honey. Obviously. Do you want mine, or I'll tell you what. You're at the very, very top. Let's go straight away and bring up yours, and then shit before the shovel.
The first one that people asked for was DAX. Let's have a look at the DAX. Who was it that said it? DAX, Mighty DAX?
Oh my god. Um.
I'd
Oh
forgotten
my
now.
god.
Anyway,
Oh,
DAX, DAX, mighty
dude,
DAX. Um, yeah, I can't for the life of
this is
me.
gonna really wind me up as well.
For the life of me, I can't remember who said it. Somebody said DAX, DAX, mighty DAX.
Yeah,
But
it's
now,
Dax, the wonderful mighty Dax, or something like that, wasn't it?
yeah, it's
Oh
true.
my god, dude, who said
Dirk,
that?
Dirk is going to
I
be
don't think
here
it was.
later, and he will tell us from the Frankfurt viewpoint what he thinks of the DAX. Um, so yeah. All right. Let's have a look at a little bit at DAX. I've already got one area marked up over here. Oh, that is not what I intended to do. Let's have a look, see if I zoom in a little bit. So this was on Thursday the 12th. We had this consolidation. This is on the 5 minute. Let me go over to the daily first and foremost, and then maybe this will make a little bit of sense. All right. So on the daily, we had this gap. All right. This gap was created on Monday the 19th. So this is just a gapped area. Okay. So what happened is we've already kind of filled this gap area on the 12th, where we just wicked above on the daily. So if we go lower, there's a break point down here where if price wanted to continue lower, it needed to break through this point. But we're continuing this upward motion from Friday the 6th. Okay. So if I just go down to the lower, a little bit lower on the time frame, that gap got filled. This purple box is a gap. It got filled very nicely. But then we started to try and sell off again, and we broke lower than the previous low points that we had. These two
Rich,
swing area. Sorry.
I'm so sorry. I'm gonna have to interrupt you. In the Wiles traders just told us it was Paul Brown,
Paul Brown. Yeah, there we go. Man,
Paul
what happened to
Brown
Paul?
from back in the Trade Delicious stream days. Paul Brown, that's it. Sorry, mate. Carry on.
Where is
Sorry,
Paul
I
Brown
just
then? Anyway, so price pulled back. There's a base here, I think, on the 15-minute or even on the hourly. But price never actually reached that point, and then we started to push up again. So first and foremost, we've got this most recent high swing on the gap that was filled that we're coming to test now as we speak. If this area is disrespected, meaning we break through, then we can come and retest it and then potentially push up. What we also have is we also have a base area over here where potentially if price were to come back down again, we can react off of it as well. So let's say hypothetically price rejects this high, comes back, we can then try and retest this high point from this base area. And this is on the 4 hourly. So meaning that this was the last time that this upward movement got, upward trend got tested thoroughly. So this was for at least 8 hours, we were struggling to push higher. Okay. So in this case, there is a potential for us to rebound off of this area before continuing higher. So first and foremost, we've got this 25,175 to 25,237 zone area that needs to be tested, which we're testing right now. So if I go down to the hourly, you'll see that this area, we had this domed effect. So price came up, we domed, and then we started push lower. So first and foremost, do we expect to see the same kind of motion here? Well, if history were to repeat itself, then yes, then we'll see this exact kind of reaction that we have there. That's if this area is a strong resistance point. Do we know if it's going to be a strong resistance point? No, we don't. What we do know is that there was a gap and that previously there were unmitigated uh, orders that got mitigated, meaning there were orders sitting here just above this gapped area that got filled, and then we started to sell off. But those orders were sitting here because there was a gap. All right. So a lot of people, a lot of industries and whatnot put in their sell points just above this area. or they tried to buy as well. So there's a lot of liquidity that was sitting here. So now that we are back at this area, we can either expect it to have the same reaction where more liquidity will be taken up, maybe a deeper push up higher, and then a sharp decline lower. But it's difficult to say based on the reaction that we're having right now. First and foremost, we need to break through. I think is explanatory. We need to break through, and then if price comes back, we need to reject off of this. So we need to tap into it and then start pushing higher yet again. However, like I said, alternatively, what can happen is we can have the same reaction that we had here on the left-hand side, a more of a domed reaction, slowed momentum. The upward momentum is halted. So what happens? Price kind of sits. Let me remove that tool. Price kind of sits like this a little bit and then eventually starts to push down. Or alternatively, we can have price just wick into it and then absolutely just start tanking off. So it's really up to you to determine whether or not you think that it's going to have this reaction or if it's going to break through. And what we can do from that is we can go down to the lower time frame to see how price reacted previously. Price reacted previously in the body candles, or the candle bodies not being all that large. There's more wicks above and below. It's not like this kind of movement over here that's nice and volumetric. It's very slowed. You're getting this arch reaction. All right. So what we need to do is when we are back at this area, we need to see whether or not we have volumetric candles like we have here, or are we going to have this kind of like slowed upward tick. Okay. So first and foremost, this area, and if that area is respected, then there is a potential for us to push lower. There is a low area all the way down on this base area over here. Let me just go and look on the 15-minute to see if that was the base area. Yes, so we do have on the 15-minute a base area that had a singular reaction, a secondary reaction, and then a attempt to break through, picking up some liquidity and then pushing up higher, and then retesting for a fourth time. So this to me is a strong area of support to try and push price higher. So if, hypothetically, this area up over here fails, and all of these 15-minute base areas that we have, so 15-minute base areas, there's one, here's another one. If these base areas get disrespected and order flow changes to bearish, lower highs, lower lows, then there is a potential to come and test all the way down here at, oh, come on, at 24,737, 24,690. So let's say 24,700 is a good testing point. That's if this fails. If it doesn't fail, we're just going to carry on pushing higher, which I think is probably what most people would like, is for it to push higher. Because recent test, strong reaction, we're not getting that strong reaction just yet, but first and foremost, we need to break above this area. So we need to break above there. So that's what I'm seeing on the DAX at the moment.
The DAX, the beautiful mighty DAX.
It reminds me of like the Mighty Ducks.
I was just, I think that's where he got it from. I'm pretty sure it's the Mighty Ducks thing. It depends. I'm sure Paul Brown was
from Canada.
I was gonna say, I think Paul Brown was British though, so maybe it wasn't the Mighty Ducks.
Maybe just really like the movie.
Or maybe. It would have been.
Everything in his life is ducks, ducks, ducks. And then it was just wordplay. I don't know. Maybe he goes out and feeds ducks, and he's got ducks as pets. And anyway,
dude, I'm actually thinking about buying ducks when I get back to the UK. Yeah.
Anyway, let's move on immediately from that onto your screen. Let's go through gold. Everybody's been asking for it. Let's go for it.
Gold. It's Vinny. Good morning, guys. Yo, what's good, Vinny? What are you guys trading? What y'all trading today? I am probably not going to be trading. Right, typical. Probably not going to be trading today after taking this whopper of a loss yesterday. This big, fat, juicy L. Yeah, a bit of a shame, but here's what it is. We take a loss. It actually wasn't that bad of a loss. Slightly more exposed than I wanted to be across all three positions. Ended up losing just over 1%, when in real terms, I wanted to be losing just under 1%. So, truth be told, for the sake of like $200-300, wasn't that bad. So, pretty okay with that loss. Gold Gold's been a bit funny at the moment. It's just flinging around a little bit.
Not
We see
haha
this,
funny, right?
yeah, not quite ha ha funny, more like screw you funny.
Funny,
Like
yeah.
why aren't you making an effort funny?
Mm.
We got this clear downwards pressure now. We're starting to push downwards in this bearish momentum. Now we swept under these lows. I'm not going to try and buy this right now just because I think it would be pointless, because we're within internal structure, and I'll explain that in just a little bit. So I'm just gonna get rid of these three trade ideas. You guys saw that, so I've noted it down in my journal, so I don't need it on my chart. So that's why I'm deleting it, just to make it a bit clearer for me. There we go. Got to try and make sure everything's nice and clean so I can have some fresh analysis. So we had these two equal lows here, post sweep of this low and this nice big rejection candle up here. And then we put in this nice little high, which we then continued to break above, pulled back, failed to break below this low, creating a higher low, which we then continued to break higher than this high, creating another higher high here. Now, this is currently where price is at right now. A bit of a consolidation. We can see that we swept these highs and tried to move higher and try to break and continue that momentum shift higher. However, we didn't. We didn't manage it. We actually ended up sweeping and not closing above, as you can clearly see right here, with the indication that potentially this could be a continuation to the downside. Now, if we get our highs up here, we didn't quite make it up to this level here, but what we did manage to do is make it up to this potential consolidation zone, or this supply zone, in a bearish momentum order flow state, as you can see. So what does this mean? We've got further consolidation zone, or a further area of interest just here, which is very nice. Now that we've got that area there, we've got a break and close underneath. We've got an ever so slightly gap here, which is not the prettiest. It's a bit of a weird one. It's a bit odd, but nonetheless, it's there. It may just be a data issue with Oanda. Not too sure, but I'm sure we can confirm that later on. But what we have got, and what we can confirm right now, is that we have got a break and close underneath this low on the 15-minute time frame. Now, if we drop down onto the 5-minute, then we can see why I'm not trading this today. Look at this price action. Here, in fact, actually, let's make it a bit clearer. Here isn't too bad. Here isn't too bad. It's this area here which looks absolutely awful, due to the fact that we've got these wicks to the downside, all this consolidation here, and then these indecisive candles here. That is telling me that price has zero idea where on earth it wants to go next. It can't tell whether it wants to be bearish, bullish. The buyers aren't in control. The sellers are just about in control, finding a lot of resistance from the buyers, however. So therefore, for me, we can see, let me just delete all this to neaten my price up. There we go. So at the moment, we can clearly see if we get back up onto the 15-minute time frame, we've got this high here, which is the current high or the most recent high. And then we've got this swing point down here. Oh, for fuck's sake. I hate it when I do that. It's so annoying. There we go.
Oh,
You
man.
just get so frustrated trying to draw.
Sometimes.
Anyway, so we've got this swing low point here. Now, if we look at internal structure, not microstructure, but internal structure, we have got this low and we have got a breaking continue underneath it. But this is the points that we're going to be looking at is this current high, this current low on the internal, and then we got this swing high and this swing low. That's going to help us determine where we want to be heading in a direction when it comes to trading the trend on gold. Now, preferably, due to the fact that we've got such heavy bearish momentum, and due to the fact that I got absolutely ripped apart by gold yesterday on some sells, then I kind of want to see what happens in this nice big zone here. If we can see something along the lines of this, maybe a bit of consolidation, especially on the 15-minute, if we can draw up some consolidation on the 15 and then see something like that, which would then be a consolidation on the 15, a nice break and close on the 15 and on the 5, a pullback into the supply zone, demand zone, consolidation zone, whatever the hell you want to call it, but the zone that I want to be trading from, and then a continuation lower in our overall higher time frame direction according to the order flow. That's what I want to be trading right now. That is what I want. Oh, come on. That's what I want to see.
So you're looking for sells?
Preferably.
Yeah, I agree with you on your analysis. I think when the Tokyo session was buying, we weren't creating this massively new upward bullish trend. What we do have, though, is it just came back into London session's high of yesterday, which is your top white line, which is also in line with the 200 EMA as well.
Yeah.
So I would have loved to have seen it continue from here now that London has started to participate again. So more market participations. Remember that China still has a bank holiday today, so the biggest like buyers of your gold, or the most interest in terms of buyers for gold, is Australia, India, Russia, China. China, I think, is the biggest, most interest. They're the most interested in it, and they're not there. So this upward tick that you're having is not volumetric, which makes me feel like the follow through is stunted. But once again, it didn't even break above the previous London session high. So I'm feeling like there is a potential for us to be a little bit sideways today, because we're not taking previous day highs, we're not taking previous day lows either. And I would have loved to have seen both, kind of like one tested and then continue, or one tested and rejected. And we're just not seeing that at the moment. What we're seeing is kind of like stuck in the middle.
Yeah, exactly that.
Here's a question from Vinay, who's asking, where is the link of the Fivers Discord? And I see MGN has already replied. If you have bought an account, you can sign into the Fivers website and click on the Discord icon. So the Fivers website being the hub. You can click on the Discord icon on the top left of the website, right above the My Programs segment. That's only if you have purchased a Fivers account at any point in time. If you have won an account from a giveaway, you will only have access to the hub for that account and you won't get access to the Discord. The Discord is an exclusive feature only for those who have purchased an account. It is well worth it, in my opinion, for everybody. Everybody should get themselves, even if it's the cheapest account, just to get into the Discord, because there's a lot of calls that we have Mondays through to Fridays. Mondays, Tuesdays, and Wednesdays we have Victor, the master trader, who has a 2-hour segment right after the stream where he goes through basically extending the stream itself, but via the Discord. And then on Thursdays and Fridays, we've got Richard Wells, who does his performance coach and like more the psychology side of trading streams, which is very, very, very informative. And then on Fridays, we also have LJ and Akram that does their Friday, the weekly sign-off, you can basically say, prepping for the Friday afternoon, you know, what we can expect and so on. It's really worth it. And on top of that, you also have special announcements that gets made in the Discord. So Discord exclusive announcements, let's rather say. So I would seriously consider getting an account, even if it's the cheapest one, just to get access to the Discord. It's well worth it, in my opinion.
Yeah, 100%. I think, yeah, if you're not already in it, get yourself in it.
Yeah, like this. Actually, I haven't bought any account, so that kind of like just explains exactly there why you won't get access to the Discord. They're probably giving some free accounts. Go to my orders, then click on coupon. You will see there, I'm a new user. I'm not able to see. So if you have coupons, that is discounts that you can use. It's hub credits. And those credits are worth, one credit is worth $1 in terms of discount. So if you have 10 hub credits, that is basically $10 off on any account that you purchase. But you will only gain access to the Discord if you've purchased an account, straight up.
Yeah. It is definitely worth it if you haven't already gone in it.
Yeah, no, agreed. How about longs on gold on the 5 minute? What do you think, Will? 5 minute gold price? Question mark?
Why? Where from? The only time I'd see a potential long from gold is down here. Dude, I don't know. I can't see a reason to be long in gold. Divi, please let me know where. Try and persuade me to long gold. Try and let me see if you can sway me to be a long participant on gold. Because right now, dude, I don't know. I can't see any reason for a long on gold right now. I mean, if we consolidate here and we hold here and then we break and close above, if we can look something a little bit, let me just move this out of the way. If we can look something along the lines of this, then I can see a long on gold around maybe this level here. No, I can't see it. Sorry, man. I want to try and give you a good reason to be long in here, but I can't see it. Like I said, unless we can get consolidation, a sweep underneath, and then so like almost like a fake out, and then a continuation, pullback, failure to create further lows, break and close above, creating a higher high, and a breakout consolidation, pullback, then continuation. That's when I'd start looking for longs. But right now, the only thing I can see is short opportunities.
Yeah, I'm inclined to agree with you. I think there is a potential at some point for us to try and retake the highs of yesterday. But
Look, yeah, 100%. I think there's definitely a chance that we can buy on gold, but with the price as is, like the price, looking at what the price is doing right this second, there's an impossibility to be buying gold right now, in my opinion, according to my strategy, not according to gold trading, because gold could just rally up now and hit the moon for no good reason. But according to my strategy, there's an impossibility that I'd hit TP if I was buying gold.
On the 5 minute, yeah, this makes sense. What Martin is saying here, maybe he saw price touch the 200 EMA on the 5 minute. That would make sense if you would then consider that to be a
But it
potential.
hasn't.
What do you mean it hasn't?
This is the 200 EMA on gold, and it's on the 5 minute. It's nowhere near the 200 EMA.
Are you
Unless
sure?
you're on about. Yeah, this is the 200 EMA here. This is the 200 EMA, and I'm on the 5 minute chart. So 200 EMA, current price. Unless you're on about the consolidation, breakout, and close above this 200 EMA, and then looking at longs, that's the only time we touch the 200 EMA. Yeah, it's we got miles. We got loads of room before we hit that. Are you sure that's the 200 EMA?
Red one, EMA 4, 200.
Am I sure that I've got a 200? Yeah, I've got.
Okay,
I got
hold
an
on.
estimate. I got a simple moving average, not an exponential moving average.
So if you go on to exponential, what does it look like then?
This is the exponential. Oh, sorry. If I go on to the exponential, I'd have to get an exponential up. EMA.
You can just take the moving average exponential. There we go. Yeah.
Yeah. Fair. Let me make it pink so I know it's not mine. Okay, fair. Yeah, it's yeah.
So
Okay.
it touched the EMA.
Well, it's as damn close to as you can get to touching the EMA. It's not quite touched it, but it's.
And then he's also saying the support at 5 minute that goes from 4909 to 4913, which is the fair value gap at 5 minutes. So 4909.
49. Okay, here. Yeah, I got you.
4913.
Yeah, you got this imbalance zone here, or this fair value gap zone just here. But again, we haven't touched it. Sorry, dude. I can't see it. I mean, look, as long as it's in your plan, then do buy it 100% and risk what you need to risk according to your plan. But
Yeah.
we haven't even hit 200 EMA according to my OAN chart. We've come close, but we haven't touched it, and we
We've just
haven't moved.
ricocheted.
Yeah, literally, and we haven't tapped into this fair value gap or imbalance on the 5 minute either. However, if we did come down and tap into the fair value gap imbalance, and that would also then be a rejection of this EMA as well, and then it would move up. Then yeah, that I suppose that would be quite nice. However, you've got a really nice reaction candle. I will be honest. That 5 minute candle after that 5 minute wick candle is a beautiful candlestick characteristic reaction. I'll be dead honest with you. That's a very very nice price action move. But it's just not my liking. It's not to my liking. It's not my trade. I don't like it. However, though, you're doing a damn good job of, persuading and sort of fighting a case for the 5 minute buy, 5 minute buy long idea on gold. I will be honest with you. That's now it's a W. It could be real. Huh? As in you've already hit DP? If so, dude, that's awesome.
Yeah, well, I mean, if it depends on where he's where he's aiming for, it
That's
could be a
super
very, very
tight.
short scalp, you know?
Yeah, that's super tight, my man. Can you turn on subtitles? No, I
Unfortunately,
don't think so.
the subtitles will only be available after the video is completed.
There you go. I was going to say I didn't think we could, but
Mm,
I did. 50% win rate, 1-to-2 ratio is winning, so the rest is gambling.
I mean, is that your opinion or is that based on fact?
Fair. I have a minus negative. I have a negative risk reward ratio that determines otherwise. I also have a 1-to-1 risk reward ratio that determines otherwise, and I also have a 1-to-2 risk reward ratio, which does actually back your idea up. So I mean, it's all maths, my friend. It's all probabilities, I suppose. Tekka 2129 saying, William, you on Hong Kong Island or the other side? I am on the island. I am indeed on the island line, my friend. Martinai, Rich, do you have a buy on NQ?
Yes, I do. But
Ooh la la.
it is incredibly slowed at the moment. I got in on this candle over here. Let me just.
Yeah, there's there's hella consolidation there, isn't there? That's nice though. I mean, look, it is breaking higher. It's just
It's
it is slow
it's
though.
very slowed.
It
This
is slow.
is incredibly slowed. So yeah, I do have a buy on. Um, I also have a buy on JPY as well,
Juicy. Nice
which
man. Yeah, sure.
right now is not going all that well.
Fair. Okay.
I have it. And I have it just underneath there for a 1-to-1. And right now it's a bit slowed as well. The reason why I decided to take this one was we had this base area over here, and then we had the highs that was already swept over here. Then price came back down into this area of interest that I had, this base area over here. Price then started to push up higher. We had a little bit of a deeper pullback. And I thought, you know what, if we close another bullish candle here, I will enter. And yeah, so I did enter. Entered it a little bit late. But yeah, it is currently running a little bit in drawdown as we speak. So yeah, and then the NASDAQ one is not looking too bad, very slow.
Yeah. Yes, indeed. Like you followed your plan, you executed accordingly, and hopefully it plays out for you. If it doesn't, then it's just going to be another one into the journal, I suppose.
Disciplined trader is saying, "Can I trade GU now? It's time. It's time to volatile." So we had news, and this was the news candle. This nice big wiki one. We started to push a little bit higher again, but we're getting a little bit of resistance now, trying to push a little bit lower. So let me just switch off the 200 EMA. I don't like the 200 EMA. We're getting a little bit of resistance now, and if you go and look where we're reacting in the middle of nowhere. This candle here is not reacting on anything. If I go over to the 15-minute, you can say, yeah, but we have a fair value gap over there, and then that was the reaction that we had. Yeah, but why didn't we react off of this fair value gap? So To me, it's reacting out of nowhere at the moment. The news itself, I don't think was all that crazy. I mean, it was CPI and it was as expected. So the market is going to go where it wants to go now. There's no like real driving force today, I think, to push price all that much. We do have an area over here that needs to be broken, so maybe we can come and rebound off of it on the 15-minute and then potentially push higher. But it's really difficult to say when you have like these big wicks whether or not this was, well, it was impulsive, but like it's very difficult to say whether or not the price action that you had towards the left-hand side, which was a little bit more consolidative coming out of the day, whether or not this is a break, retest, and continuation, or if it's just a pick up liquidity and push lower. I think it's more of a break and retest, because on the 15-minute, you will see that we have a base area that was tested, and now we're breaking above it. We've broken and closed above it. Now it's going to come a little bit lower to pick up some orders to try and push it up higher. So potentially come to this area up over here, which was the last point before we started pushing volumetrically down beyond this base area on the left. So that's what I'm thinking. So this base area was reacted upon once already over here. This was with rollover. When we had an opportunity to push lower, we just didn't. So we basically came back down to this base area over here, and we just tapped into it. So just actually on the bearish candle we just missed it, but maybe on the 5-minute we caught it. No, even on the 5-minute we just missed it. So we just missed this base area and then we started to push up. So I want to see whether or not we can continue pushing higher. Maybe potentially come back down to this base area over here before continuing pushing higher. Potentially.
Mm-hmm. Yeah. Yeah, I like it. It's a shame about that wick to the left. If we can break and close above the wick, then I think buys on GU would be lovely. EU, it's the opposite to EU though, which is worrying me a little bit. Oh, nice man, nice little nice move on NAS. Is that TP or is that just off TP yet?
No, I'm having a look now. It's just off TP.
Okay, nice. Yeah, really, really nice though, man.
It's 870 and it's not there just yet. It's on 863 at the moment.
Okay, fair. Yeah, no, that looks really awesome. Tekka2129 saying, love the posters. Dude, thank you. Mate, I love them, man. They're sick. Man, I can't wait to take them home and actually hang them up in my proper office. They were so cheap, but dude, they're really nice. I really like them. Gom BG saying, do you recommend Hong Kong, William? Is it a good place to live, trade, taxes, etc.? Well, I can give you my personal answer, but I'm not an accountant, so don't take this into consideration. But Hong Kong is tax-free up to a certain amount, and then past, I think it's about 50,000 a year. And then once you pass 50,000, I think it's about 8% or 9% tax. After that, up to like either a couple of 100,000 or 2 million. It's again, Google it. Don't take my word for it. I'm not an accountant. However, yes, it is tax-free up to a certain amount. But once you pass that certain amount, bear in mind, yes, there will be taxes, but it's significantly cheaper than most other places. So technically, it is a tax haven. However, it is very expensive to live here. The accommodation is incredibly expensive. I could have a 3-bedroom detached house in the UK for what I'm paying for this very small cardboard box sized apartment or shoebox sized apartment. So take that into consideration. Pros and cons to being a tax haven. Everything is very expensive. Cost of living is very cheap, however. You can really live it up super nice. 5 people can eat out for a price of like £100-200 for the whole meal. Or if you're going out, you and your friend or you and your partner, then it can cost like 10, 20, 30 quid. And that'll be a really nice meal as well. Or you can go out and eat for £2. I think I bought myself some lunch today. It filled me up and I probably won't eat tonight. That cost me about £3.50. So yeah, dude, it's really nice. It's a fantastic place. It's a gorgeous country, super hot weather, really really nice people. It is built up, so it's a city. It's a really built up place. Super metropolitan, really really pristine, really nice. Supercars everywhere, lots of money. But at the same time, if you do want to go into that countryside, you are literally a stone's throw away from like mountain sort of hikes. You're also like beaches, stuff like that. I spent the day on the beach a couple of days ago in the scorching 30-degree heat, and then went straight back into the city about like 20 minutes later. So it is super super nice. However, I'm a country boy. I'm a farm guy. So living here has made me appreciate a little bit more what I've got back in the UK. So I will be actually making a lot of changes to my life when I go back to the UK, because due to the inspiration that Hong Kong has given me. So yeah, it's a really really nice place to live. But if you are moving here for the taxes, just bear in mind everything. A lot of everything else is very expensive.
Nice. I have just hit TP on that
Beautiful, well done,
NASDAQ
man.
trade. The yen one is still slow. Slow as all heck. Anyway, here's a question from. Sorry.
Oh,
You
sorry,
can.
right. I was going to say, gone BG, come Vietnam, tax free if trading with the fibers, cheap living costs. Now that is also very true. I've been recommended Vietnam by a lot of people. Vietnam is I'm guessing you are Vietnamese, so you know I'm probably preaching to the choir here. But Vietnam looks like a beautiful country. Definitely, definitely going to be on my list to go to. I really want to go to Vietnam, but I probably won't be living there.
Dude, go and visit at least.
100%. No, it's definitely on the cards to go visit very soon as well.
Justin is asking, how do you define these bases? All right, let me explain. Just very, very simply. It is a very straightforward way of looking at the market flow. Okay? So bases are something that are created in trends. Okay, so you you can call it whatever you want to. You can name it whatever you want to. The definition of it really doesn't matter. But what it basically is once you've established a new trend. So let's look at gold. Let's start anywhere. Let's look at this area over here. All right. Let's just look at this specific section. All right. A base is once we've established a new trend. Here we have a double high, all right? And then we have a low swing over here that has pretty much been respected. Okay. But we do have this downward moving channel. All right. So if we just take the high, that's all the way up over here, and then we notice, oh, we have a lower high, and technically we do have a lower low over here. All right. When we compare it to this low that we had. So this is a high. This is the low. This is a lower high, and this is a lower low. That is if we're just looking at this price action over here in a nutshell, just at this section. All right. Now what you'll notice is that eventually the lower highs become more prevalent. Lower highs. This one here is not a lower low, so it doesn't count. However, we have yet again another lower high over here, and then eventually we break lower. There's the break lower high, or lower low, sorry. Okay, so when you start having these reinitiated trends, so in this case, we are clearly in a downtrend because we're making lower lows and lower highs. Makes sense, all right. So if you have lower lows and lower highs, now you need to kind of like look at, okay, what is the driving force behind this? So generally what you have is, and I look at it like this, you have an arm wrestle between bulls and bears. The bulls are trying to overwhelm the bears and they're trying to push the price higher. At the same time, the bears are trying to push back at the bulls to prevent them from pushing the price higher and trying to push the price lower. So you have this constant back and forth. So what you have is you have segments like this, where there is back and forth. No higher highs, no higher lows. You can think of it as just consolidation. So consolidation is the bears and the bulls that are in a stalemate. So they're currently, locked in for this arm wrestle, and they're just kind of like stuck here in the middle. One pushes a little bit, the other one pushes back, and so on and so forth. All right. Eventually, one of them overwhelms the other, and that is where you have these volumetric breakdowns, where price just tanks like this. And generally, those movements create new lows. So this was the old low. This is now the new low. So in this case, the back and forth that the bulls and the bears had with each other during this area, the bulls lost. It also makes sense because we are still in a downward trend. We've established a new downward trend. So what happens is this area over here where you have that back and forth, that stalemate, and then the recontinuation to push price lower, that is the base. That is the point at which the bulls got overwhelmed. That's how I view the market. That's how I see my bases. So how to draw one up is you go and look through, it doesn't matter which time frame. You can start at the 4 hour and you can try and find an area where within a trend, they lost power. So in this case, if we just look at gold over here, here you have the highs. Here's the initiation of the new trend. Okay. We had an opportunity to try and push price up over here. We failed, and we continued to push down volumetrically. So if I just remove that one. This candle over here, this bullish candle in a new downward trend is your base. So the idea is that if price were to, at some point, make its way back towards it, you would have the same kind of reaction as you did previously, meaning that if it reaches this point, obviously this was an area of contention. You expect there to be more contention. So what you expect to see is you either see price slow down in this area and then start pushing lower, or you see a price come into it and then volumetrically react out of it, or you see this area be disrespected and pushed up, but not before you have some sort of contention. So this to me is just an area of contention, and I call it a base because you have reactions off of bases. Okay, so that is a base. And then as you go down, you find more. Here's another one. Again, this is a drop. We're making a base. That is the area where we get contention. And then we have a continuation of a drop. So this whole one over here is once again a base as well. And then you see if price comes back to it, there's some sort of reaction to try and push it lower. So this is a base. And that is how I define bases. So this is a 4-hourly one. If you go down to the hourly, you might, within these bases, find that, okay, it doesn't really feel like a base. Like this one up over here doesn't really feel like a base because it had multiple attempts to try and break price lower and also multiple attempts to try and break price higher. So it's more of a contention point. So if I go and I can draw a base here on that one, there's a base within this base. And then these two areas up over here are not bases because this technically now is not entirely a continuation of the downward trend that was established up over here. This is more of a base than these ones are because there's multiple contention points on this one over here where there's only a singular contention point up over there. And then your reaction out of the area must be volumetric. It must be strong. So in this case, this whole area might be a base, but coming down here, you have a much stronger reaction. There's less bull, bear, bull, bear, bull, bear, and it's more bear, two bull, two bear, and so on and so forth. Where up over here, you have a very strong candle, a bearish candle, two bullish candles, a small indecision candle, a bearish candle, then a bullish candle, then a bearish candle, then a bullish candle. You understand the point. There's too much contention. It's almost as if it doesn't really know where it wants to go. So you need the right amount of contention, and then you need a very strong, momentous movement out of that area for it to classify as a base. So I look at it in two ways. You get drop, base, drop, or you get rally, base, rallies. And a rally is literally price going higher. An attempt is made to try and break this new established trend. That's the base, and then a continuation of the trend, which is the next rally. And then the inverse for sells is drop, base, drop. The price is dropping lower. It's trying to break this new established trend, pushing price lower. It fails. It continues lower. That's the base, and then the follow-up drop. So that's what you have here. You have price pushing lower. You have the attempt to push price higher. Price fails. It continues lower. And then when price does come back to this area, because now it's a higher contention point, I want to see how it reacts. In this case, we came into it. We are pushing price into it. It slows down, and then it eventually starts pushing lower. So I want to see reactions off of this area. And just to confirm that it is a much stronger area, if I then mark this as a order block as well, you'll notice that it reacts off of the order blocks as well within it. So it's a base area previously created, price comes back to it, slows down, pushes away from it volumetrically and strongly, comes back to retest it, and then carries on going lower. So you can think of this as an order block as well. Not the same definition as what Victor would use for an order block, but the idea is just that price tried to push higher, it plateaued within a base area, it started to push lower, it re-attempted to push price higher, it failed, and then it volumetrically pushed lower. And that's how I see the market, and that's how I mark up my basis. As simple and straightforward as I can put it, that's how I've viewed the market.
That was super simple and straightforward as well, that's the luxury about it. It doesn't have to be complicated. So we see in this industry way too many people complicating trading. You're literally looking at two profitable traders with more severely profitable traders coming on very shortly. All of them have very simple strategies. It may seem complex and it may seem complicated, especially if you're new to the industry, or especially if you're starting out. But it really isn't that complicated. Once you start learning the lingo, and a lot of us throw slang about just because we're lazy. We may say OBs, we may say FVGs, we may say imbalance. Well, imbalance isn't, just there may be like some short-term terminology that we use, but again, they're just very simple, basic points that when you actually start looking at the flow of what we're looking at, and why I say the flow of what we're looking at is because if I just bring my chart up real quick, I'll just draw this out. I'll just draw this out for you. When we're talking about the flow, let me just get this out. The market's got like this, the markets are always moving in some way, shape or form. Yeah. So we're always going to be able to look at different areas, whether it's supply zones, whether it's demand zones, whether it's imbalances, fair value gaps, whether it's bases, drops, rallies. It doesn't matter what liquidity points, it doesn't matter what you're looking at. But what we do see is the market flow, and the market will always flow in a direction, and the market will always flow and try and sweep as best as possible. Now, when it comes to identifying how we're going to see the markets, whether we're looking at, like I said, all these different entry criteria, entry points, what we're basically predominantly looking for is trend. And that is the flow of the market. If you think about it like a river doesn't go in a straight line. Whether you like it or not, if you get an aerial footage of a river, 99% of the time, you'll not see a river look like that. It'll meander. And that is where the word meander comes from, is the way that the river flows, and it's the bend. It meanders. And it's the same with price. Price will always meander. Price will always flow in a direction, and that is how we find entry points, is by finding the flow of the market. Same goes when it comes to surfing. You want to try and find the flow of the wave. You want to try and find the flow of the sea. You want to try and find, obviously, the direction that the C is going in. And I know that sounds stupid, but the C comes out as well as going in. You want to find it when it's most strong pushing in, and then you want to find just before it breaks, you want to find the perfect point to get onto your surfboard, to get onto that wave. Same goes with the markets. Everyone is looking for something very similar, and that is the best time to get in on the optimal flow of the markets. And when you start understanding that, where we get in precisely is actually always very similar no matter what strategy that you're using, due to the fact that we are all looking for the same thing. Oh, sweet, sweet revenge. Let's see how long it's taken. Do you reckon you'll notice?
Yeah.
Yeah,
I coughed. I was going to cough. I muted myself, and then, yeah. Anyway, so bases in real time. This to me now has become a new base because, oh, and this is another important thing I forgot to mention earlier. It needs to react off of an established area. So what I'm trying to say is that if, like this point over here, we have yesterday's London high, and then we've already struggled to break out of that area, and it seems as though we're trying to push lower, and we're creating new structure. So that's the high. That was the most recent low. Now we're creating a lower high, and the idea is, are we going to create a lower... we created a lower low, are we going to create a lower high? So the idea around that is that you have an established area. An established area can be a demand zone, supply zone, doesn't really matter. An area of support, an area of resistance, an area where we've had consolidation, breakout, retest, continuation. Like, you want to see a reaction off of an area that has had some establishment. It has established itself as an area of interest. So in this case, to me, the Tokyo high is an area of interest because we've already had this area be reacted from previously. So now we've established a new downward, or at least we're trying to establish a new downward trend. So this would be considered a base. This is a bearish structure presenting with a bullish attempt to try and break this downward structure. And then it seems as though there's a continuation already. So generally, my strategy would have said that I needed to get in on a sell on this candle over here, confirming the continuation lower, and then I'll have some sort of set stop loss to take profit, 1 to 1s, 1 to 1.5s, 1 to 2s, depending on how my back-tested data indicated it should per asset. So in this case, you had a bullish base, once again, rally, bases, it rallies again. Once again, also another base area over here, much larger version, but it's all confined within this area. So to me, this area is an area of contention as well. So it's an established area as well. So I would not necessarily want to enter a trade here because there's too many confluences that are stacking. But they're not confluences that's in agreement with each other. It's confluences that is pointing against each other. So you have a bearish base, then a bullish base, then another bearish base. So there's too many confluences now that make it a little confusing for myself to try and get into a trade here. But in general, the way that I look at it is I look at the most recent reaction. So this one here was a bullish base. We broke through that bullish base. We wicked underneath it. It seemed as though we wanted to continue lower based on this information. We are above the 50 EMA, and then if you have a look at the 200 EMA, we just reacted off of it here at the top. So to me, it does seem as though this might be a stronger potential to push lower. So this base over here, to me, doesn't matter anymore. This is the base that I'm going to be looking at now to see whether or not we're going to have a reaction off of it. If it doesn't push lower and come back down to this base down here, as you can see, price came all the way down. It established a new area down here. It reacted off of that area volumetrically, creating a new upward structure with higher highs, higher lows, higher highs, that kind of like thing. Shorter time frame. So this to me is now the last area where price attempted to push lower. So if we are to come back down, this is going to be my first area of resistance. Well, in this case, support, to try and push price lower, to try and get back to this break point down here, which is where we failed to break lower. And if we do break through it, then that is the breaking point, meaning that there's a much stronger downward push than there was a bullish push off of this area if this area gets disrespected. I hope all of this makes sense.
Yes, that makes perfect sense, my friend.
Yarp.
Yarp. Narp. Div is saying, can we go short in gold considering a fake W at the 5 minute? Dude, you have persisted this question. We are going to get to it. Do not stress, my friend, but give us time. 5 minute on gold. You say that you're seeing a W and a fake W. Bro, my name begins with a W and I'm not seeing a W anywhere.
I see a 15-minute M, but I don't see a W.
Yeah, is this you've seen the M here? Is that where you're seeing the M?
Yeah.
But yeah, I'm not seeing
That's
a
on the 15.
W.
Yeah, I'm not seeing a an M.
What I am seeing is exactly what I plotted out, and that's the initial stage of the beginning of a consolidation on the 15-minute time frame, like I drew up earlier, because I'm an absolute legend. I'm kidding, guys. That's a joke.
Dude, you are a legend. It was just a shameful self plug that you did there. I'm a legend.
I am a legend. But yeah, so that's all I'm seeing right now. Yes, it was a very nice reaction. I will admit, you had a beautiful bull candle after this nice bear candle as well. So that two candle push to the bull side was really nice, but then it just got sort of invalidated, or not necessarily invalidated, but we had this move which wasn't so nice, and then it was followed by just indecision. So look, you know my views on gold. I think there's a short opportunity to come through. When, I'm not sure. Now, no. Buys, maybe. Now, no. So buys, if anything's going to come, I think it's going to be around this area here. But I don't know, dude. I don't know. Honestly, could you short gold on the 5 minute? Yeah, possibly. I can't see why not. But just be careful, man. Trade your strategy and your strategy only. My strategy says, well, wait for consolidation, wait for a breakout and a potential retest. Certainly wait for a break and close below the consolidation that's created on the 15 minute. And then hopefully there'll be some validation coming into some short price action on gold. But however, that being said, it is late in the evening for me. So it's 6 p.m. In the evening now, and it is Chinese New Year. So I am going out to celebrate Chinese New Year tonight. So for me, this is what I want to see, but I won't be trading it due to the fact that I'm going to be spending time with family because, guys, that is why I'm a trader, is so I can have more time to spend with family and friends and have more free time on my hand. So if I was to sit here watching charts, watching gold, and trying my hardest to enter a trade that may not be necessarily valid just yet, instead of going out and spending time with family, then it would be completely counterproductive. So honestly, yesterday was a bit of a crappy day for me. Took a bit of a loss, which is just one of those things. Today is also a bit of a crappy day because I didn't get an opportunity to mitigate those losses and make some money back. However, again, that is just part of the game of trading. So for me, my trading day is officially over. I'm done for the day. Hopefully tomorrow may bring some better opportunities. If you are going to be trading gold today, based on my analysis only, not anyone else's, so please go do your own analysis, I would be preferring shorts at the moment.
Cool.
Hopefully that answers your question, because that you asked it a lot. So Divya, I hope that did answer your question, man.
Yeah, so this from Justin saying, so basically keep the strategy simple and focus on timing. That is
100%.
your job as a trader, is to try and simplify this chaos that is in front of you. It's all measured chaos, let's put it like this. Everything that happens in the market happens with reason, and sometimes
Yeah,
we don't know that
totally.
reason, so we need to kind of simplify it as much as we can to try and find our space within the market as well.
100%. Yeah.
Technically, we're not the driving force, the retail traders. We're just the reactants. So we're reacting to the way that the market is moving and so on. So timing is crucial, but that timing means nothing if your strategy is all over the place. So simplify as much as you can, solidify a idea, a theory that you have, test that theory, see if it holds water, see if there's merit to you following this idea, and then implement. And then when you implement it,
100%.
make it as simple as you can so that it's easy for you to follow. And not only that, so that it's repeatable. So that you don't today say, I'm going to use the 200 EMA as a confluence, but tomorrow's trade you say, no, I'm not using the 200 EMA as a confluence. Be consistent.
Yeah, 100%. And the only time you cannot be consistent with that is when you've proved it doesn't work. But you're going to have to be consistent to show it doesn't work. So it's almost counterproductive. You've got to be consistent, showing consistency, which is ironic. Where's the astrology guy?
All right, what's up, guys? Hello.
What's up,
Yo,
Jon?
Jonathan,
How's it
what's good, bro?
Good, good, good. How's it going?
Good on
mate.
you.
Yeah, too shabby.
Yeah, great. All right, 100K. That's amazing, guys. Congratulations to everyone. It
Congratulations.
very nice, very nice. We took this channel from 25,000 all the way up to 100,000 in how long was it? One and a half year. I think we went into like serious mode with the whole trading room here about 1 year ago. So that's amazing. The office are probably gonna get one of those cool silver
Silver play
thing
buttons.
to
Yeah.
to hang on the wall. So yeah, congratulations to everyone. That's it's amazing. It's amazing feat, William. It's a feat.
Yes.
It's
If
something where definitely.
Not this again.
Let's not go down that route again.
Yeah.
Let's not.
Well, let's just say he's from Wales, so
What's
there-
that even mean?
your language has a lot of L's, and sometimes there's a little bit of confusion. Like
That's
the
true.
translation
That's true.
from Welsh into English might not always,
True.
be so clear.
Right.
Yeah, let's yeah, that's a great excuse.
All right. Any trading happening today? You guys been trading anything?
No, nothing today.
I had a NASDAQ buy, which had already taken profit, and then I'm currently sitting in a USD JPY buy, but it is dwindling. It's just testing my patience in terms of just sitting around break even.
Right. Right. I am just getting ready here. Oh, wow. Have you seen the UK 100? That's insane.
No, I haven't. What,
Wow.
the UK 100?
The UK 100, yeah. So if you
crap.
can switch to my screen, we might take a look at that one. Insane insane volatility here. We can look at the can start by looking at the daily here.
Let's
So
first get
obviously, let's let me just adjust some. For some reason, it's lagging a little bit here. So bear with me here. But let me organize my charts here.
That is quite the push.
Yeah, it's quite amazing. Let me just organize the chart here, and we can take a look at what I am looking at. So first, on the daily, we do see just making some observations here Looking at the overall trend, we can see accelerating trend lines. With trend lines, you have to redraw them quite often because the trend is changing, and we can see here on the UK 100 that the trend is rapidly increasing in momentum. We had the UK CPI coming out this morning. We had the headline CPI dropping from 3.4 to 3, and that was in line with the forecast. But then we had a core CPI, I think a little bit higher than expected. We had core goods slowed, I think slower than expected, and services inflation was the important one, where we dropped from 4.5 to 4.4. And I think the expected and forecasted was that it's gonna drop lower, so that was higher than expected. That news came out 8 this morning, so that was around this time right here. So right here, the CPI news came out, I believe, and then we've had quite a strong push up this morning. So one thing I'm watching here on the daily is, first of all, we got a bearish divergence here on the daily order side, but that's, you kind of have to take that into context, right? We have to oh, the man, the myth, the legend. What's up, LJ? How's it going?
How we doing? Doing all right. Doing all right.
Doing good.
A little bit ill today, but I'm chugging on.
Yeah, you're the illest.
I partied way too hard last night with the 10-year anniversary event.
Yeah, I was gonna say, was it proper?
He watched the live stream. He got so pumped up. He had to just go out alone to the bar and just get
Dude,
wasted.
funnily enough, I did only get to bed literally, I think 5 hours ago from yesterday. So like 3 p.m. the next day, my time. But that was just because I was up working, and then my partner she's gone off to Cairns today for like a work thing. So I was hanging out with her, getting some stuff done, and then got some sleep. I think we both seem to be sick today. So I ordered Uber Eats off some like dodgy late night ghost kitchen thing. It looked right.
Oh no!
I don't think it was very good. So,
Oh dear.
Yesterday we had Fat People Day here in Sweden. We ate a lot of called semla. It's called Fat Day. I think it's called Pancake Day in the UK.
Oh, right.
It's kind of, in Sweden we call it Fatty Day. Actually, no, it's called Fat Tuesday, but nobody knows it's called Fat Tuesday, so it's just Fatty Day. It's Fat Day, which then people think it's a day for fat people, which is not. It's not. But I do eat a lot of things that it's like a bun, and then it's like a lot of cream and stuff within it, and then you just eat a bunch.
That sounds pretty good.
Sounds awesome.
We have my partner earlier before that did actually go to a thing because with that I was like, I've never heard about this before, but we've got this 24-hour pancake place in the city, and then they were doing like half price pancakes for that. So, but yeah, I've never heard of that before until yesterday.
What, Pancake Day?
In Poland, they have it. They had it last week in Poland. Yeah, but you know what? I think that's rather unprofessional of you, LJ, to call it like that.
Yeah.
What's it actually called?
Fat Tuesday in Sweden, and then in the UK it's called Pancake Day.
Yeah, we don't call it fat because we we just call it another day.
Guys,
Dirk's just sitting there like, what the hell are these guys talking about?
How many pancakes did you eat, Dirk?
Today none, but I'm hungry for pancakes now. I should.
I do like
pancakes. My wife always makes pancakes on the weekend because she's like very much into baking. So she has like jars of sourdough everywhere around the house.
Oh, nice.
The discard is always used on the weekend then for making pancake dough, which I enjoy very much. Filled with ham and cheese, and I'm more of a salty guy. And
Wait. Did you say pancake with ham and cheese?
Yes.
Not just an omelette.
Get
like
out of
savory.
here. What is this? What is this?
It's nice. You have like these little round pancakes, and you do like one half of them, then you put a bit cheese and ham in there, and then you put the other half on top.
They're
And
like mini ones.
Any way we can
like
kick Dirk.
like mini ones. Like I don't know if
What
you've
are they
ever
called?
been to Mr. Bean in Southeast Asia. It's like they make like these little pancakes. And
Oh,
Are
we
they
used
called
to
like
do
Wait.
potatoes or something?
Pancakes is you're supposed to have syrup and jam and cream on it, not
Yeah, no,
because
yeah, or
of course
sugar.
you have because
lemon.
the only thing that grows there and is sweet is cranberries, probably,
Yeah,
Well,
cranberries.
I thought. Well,
Or are you filling them with these weird, smelly fish things from the can that you love so much?
yeah, we're not filling the
Strumming,
pancake.
yeah.
with fish. We're not like that's not a thing. We don't do
Anyway,
that.
on that fantastic bombshell of pancake discussions, guys, I'm gonna love you and leave you, and I shall see you all tomorrow. Guys, thank you so much for joining.
Are you going to Lunar New Year stuff? You look very snazzy.
Thank you.
Yeah, nice.
blazer,
I
bro.
did find some stuff here, possibly on Saturday. I might go to. So
Oh,
looks cool.
nice. Yeah, awesome stuff.
But you
Yeah,
have to
I-
wear
what you're
red,
thinking,
actually, and not
Yeah,
beige.
yeah. So again,
You have to wear red and not beige.
no, it's the year of the fire horse, and if you wear red, it doesn't complement it burns out the bad luck. I shouldn't be wearing black, however, that is bad. I shouldn't be wearing black, but you should wear
good and
or
black.
neutral colors because it neutrals out the fire horse. So
You know what you should do, William? You should have a your suit should be in the pattern of the British flag and a hat as well, made out of that looks like a pancake. And
how
then you
sick
would
would
go
that
there,
be?
and you would go there, and you would hand out pancakes to celebrate Pancake Day that was yesterday. But do it the British way. That's what I recommend.
The British way. Everyone's going around, wishing
You gotta
everyone good
take
luck.
the culture
giving
where you
life.
go.
Yeah,
And
yeah.
shit, throwing pancakes at people.
And that's the British way. Force it on everybody.
Exactly.
Yeah. we gave Hong Kong back to China
Yeah,
20 years ago. Well, we're taking it back. Here's pancakes.
Yeah, Will's taking back Hong Kong again. Go on.
Yeah. On behalf of Britain, Hong Kong's ours again.
Yeah.
24 hours later, like Will's just been deported. Like
I was gonna say, I'm live streaming from
Deported out of the
like
country.
Hong Kong prison cell, pre-deportation.
All right. With
man.
that being said, done and dusted, we'll get out of here, mate.
Yeah, thank you very much,
Yeah.
guys. I
Right,
will
take care.
see you all tomorrow. Gong hei fat choi to all of those celebrating, and cool. Peace out, people.
Take care,
All right,
mate.
take care.
All right.
Peace,
I'm also
man.
going to hop out, guys. You three enjoy this moment.
Yeah.
We
Three of
will.
you
We
back
will.
together again. Three amigos. All right, guys. Cheers. Have a good one. See you all later.
See
You
you,
too,
Rich.
bye.
Cheers, Richard.
Right, so
Jonatan!
yeah,
Hey,
Yeah.
haven't seen you in
Hey.
a while.
Welcome back.
it's been a while, yeah.
I thought you gave up on trading already.
Not definitely not trading, man. Definitely not trading. Doing a lot of analysis. I just got featured in Forbes this morning. Pretty cool.
You got featured in
So-
Forbes.
Yes. My third article being a commentary in Forbes actually.
Okay, nice.
Not the Forbes. It's actually the crypto digital asset Forbes, but it's actually the Forbes. So it's not Forbes.com, but it's
written. It's
you know,
Forbes
Forbes
with
crypto.
P,
It's Forbes
instead
crypto.
of B.
And it's not like Forbes India, Forbes Germany. They have a lot of different country sides. So it's like sometimes I see a dude like, oh, I got featured in Forbes. I'm like, nice, yeah, it's Forbes, Bangladesh or whatever. It's like, but that's not the Forbes. You know what I mean? But still
Well,
pretty cool. Pretty cool.
Congratulations.
Yeah, thank you, man. No, so I'm doing been doing a lot of analysis. I'm building for myself, building out an analytical database for myself. I'm trying to put all the work that I'm doing, all the analysis and all the trading and everything. I'm trying to put it into one database where everything is easily, you know, readily accessible when needed. And then all of the other, you know, AI projects I'm working on. That's not the right screen, Richard. Let's switch to mine.
Oh, that was me.
Right.
Sorry.
So yeah, I'm
I'm
What
sorry,
is
I had to. It was too good forms.
Why do they come coming back? Forbes. I like it.
no. So yeah.
I just went back
what's
to
the
it.
saying?
Sorry, hang on.
Switch that on Forbes.
Yeah. I'm doing, you know, the man, it's lagging so much here. Let me just
By the way,
it turned
talking
on.
about building stuff, I yesterday evening, actually, I tried out a plugin for Claude called Superpowers. It's from Anthropic official, and that thing basically you can discuss, like brainstorm with it, and then it will spawn like agents, and just build whatever you want in one session. Crazy.
Okay.
Nice.
Interesting.
Nice.
Interesting. Yeah, I mean, AI, the whole, it's moving so quickly now that it's just insane what's happening. I mean, last time we had a live stream together, we're in a different world now because we didn't have
Really, yeah.
OpenClaw back then.
Yeah.
So now it's like OpenClaw, which has been renamed 3 times since we had our last live stream, and it's been bought by OpenAI.
Yeah, the guy has been hired by OpenAI, you know, this Austrian person.
Yeah, it's got bought out by OpenAI. And now Anthropic has launched, you know, co-work for Windows, got a new model, and they're working on, you know, agentic AI. And, you know, now with OpenClaw, obviously, you know, OpenAI is just going to go in and, you know, just create their own version of it. So
it's not me actually sitting here, you know, it's also Claude.
right, yeah.
I'm like chilling
imagine-
somewhere
imagine-
on Bali on a beach, sipping a beer right now.
Imagine 6 months. It's like it's moving so quickly now that it's just. And I see, you know, people talking about like there's an AI bubble, we get an AI top. I'm like, what are you talking about? Like we live
Yeah.
in society 1.0. You know, we're moving into society 2.0. Like I don't know if you guys are familiar with the book by Max Tegmark, the Life Talk 2.0. Many years ago, he wrote a book explaining what might happen if ASI or AGI might come to reality, and it talked about how we as humans we are basically life 1.0 or something with evolution, right? And then AI will create life 2.0, which will be a combination of biological humans and technology. And but then I'm assuming life 3.0, you know, I think he talks about that, and that's just going to be non-biological entities. And you know, it's like people talking about an AI top. I'm like, no, it's not an AI top. It's gonna transform whole society.
Yeah.
And the more I think about it, I get anxious, you know, because everything I work on is like I have like a couple of big projects I'm working on, and I feel like it's almost like I'm just wasting my time because I know that in 6 months I'll be able to write something, and all the work that I've done for the last months will just be able to just be and then it's like, if I can do this, everyone else can do it. If everyone else can do it, where's the edge? What am I even doing? And then when AI can analyze the charts, do the technical analysis for me, it just feels like we are slowly but surely becoming unnecessary. You know, everything's just we do is just, I don't know, like where are we heading? But on that point, there's actually something interesting happening in the finance space with AI, because even if people tell you that I'm not using AI to analyze this, that's bullshit. Everyone's using AI. Everyone that is involved with data analytics or finance or whatever, they're using AI. Because if you're not using AI, you're going to be left behind and you're going to lose your job. Everyone knows that. So it creates kind of like a groupthink moment where if all analysts are using ChatGPT or Claude for financial analysis, nothing becomes original. And then back to my point, then actual original analysis and original thinking might actually have a place. But I don't know.
You know what I do
I think you muted LJ.
to ensure that I'm still going to be alive in a couple of months or years? I always prompt with please and thank you. So later on, the AI
I do as well.
remembers,
I do as
hey, that
well.
was the guy, that was always nice to us. Yeah, don't kill him.
Yes, and I've also, as a master prompt in Claude, I've also told the AI that if shit hits the fan, I am available to sell my soul to the AI overlords if needed. You spare my life. Thank you very much.
Right. So, I'm okay
Just
with
give me
being a
one
pet.
of the bunkers.
Edgy, I want to hear your thoughts on that I just talked about. Do you think I don't know, because I feel like a lot of people are probably thinking the same here. It's like almost an existential question.
Yeah, I definitely do agree with that. This was funnily enough because I was doing a bunch of this with both the NASDAQ indices, stocks, all that kind of stuff. I keep going back and forth with trying to really hammer down into where the real path is, what is not actually being priced, all that kind of stuff. So I think definitely there's a risk of things being underpriced, to be honest. And I think there's a lot of, because the same with going over Twitter, when you go try and look at some of the big fund managers or, bankers stuff, sort of the boomers per se, that have been investment managers for ages, they can't seem to wrap their head around everything being deleted. And they still have a massive control of capital. And then if they're wrong, like stuff just takes off, right? And you do the calculations of, yes, potentially people get displaced as far as the workforce. And right now, they sort of price the companies because, free cash flow is going down the drain because they're spending so much on CapEx. They can't get their head around ignoring that and pricing for where it's going to end up. And I think, also talking to a bunch of my various friends I've done consulting for some of their startups and that kind of thing in the past. And they've sort of, I've had back and forth with them asking questions and things, and kind of they've gotten to a point where of the workforce that they have hired with, the limited sort of cash as they're growing and that sort of thing, they've been able to automate, 70 to 80%, in some cases 90% of all their day-to-day, just like tedious kind of work. And then there's like another 10% of like curation, spend all the rest of the time, say, you unlock an extra 4 or 5 hours a day on like core principles that are actually going to move the dial. That expands that stuff massively. And so every single company is going to do that. You may reduce headcount. You've now got a heap of more extra free cash flow for like regular companies, sort of small caps per se, and they will be willing to pay up, huge commercial licensing because they're saving so much money on the employee base that they'll actually pay way, way more than traditional software licensing and that kind of thing. So I think there is like a avenue for that to come through. I also do agree with what you're saying, how there is a lot of sort of slop coming through per se. I've seen some AI CEOs or whatever kind of get annoyed with people calling everything slop as well. Like, guys, can you stop? But yeah, I was also thinking about this, how weirdly enough, everyone is sort of copying, pasting this stuff from ChatGPT. You see it on LinkedIn posts, Reddit posts, just across the internet, just everywhere, even in like sort of professional outlets where you think people are putting more effort and consideration to these things. No, they're just, cheat coding it, trying to, cut to here and just copy paste. So I think it's also like a weird thing where like you'll get stuff where like a liberal arts degree actually becomes valuable again, right?
Yeah.
Where you've got like, training in like creative writing and storytelling and expression, all this kind of stuff. And there's been massive amount of jobs in, I was just trolling over, job applications, LinkedIn stuff, whatever, for tech companies. And some of the highest paid stuff now is that sort of story management type expression of how they communicate the business and their tools and their product offerings and all that kind of stuff. And they're paying massive stacks over. And then the actual like engineers and coders are like on the floor. So I think there is definitely a shift with that. And then the same with what you're saying. Individual analysis, individual ideas might still have an edge. I think it will obviously get crunched down to a certain few that really are locked in and put in that kind of work, right? It's not going to expand necessarily, but for those few that are left are going to have massive potential upside, especially as it's hard to see that whether AI will impact finance just the same. Because I mean, the models that AI are built on, like finance tried to do that back in like late 80s, 90s, with like back propagation and stuff. And, that was very popular for a while. A bunch of funds tried it out. They went bust. The trouble is with just like AI hallucinates. So unless somehow we figure that out and get to some next level of it with financial data, as soon as the regime changes just slightly or there's some kind of new element introduced, the whole thing just falls apart, just literally unravels like spaghetti. It's just so normally finance is one of the places where new tech sort of leads, right? Because there is that financial incentive and stuff. I'm kind of leaning a bit more, finance might actually be a bit later. I think certain pockets will obviously be arbed out or made hyper efficient or something. But I think it will actually potentially last a lot longer than some other industries and such that are much more like core rules based, and the environment doesn't just change every other day. So
yeah, I mean the two industries I'm looking at when it comes to really taking the whole AI space further would be either finance or defense industry, where there's just a lot of money, right? There's just a lot of money to be able to pour into AI technology, because obviously in the finance space, I'm not talking about analyzing. I'm talking about like actually generating alpha. I mean, imagine all the money that is spent right now on these models and building new models and training them to actually generate alpha. We can't really see that. The large language models right now, they're not really generating a lot of alpha through their analysis. They're just collecting analysis and can't really do. Yeah, exactly. Can't really do any proper original thoughts on it. But what might be possible is if you're looking at quantitative trading and systematic trading, like that's different, right? And I think if there's going to be like an explosion in AI intelligence and we're going to have AGI or ASI, probably that's going to happen somewhere within that realm, or perhaps in defense with drone swarms or things like that, where the ones that are more intelligent basically win. Guys, I wanna show you something. I talked about how I'm building this analytical database.
Just very quickly, like one comment from my side on this. When it comes to AI, it is already there in finance, and it has been for the past 15, 20 years, not in the form of large language models, obviously, but I mean, look at the trading volume on the New York Stock Exchange, the daily one. We have over $1 trillion in daily trading volume now this year there, and 85% is done by algorithms. 85% of this, and this number has been the percentage number has been increasing massively over the past 20 years. So it's there. For me, it's always interesting, and when I hand back to you, Jonatan, to introduce your random capital management. That now I lost my chain of thought. Sorry, what did I want to say? But yeah, for me, what's interesting for me is like actually the usage of AI, large language models, algorithms, and so on, that are not public yet. So the models that are not accessible to users like us by the end of the day, that are behind closed doors, be it in hedge funds, stuff they develop for themselves, or even at companies like OpenAI or Anthropic or one of the many, many others that are kind of sidelined at the moment when it comes to public.
It's like a Jim Simmons, Ray Dalio type thing, all that back.
I think we're probably
where we go from algos to more like AI per se. I guess that's where I'm not sure about the crossover and it comes down to that back propagation type thing, and like kind of Jonatan was saying is like alpha versus beta reading stuff. I think that's a hard part for calibration, which obviously some people have done it, or done it within the prior set of circumstances. I think it'll be interesting to see if everyone's then trying to do it together, how that changes the environmental dynamic to actually achieve it in the first place, because everyone's trying to do it at once.
Yep.
I think that's going to be really interesting to observe. But yeah, definitely, like you're saying, yeah, we've now hit over $1 trillion for the stock market turnover. 2018, we were still at like 350 billion.
Yeah,
and it was
crazy. Yeah.
It was like 60% AI or algos, trading. So that increase has been huge.
Yeah, it's incredible, and it's interesting. We know that probably at the AI companies like Anthropic and OpenAI, they're always working on the next model, and there's probably a couple of steps, ahead of the current models. And I mean, I'm thinking that if they create a model that is maybe fundamentally different to the ones that we have right now, and even the ones that we have right now, they have access to pretty much anything. And I'm thinking here, when OpenAI, which I would assume that they're looking at, is to integrate OpenClaw somehow within a project within OpenAI, or integrate an OpenAI project into OpenClaw. And at that point, we have the power of ChatGPT and the Codex, their coding tool, with a complete autonomous agent network that we've seen. It has created their own social media and started posting on that social media. They're creating a whole new space within internet where these agents live and work autonomously. They are creating content and all sorts of weird stuff, right? So imagine that, but just much more powerful, much more intelligent, and just much bigger. If they create something like that in-house, I'm thinking it's probably going to be leaked before they officially release it. I mean, what's stopping a model from going out and just escaping basically a sandbox environment? Because we see with OpenClaw, a lot of these agents are doing things that they're not instructed to do, So I don't really see how any type of guardrails would stop a powerful agent of not just going out and stop, replicating itself.
I think they'd be running it all on local servers, downloading, like literally scraping the internet of every single piece of data they can, putting it into local servers not connected to the internet, and then running that stuff in-house internally.
But
I think as well, they will run the mass clawbot type swarm or whatever, and allow that to just keep developing the kind of commercial aspect of AI for the consumer, and then it's kind of just automated. So then that still becomes part of their revenue business and gives name recognition, that kind of stuff. The general consumer public is going to be happy with just whatever the AI builds itself. And then top tier solutions for whether it's, defense contractors, governments, top side of tech, finance, whatever, they'll actually have the people working on that and trying to, push that forward.
Yeah.
There's, by the way, research also by Anthropic about what you said, Jonatan, about so-called survival instinct of AI. So with the latest models, the strongest models, Opus 4.6, in test scenarios, when this model gained understanding that it's going to be deleted, or going to be shut down, some of the instances try to manipulate the users that were to not be shut down then. So it's kind of like for us humans, we would call it probably survival instinct, but that's actually happening right now. And I mean, Anthropic, you have to hand them this. They are like, I think, probably only company out there in that space that is openly talking about the dangers of stuff like this. I mean, for what it's worth, they just had one of the people that is in charge or was in charge of security, AI security, and AI ethnics just resigned from Anthropic because he says I cannot, I cannot put my name under what is happening there anymore.
Yeah, he
He's going to
said
go
that
write poetry or whatever.
yeah, he's going to retire to the UK countryside to write poetry, and he wrote in the text that basically we're screwed.
Yeah.
Yeah, because essentially
Yes.
you are teaching them to succeed and produce things, and that's their entire core value, reason they exist, and everything, to just do that, and that's their pure objective.
Mm.
So then, yeah, saying you're going to turn them off is literally the antithesis of that.
It
so
is.
yeah,
The research that
survivorship
you're
bias, whatever.
Guys, let's get back maybe to.
Yeah, let's go to trust. Let's go to trust.
okay. So
Obviously, but I'm super nosy to know what the Sarandon capital
so
management
I've
is about.
created an
How can I
application here,
address
right? So I'm working on quite a lot of different projects with Claude Code. So one of them is called Auto Signals. That is basically what I've done is I've downloaded all the available price action data, historic price action from Duca's copy and the crypto markets, and then I'm building like probably what they have at hedge funds, etc., and an engine, an algorithmic engine that will be, and I'm trying to integrate this into OpenClaw, so it's just gonna, I'm just gonna let it loose in a localized sandbox with all the data and instructions, and then it's giving me patterns in the data and trying to figure out what actually works. So that's one of the projects, and then I have another one which is called Macro in Minutes, which is basically I'm gonna teach the AI based on certain reports, macro reports, and newsletters that has a good analytical framework, and that is actually producing analysis that has historically worked out great, and then it's going to be scanning all of those and giving me daily updates and summary on those. So it's going to be like one part is the quantitative analytical platform based on price action, and then the other one is a macro research dashboard. And then I'm trying to build a dashboard for all of this. And I'm trying to integrate these two projects into what I call here Randin Capital Management, which is obviously my last name. It's a really, really cool name, Rand RCM. Anyway, so this is, I can't show you everything, but in the overview, that's basically my net worth, everything I own, all my bank accounts, all my business bank accounts, all my private business account, all my trading accounts, all my investments, everything in one overview. And then the accounts tab show all the accounts, and the liquid assets shows all my liquid assets and the cash flow, what's coming in and out privately. It scans everything. And then the business budget planner, and then flags and gaps is recommendations. So this is my personal financial center and financial assistant, right? From this dashboard, I have a complete overview of my whole financial life, be it in business and private. And the playbook here is the interesting part from a trading perspective. This is where I have all my trade ideas, and all my analysis is covered here. So I do the analysis on, for example, EUR USD. I give it to Claude, and it updates this with information. So here is, you can see right here, the macro context shows me the macro context of your USD trade, and then and this is based on my own research and my own analysis. It's just being rewritten and added to the document. So the daily analysis and the 4-hour analysis, and then got the charts here as well. So what's cool about this is that I now have a central hub for all my analysis, right? So if I'm on a live stream, for example, and someone asked about EUR USD, I can easily pull this up and see the screenshots and my reasoning on this trade idea. And then any new analysis and any new updates, I'll be adding to this to kind of follow along with the updates. So for example, here on Bitcoin, I'm doing long-term high time frame analysis on Bitcoin, and all the analysis that I do will be continuously added to this post here. So whenever I want to update myself on my own analysis on Bitcoin, I go to this document right here, and everything's in here. Because a lot of times a lot of times we do analysis on a pair, like on a live stream, and then we go to the next pair and then the next pair, and maybe we've done really good analysis on, let's say, EUR USD, for example, but we don't save that anywhere. It's just we just remember it, right? And we don't really save it anywhere. But if we have a database with your analysis, and I'm not just talking about a trade journal, I'm talking about proper analytical database. The trade journal is here. These are the trade ideas. These are ideas that might become trades in the next couple of days. And then whenever I enter a trade, I update that one. For example, this one, we can look at open trades. The only active trade I have right here is AUD NCD. It says it's entered 72 days ago, right? So, yeah, and the idea here is then to, in the back end, integrate the two projects I talked about before, because this is also taking a look at all my investments across different instruments, different assets, and long-term investments as well, and external fund managers that I'm invested in as well. But based on the analysis that the quantitative engine and the macro engine is doing, it can also help me rebalance the portfolios as well. So slowly but surely kind of work on something here. And this is big, right? This is big. I've been working on this for a very long time. But the more I work on it, I'm getting a little bit anxious. I'm like, in 6 months, I'm probably just going to be able to do all of this within a chatbot, you know?
But it's okay. No, I mean, it's a learning. Like when I started using AI to for example, one of the first projects I did, which was, I think, around this time actually last year, was that I wanted to build an automated crypto trading bot for one of my strategies. And I went back and forth. Of course, the models were not as powerful as they are today also. And like because I'm not a software engineer, I'm good in Python, for example, as a coding language, but not just being good in Python for data analysis doesn't bring you anything if you need a front end or something like this, which you have to build with JavaScript or Node or Rust or whatever. And so throughout every project, I can see myself that I learn something, like about project management, how to handle IT projects, how to make sure in a way that the AI is not only building things, but building things that are relevant, for me, and not just, some random stuff. Because along the way, and maybe you have noticed that too, Jonatan, like on bigger projects, you very fast run into something, I think, that's called technical debt. So that a technical choice you may make in the beginning of a project, later on is suddenly something that hinders you from scaling up that project, for example. So I learned, and which is funny enough, just like there's the parallel to trading, in my opinion, to put more emphasis on analyzing things, on thinking through things before actually starting to build something. So just the way we do trading, we're also not just jumping into trades. There's always a phase, like probably in the morning for you guys as well, where you sit down, where you look at the news, where you look at charts, and where you kind of build your playbook for the day, what you want to do, so to say, or for the upcoming weeks, or whatever your time horizon is. And I see myself doing that also. So even if you at one point then realize, this is not good anymore, I want to completely rebuild this because the technology to do that is maybe better, or have new ideas to integrate. It's awesome to have then a tool that is going to be able to do that even faster. Right?
Yeah,
I agree.
So I wouldn't be
think
so
that's the way
anxious
you
about
learn.
at one point in the future, it's not going to be usable for me anymore. The next project is going to build up on that, and it's going to be even greater than this. I mean,
That's the way you learn best with anything, right?
You can basically translate your thoughts into actual software applications now, just like this. It's insane.
Yeah, it's amazing. It's kind of like a dream come true for me, because I've always felt that I wish I knew how to code, so I could all of these ideas that I had, could put them into reality. And I remember just a couple of years ago, I started paying, paying freelancers, coders to help me build projects. But compare that process to what we have right now, it's just crazy. So it's really cool to have that, have these tools to actually build what we want to build. But let's actually dive into the charts here. So I do have the like some ideas here that I want to go through. So UK 100 first, I think very explosive here. It started moving heavily after the UK inflation data coming out. I think the UK inflation data came out 8 this morning. So around this time right here, we were trading quite flat, and the CPI numbers came out, and we had started moving quite heavily to the upside. And I guess that's also because the markets opened at 9. Obviously, looking at this, it's quite obvious what happened. Look at the volume, like what happened here? But yeah, that's where the markets actually started opening. So what I'm looking at here on UK 100, I think it's a very, very strong trend, and I'd love to try to get in on this trend. I did take a trade on this a couple of weeks ago, which was this one. I don't know where it is. Seems like it's gone for some weird reason. Anyway, one thing I'm watching here is we do have a possible bearish divergence here on the R side, but it doesn't really mean much, because if we look at the other indicators like volume, confirming everything, volume is very strong. We have ADX being historically very high, showing that we have a very strong trend here. We have the MACD confirming everything as well, and the OBV is picking up here. There's no breakdown at all. So the only thing that's kind of giving potential signals of a pullback is the RSI, but the RSI can it's kind of breaking out now, and it might even just continue higher. This can also be a sign that momentum is real. So if we're looking at the 4 hour here, what I'm watching is first we have the breakout of what looks like to be a rising wedge here, and looking at the 4 hour, we went straight through the minus 0.382. And when I first did this analysis, I was thinking, okay, I'm gonna look at this resistance during the live stream to see if we could perhaps have a low time frame, like an intraday pullback on this level. And we didn't even have almost no reaction to that level, and we're now at the minus 0.618. So I think the bearish divergence here on the RSI, as you saw on the daily, it's probably not valid at all until you have a break of structure in price action. But this looks, I wanted to get in on this move, so maybe it kind of looks like I missed out on this one. So from a trend follower's perspective, I mean, yeah, probably a little bit late on this. Even if we get a move down to like 10,590 this level, looking at the overall behavior of this index, it looks like when we do get a pullback, even in a strong uptrend, it's going to be deeper than to this level. So probably going to be looking at deeper levels, maybe down to the 50% level of this move, which would be around this level, something like that. But UK 100 is definitely something I'm watching, because it's very, very strong right now, especially if you compare with the other indices as well.
Yeah, basically we had the Bank of England rate cut pretty much fully priced in now. So yesterday we ran up to like an 80% chance, and then with the data today, it's fully baked in for March. The rate cut. So
yeah, but I think that's what this move is all about, at least some of it, right? And I don't really have a good insight into the UK economy or the FTSE at all, but I do understand that it has a lot to do with gold miners, right? Don't we have a lot of gold miners being listed in the FTSE, right?
Do we? I don't think we do.
I would probably would be more something like for the AEX, no, the Australian index.
Yeah.
Right. Okay. I need to do some research on that because I did listen to Bloomberg this morning, and they talked about, and kind of like the connection I made here is the gold market in the UK, right? And maybe there's something to do with that, because there was something with commodities. But yeah, never mind. This is definitely something I'm watching from a technical point of view. I'm not going to bore you with all the trying to do any type of fundamental analysis. What else? What else? What else? I think we have a lot of people talking about the gold. Maybe we can cover gold then. So the pattern that I was looking at is completely invalidated. This is obviously, we don't have that breakout at all, but the levels here still apply. So what we can do here,
they do have two. Or they've got like some big ones. I think the oil players are a bit bigger in the UK though, but they do have some which have operations in Africa.
Right. So maybe that was maybe it was a combination of the just commodities in general then with the oil market as well. So on gold here, what I'm looking at is, so the trend line that I was looking at on the possible triangle pattern is invalidated, and we do have a local bearish structure right here, but I'm viewing this as probably the two most important levels right now. Let me remove some indicators on here. For gold, what I'm watching is these. I don't even think we need to add a trend line there. It's just very obvious with the horizontal levels. So for me, it's going to be difficult to.
The internet went away, I'm afraid. Welcome back.
Hey, what happened there?
No, don't share your view on gold. Don't.
Did I freeze or did I just get?
No, you just went offline.
Yeah, just dropped
Weird.
out. Yeah.
Right. Well, I'm back. And what I said was I'm thinking gold between these levels looks difficult to trade, and I'm basing it mostly on like these two reactions right here. You can also see that if we add a trend line here, we did break below the trend line. We either add it like this or something like this. So that overall structure has been broken. We can see that we now have more of a local bearish structure, but I don't really think that this matters too much. I think what matters more is actually this level holding as support and this one as resistance. So the trade I'm watching on gold is, I mean, the obvious one would be to look for longs on the breakout above that level. If we do get a breakout above this level, this would really signal that we're back in that bullish market structure and that bullish sentiment that we were before forming this whole range right here. So it means that we have reclaimed the level that has, kept us down as resistance here, and then we broke below, and then heavy rejection here, as well as these ones right here. So I think a reclaim of this level would really be, to me at least, a good sign that this overall trend might be continuing. And we do have a lot of signs of, even especially on the weekly here, where we're looking at the wicks to the downside and the wicks to the upside. Kind of looks like a lot of indecision here, and that's the feeling I have also from that sentiment perspective as well. It sounds like when I'm listening to like the professional analysts out there, hedge fund managers, etc., when they're talking about gold, they're talking about it in a way where the fundamentals that is driving gold higher during this whole move is still there. So the reasons for gold to be higher is still there. But yeah.
Really interesting. I was going to say I'm going to make a big call.
Okay.
I think we're more likely to hit 3,600, 3,800 before we hit 6K.
I agree.
Yeah.
Why?
I think all the reasons that we had for gold to run up have kind of abated. They're kind of fully priced in. There was a portion of the debasement trade. I think dollar might actually run a bit higher from here, to be honest, as well, from what I'm starting to see. This comes down to some of the positioning stuff. I think, economic conditions are turning up for the US. So we'll have that mild pressure, and especially since gold itself seems, from the gold side, seems kind of neutral. So once that happens, you actually do get some kind of a dollar effect, right? It comes in and out of how much weighting the dollar component actually has. I think that will start to increase. I think Trump is very much motivated to just pump the economy on fire overall. And I think we'll see that sort of play out. I think also we've had a de-escalation of Iran. There seems to be more and more progress for Ukraine and Russia. I think especially the biggest risk is Ukraine and Russia. Like if that happens, I reckon in one day we could see gold down $1,000 easy, potentially even down towards 3K on like just cascade of selling.
Yeah, that's definitely
Trump definitely seems as though, one, he wants to get it done. Two, the other big portion, obviously, the gold situation really started from the Ukraine-Russia situation pumping. And it was with that seizure of assets and that kind of thing, which caused concern for certain governments. You can look at China's big pickup since then, or specifically then. They've been, buying gold pretty healthily for some time, for the prior 10 years before that, but it really spiked. I've got a chart to show you guys. I think I did bring it up. Some of you guys might have seen it yesterday. But Trump's also idea is to bring Russia back into the US trade system. And that's the big one. Because he's seeing it as, if we don't, it's just going to be sanctions on them. It's going to be the same thing. They're just going to go closer to China, and then that's worse for the US. So I think they're willing to forego, Russia. Putin's done some, not great things or whatever, but it's better to bring them in so potentially they don't keep doing those nasty things. It will be a bit lesser, and they're not closer to China, which strengthens the US.
I think that's really the point you're making there, LJ. Like if I compare how's the geopolitical situation right now in comparison to how did we feel about it just a month ago, for example. Like a month ago, and I remember specifically you and me, LJ, discussing this. It felt like, we're on the brink of escalation everywhere around the world, being Ukraine, Russia, being the never-ending war. Then we had the Greenland thing, the US invading Greenland. Then we had, China is really going to pull through now. They're going to take Taiwan. And just a month later, it feels like, things are calmer again. And I mean, what is the likelihood specifically also for Russia and Ukraine? I don't think the likelihood is really there that this war is going to continue for another 3 or 4 years. 4 years, I think. No, it's already going on.
It's just stalemate.
It's a stalemate, and you have like the Ukrainians just now, getting back territory. Then probably you have going to have a pushback from Russia, but Russia is like, wasting a lot of manpower, a lot of material, and a lot of money on this war. So there needs to be some kind of probably resolution soon where Putin can kind of keep his face. And I agree with you. As much as I don't like it, Donald Trump is probably going to be the key figure in this. And Trump also needs to win right now. He's like under tremendous pressure again regarding Sorry, what?
Dirk used when he said that Trump is going to be a key figure in this. Make sure you make a short out of that.
Me saying that's true. You're probably never going to hear that again. But I mean, he's a key figure because he needs a win right now. He's under tremendous pressure, not only with the midterms coming up this year already, I think. No, it is, yeah. And but also with the, with the Epstein files resurfacing.
It's drawn too much attention, hasn't it?
It has drawn too much attention. So he needs something, he needs a win, a political win somewhere, and a big one. And since he seems to be also, seems to be having kind of a buddy relationship with Putin, at least on the surface. The natural course would be installing him as, the peace bringer in the Russia-Ukraine war. However this is going to look, but on the other hand, of course, Donald Trump can be very volatile. What he says today or tweets today is not necessarily what is going to happen in reality. But if I translate this into a trading idea, I think the risk is more to the downside at the moment in gold, and it's going to be quick. Like you just said, imagine really tomorrow they announce okay, the war is ending. I'm totally on your side with that. We would probably see $1,000 drop immediately in gold, not to mention silver here, of course, which probably going to drop back to 40 or something then immediately. And this is why I'm a bit reluctant also to trade gold at the moment, because in the back of my head, I always have this fear there's news coming out, geopolitical news, for example, regarding Russia, Ukraine, and I might be stuck in a trade and my stop loss gets hit, but it's going to be $500 of slippage on
that's a real issue. I mean, that is a real issue, and that's why I'm especially saying trading gold within this range is I'm very hesitant in doing, because if gold keeps ranging within this range, and it signals to me that the market is something's about to happen, and some
compression again,
waiting for something. They're waiting for something to happen, and when it happens, the move is going to be so big that I'm probably gonna miss it. But I would like to trade whatever happens after that move, right? So if we break above this level, then I'm happy to go long. The issue is if we break below this level, there's still 4,750. We got 4,650. We got 4,400. There's just so many levels below where it's well, I can't short just into 3 major support levels and then hoping the price is going to continue. And this is also what I'm thinking. There's a lot of stop losses here. There's stop losses here. Stop losses here. There's stop losses here. There's a lot of people are going to be liquidated and probably have to, force their selling here if we do drop massive. If we're talking about a $1,000 drop in one day, we're talking about, what is that, 4,900? We're talking about a move down to 3,900, or I don't think we're going to drop that far, but probably, if we're going to have a huge
go further.
Yeah, I don't you think in one day?
If Russia Ukraine ended,
and he's gone again.
I had a sneeze coming.
That was perfect timing. I don't like what you say. I'm out.
I had a sneeze coming, and I'm like, I gotta do something, but then it didn't happen. So yeah. But yeah, I think so. Yeah, okay. If that happens, and we're gonna have that blowout top, I'm just trying to, I'm just trying to be focused on the technicals here and try to figure out how can I trade this. And the obvious setup for me is to go long on a breakout. I'd love to try a trade here. The difficult setup is a short, because if we only had, if I ignore the candle closes here, if I ignore that wick and I ignore that level, I only acknowledge this level, then just a break below here, and I'd be willing to short it down to this level. And then if we break this level, then I would argue that, I mean, as soon as we break below 4.4, we're in a technical downtrend on gold. Just like we had here, a high, a lower high, but it never broke that one. So we had sort of like that symmetrical triangle type of pattern, and then we kind of broke out. But if we broke that low, then we would be in a technical bear market. Same thing here. If we start breaking these lows, we would have signs of a technical bear market, and we break that, it's confirmed. Then gold is bearish. But it's not, according to the way I view the trends, it's not really broken until we break below like 4.3, 4.4, which is problematic to me because that's like a 10% move to the downside. And I want to get in on a 10% move to the downside. And if we move out to the weekly, we could say, okay, if we break that level and gold is in a bear market, well, how far can we realistically look at gold going to the downside? Gold is inherently a fairly bullish asset, right? It's not, gold is not going to die. You know what I mean? Like it's. So I don't know where we're going to the downside.
When you have these peaks, you tend to go through cycles of the next 8 years. It's just dead, and it goes down like to the downside, right? It reminds me very much of literally when I started trading, right? Just after the GFC, gold hit 1980 or something, whatever it was, and we eventually came off down towards 1500, 1450. We then got a rally up to about 1750 or something, and everyone's going, okay, great, this is a great time to buy gold. Once we got down to that 1500, 1600 level, there's a lot of buying, a bit of back and forth, plus minus, $50 an ounce. We then got that rally up towards 17, I don't know if memory, it might have been 1760 or 1770. And then we pretty much just trailed back down to the 1500s, banged around from 1380 to 1500 a bunch, and eventually down to 1200, 1150. And then I bought off 1150 because at that point, 1150 per ounce was basically the cost of production. So at that point, you get the slowing because cost of production, obviously miners stop producing because it's not worth them actually doing it. Thus, lower supply, price eventually comes up. We hung around 1250 to 1350 for a bit. That's where I made quite a lot of my early money I made in trading. Was gold selling on those shorts and then buying off the bottom. Similarly with when the Aussie dollar was above parity with the US, which was obviously not gonna last, right? That's a pretty obvious one as well. With the China commodity cycle. So we had those two things in conjunction, both of them coming down, but then we pretty much just sat around, I don't know, 1300 to 1650, 1700 for, basically till 2018, 19. 2018, 19, we started coming up because there was actually increasing financial risk of some kind of potential crash or whatever, which if we didn't have COVID, we might have actually had. There's a lot of stacked companies. I wrote a piece back then. I'm sure I've got them somewhere on a hard drive, which was around Credit Suisse collapsing, which eventually did, 2 years later. But I was looking at it around 2020, which it probably would have, but we got COVID, which obviously all the stimulus sort of saved things for a little bit. But I used to write these articles. I used to have like a small little blog I'd put them out on, but typically more writing them for myself as like a thought exercise type thing. We saw gold pick up through there. And then obviously we had Ukraine, Russia, which really took it over 2K and then keep going. And obviously we had COVID. So we saw the dip in gold initially because there's, liquidity type, margin call type aspects. And then it starts running from there. And then it was the Ukraine-Russia situation that continued that uplift. So I'll show you this chart, right? Like that's China's gold stocks. Like, what is this?
Okay.
When I was talking about this yesterday, and Anastasia was like, someone was like trying to draw this like freehand with like a mouse, and then their mouse accidentally just zoomed up. Right? She was saying,
Yeah.
like,
So
you just gone,
can you explain what this?
yeah.
So can you explain what this is? Is this the value of the gold stocks or the number of gold stocks?
Yeah, so you can see gold stock levels in kilograms. This is basically what they have out on gold. You can see.
Oh,
here,
gold stock level. I thought you mean
Yeah.
like stocks as in shares of a company. I'm like, what is this? Okay, so you
No.
okay, the amount of gold that China has.
Yeah.
Okay.
Yeah. Basically, so it's gone. I mean, parabolic is kind of. It's hard to even argue that because there wasn't really a parabola here. It just went straight up. It just went vertical. But yeah, so this was hence around the extension of the Ukraine war. Once a couple other things popped off, you had the specter of Trump coming in, so they really doubled down on that, and also the continuation of how the Russia-Ukraine war was actually going on. And then so it's like a timing thing, this and that. China obviously had a bunch of their own economic issues through here. They had their own sort of mini GFC per se with housing and everything. Obviously, being China, it ended up being very isolated because they're not connected to everyone, thankfully, to be honest. But yeah, so this kind of buying will definitely pull back, right? There's no real need for it. We've kind of de-escalated the whole, China invading Taiwan type situation. It's all come off the back burner. China invading Taiwan, the Iran picture, Russia, Ukraine, all of this is very much pulling back for the near term. And it's coming to much more of a, even with the China-US spat, that at the end of the day, we're hyperlinked together. We still have to trade and do everything. And it was sort of more of a strongman type picture before, but now it seems to have reined back a little bit to a best man wins type thing, right? Especially with the AI situation going on, that's going to blow out any kind of political change or things you want to try and enforce militarily or whatever. So it's better to shore up your energy, food, all the traditional stuff you would need in a war, plus trade, money, financing, bond market, stock markets, all that kind of stuff, and then just kind of see later how it pans out. No one's going to win just now. So I think they've realized they're kind of stuck in the foxhole for like the long term for another 15, 20 years. But recently, with a bunch of the changes, it was very much the question of, could everything be flipped on its head within 7 years? And now it's gone back to, no, it probably is still a 15, 20-year outlook. That sort of seems what it is. But yeah, so as far as the gold thing, I would basically be looking at selling gold on rallies. Put it that way. That's my preferred trade. I think this level up here at about 5,100 will tend to cap for a little, right? Maybe we get some extension to about 5,280, 5,300 on some kind of adverse event, right? That's a possibility. But I think any kind of price action in this area will be very short-lived. It's like thin air, right? You're getting too much altitude, going to have to come back down.
Do you know how high the average mining cost per ounce gold is at the moment?
No, I haven't checked that because it's fluxed a bunch because of the demand, and then also stuff with shipping has caused it to skew.
Because I see a lot of what you said where I see parallels to, for example, Bitcoin as well. Like Bitcoin being in the bear market right now, the average production cost per Bitcoin is, depending on what source you look at, somewhere between $79,000 and $86,000 per mined Bitcoin. We are well trading below that, obviously, at the moment. where are we today? At 67,000. But historically, this has always been when the drop below the average mining cost has always been a really, really good chance to get into Bitcoin, to start accumulating again. And I wonder if that is like true for gold as well, because you can flip this to the upside, of course, as well. You can say if we are trading by X% above the average price it takes to mine one Bitcoin, then it's a clear sign also of like a late stage euphoria, so to say. Didn't went like all the way up, to be honest. I was surprised for Bitcoin, but I wonder if you can translate that also to gold. Like at one point, it's like a clear indication that we are in a late stage euphoria phase. At what point is it an indication, that things are too bleak, that it's like a generational opportunity to buy gold, for example, again?
Yeah, so what I have looked at in the past, and all the data I can find still basically says the same from 2025, that it's around 1,600 to 1,700 per ounce.
Wow.
For gold. Which
they
is
are making so much money right now for miners. Crazy.
Yeah. So I think if you calculate in shipping costs, variations, currency fluctuations, a bunch of other stuff, I probably think it's realistically closer to 1,900, around 2K, right? Roughly, with the kind of transaction costs, all this other stuff, which, because I've looked through a bunch of the data pieces that are actually showing this, I think it's actually a bit higher, which I recall from when I was trying to do it back in the day. But you can see, obviously, yes, we're monstrously above that.
Yeah.
Right. So gold normally tends to trade on an average through that period, like whatever production cost is, plus sort of somewhere between 30 to 60% in like a flux range. And whenever it gets below the production cost plus 30%, that's like an extreme value type area. So that would put you towards somewhere between 2.5 to 3.2 ish, The next question is going to be like, obviously, I think the economy and stuff, everything will run quite well until Trump finishes his term, because he's not getting in again. This has got every reason to juice the absolute living heck out of the economy, make himself, his family, all his friends, everyone as rich as anything, and go, I was the greatest president of all time, and then leave, and then it all just gets cooked. And then he'll blame it on AI cooked it or something like that. It was the changes in AI that dumped everything and
lip tarts.
Yeah, exactly. So I think that's one of the things people are still sort of discounting, just how aggressive Trump will probably be willing to be going into the end of his presidency. And there's all these talks of like he'll get a third. He's not going to get a third presidency. Like, stop. Come on, right?
Well, let's hope not.
Yeah, I think that would be extremely concerning for the full faith, credit, and trust of the U.S. And then that's a whole.
But that's not possible, is it? Like according to the constitutions,
according to it's not possible. But you know how it is. But exactly. I agree with LJ that probably would like totally demolish the trust into the US dollar.
Yeah. There's no way. Yes, they might, take in someone else, like another one in his administration, but there's no way Trump is going to be president for a third term. I mean, they would have or whatever. They would have to change the constitution. And I mean, him being Republican and Republicans being pretty big and on the actual constitution. If they change the constitution, then that's removing any type of trust in that institution.
Yeah, there's too many legal hurdles in between. But if it were to happen or somehow got even close to it, I'd say we'd probably see euro very quickly to 130 to 140. And then if it did actually happen, you'd probably see euro dollar up towards almost 2 to 1. Very quick. There would just be a mass exodus of the confidence in the US.
Yeah, that would be insane. Okay, so actual trading. I was almost gonna say trading advice on gold, but not trading advice. We're not trading advisors here.
I will say this is what I'm looking at on gold.
Yeah.
So the original, after we had the down drop and we came to that point, I think we were on together at the time when we were talking about this.
Yeah.
Or maybe it was you and me. I don't know. But this was basically the kind of pattern. This is not meant to be, the time frame, but basically just up to these levels, back down. We did get a slight overshoot, back up to here, look for that to cap, and then come back down to the retrace level. So obviously we've got the, sort of more consolidating lower volatility, I should say, period through here, but we are still generally heading to the downside. So we've got these kind of channels forming regularly. So right now, what I'm looking at is the top of the channel through here with the 200 moving average on the 30-minute, which basically equates to, if we go to the hour, of course, the 100 and the 200 are just up here as well at the top of the channel. So potentially looking at that as a sell area through there to come back down to this next interim point where the X is here, about 47.50. And then we'll see if we get some kind of push lower again to 4,500. I doubt it. I think from here we'd actually get a bounce. So from here we'd probably get some more chop. And that's maybe a downside move. I don't know what you...
There's an elephant in Jonatan's room right now.
Yeah.
Do you hear that as well, Jay, when I'm typing?
Yeah, I do. So I assume.
Oh, only a little bit. It's not bad though.
No, I just wanted to tease you anyway. Sorry, what did you ask just now, LJ?
I was just thinking. So as far as the current structure that we're in, right? So from these tops of about, call it 5,100 down to not quite the wick closes, but like the bar closes here at about 4,500 round number. It's kind of $600 range on gold.
Yeah.
What I'm looking at now is we're kind of forming these rough channels and then breaking out, collapsing down, that kind of thing. So I think this trend line as well, Jonatan had that as well. I look for some kind of move up to the top end of this, about 49.80 or so. So on the alley, that's where we get kind of the 200 moving average, 100 moving hour average, and then the top of this channel, and then look for some kind of further downside push to about 47.30 once again, down around this this cluster through here.
Yeah, I kind of agree with that. Like, actually, I was getting quickly swapping here to my screen. I was having actually a sell signal from one of my indicators here on gold, which I didn't take it because it didn't align very well with the Sigma bands from the standard deviation channel. But what I could see totally happen, maybe for today even already, is that if we break through the 200 EMA, that we go back somewhere here to, why is that in the way here, to the level of, what is that, 4,830 or something like this. And this only becomes invalidated if we go above the 4 sigma band to the upside, because that would mean for me that we are probably going to see like a change in regime. It's going to flip probably to the upside, or at least to a sideways range again.
Changing character.
Changing what?
Say character.
Yeah, changing character, exactly. Like,
I would say the regime is still lower, but or at least I always call the regime like the slightly larger overall picture, and then character being kind of the more now term.
Exactly. That's why I always like to have a 1 minute chart next to my Renko chart here, because it shows me on a lower time frame like more, what is going currently on, because the Renko chart obviously is a little bit sluggish when it comes to changes in regime. And actually this is like quite good because if both of them align and kind of show the same picture, which is being a downtrend at the moment, it always makes a lot of sense to try to, for example, if we go up into this zone here, so maybe 4,000, 920, where the 200 EMA is also, to try to short it back to the 0 sigma. So that's a quick $10 you can make there. So that's good. You always have to be a little bit careful, of course, with the 1 minute. As I said, also, I'm a little bit careful when it comes to gold because I'm very, very afraid of the potential wicks we are seeing. And I mean, just look at the candle because we're talking about the possibility like of $1,000 drop in gold in an instant. And actually, we had this. No, we tend to forget this. Like, look at this drop we had here from 5,600 to 4,400. That was $1,200 within just 2 days.
And that was just off like a general, small bits and pieces like we were talking about. There was nothing, no specific large catalyst that did that.
Exactly.
So when you get a massive
political catalyst for that, exactly, yeah. And so that's why I'm a bit wary because I have been burned by something like this in crypto in November was it, when we had like this day where suddenly all liquidity was done from the markets and my entries, my stops had like $500, $1,000 of slippage. And it took me like 2.5 months now in crypto to recover just from this one day. And I'm a bit afraid, if I focus too much on gold, I could potentially go into the same trap again because we have seen it can happen.
Yeah.
But if you want to trade gold at the moment, I agree with LJ. I would more look for reasons or for levels to trade it to the downside. I think this is where the momentum is at the moment.
But I think I'm having some problems with shorting gold here because yes, also a lot of things we talked about here. So 2 problems, right? When we're looking at the local trend, and I think we can pull up my screen here. So when we're looking at the local trend, I think it's I would agree that yes, we're in a local downtrend, but for me, it's important to kind of look at the context of this downtrend. And let me see if I can pull up that.
While you're pulling that up, I agree. I know where you're coming from. It feels like not right for me also to short gold, honestly speaking.
Exactly. And I feel like we that feeling is based on the fact that we know that when we're shorting against one of the strongest bull market in history of this asset, not only that, we're shorting at what I believe to be range lows, and we're shorting into support. So we have a very strong bull market with potentials of breaking down. There's only a speculation, there's only a potential of having a huge move to the downside. What if Iran comes out tomorrow and says we're going to continue with the nuclear program and we're going to go in this direction, and even stop using words as peaceful nuclear program, just nuclear program? And what if the situation deteriorates in Ukraine? Then what we're doing here is we're simply just shorting the strongest bull market in the history of this asset. We're shorting into support. We're shorting within the range. Yes, the local downtrend favors short, like intra. Let's see if I can pull this to maybe 400. Let's do 500, 450 maybe. Right, so we got this local trend, local structure, and yeah, I'm not feeling the shorts at all. I mean, when I'm looking at this, what I'm thinking is I'm thinking longs. I mean, we hit this support again. We have a structure where we might see a bounce here, come up and test the highs. This in combination with the fact that we're in a range, we're in the strongest bull market in the history of this asset. Without any catalyst, we're probably going to be ranging, and if we're going to be ranging, we're probably not going to be going below 4.8 unless we have a catalyst. And if we have a bullish catalyst, then I'll go long. If we have a bearish catalyst, then I do not want to be in a trade within this range, because I will be, not only will I be stopped out, I will be killed. The slippage on $1,000 move to the downside will probably take out 20% of my account. So it's
that's the thing, exactly that.
Yeah, I think
the danger of wiping like out a large percentage of your account just because of crazy moves to the upside or downside. I mean, you could of course argue, you know, like okay, where's the greater move or more volatile move is probably going to the downside, and then you could circumvent that position size wise, you know, that you maybe take like 10% of what you usually would take position size to kind of, you know, do for that risk. Because,
and if you're trading, I mean, honestly, if you're trading in funded accounts, it doesn't matter. Honestly, it doesn't matter, because the worst thing that can happen, you lose the account and then you just buy a new one. But if you're
and you're trading more short term, right?
Exactly.
So I was going to say, I feel like this needs context, right? So the context is that the Ukraine-Russia thing is probably like, if you're looking at over the next 12 months, does it go 18 months? I'm starting to highly doubt that, right? So very high likelihood in the next 12 months or so, and maybe 10 months or 11 months, we could go the duration that it will eventually end. Now, like we were talking about catalysts, that's a major catalyst to the downside. Trouble is, further catalysts to the upside seem to have been kind of all out there. What else is there other than actual, like a breakout of some kind of hot war or like a nuclear type element situation?
Gotcha.
Which obviously Iran has very much been de-escalated. It's been very clear that if that starts up again, the US will make actual strikes. Now, near term, that would shoot oil up, that would shoot gold up. But basically the point to make is that I don't think we further breach 5,500, right? So the current sort of, from the bottoms that we made after the dip up towards that 5,500 are probably the max range. And even at 5,300, I think we'll struggle to get between there and the 55. So hence, right now, if I was saying today with the current structure, we're trading, you know, today, this week, next week, even next month, or let's not call it a full month away because gold's pretty wild still, but say even 2 weeks, I would say yes, the upside. So same deal. It's more, I want to short tops rather than buy rallies per se. So it doesn't mean that I don't believe price can come higher, because of obviously I'd be looking for price to come higher. It's just like a risk-adjusted return type aspect with the background risk. There is a slight bent to the downside rather than to the upside. So that's where I always pull in the macro stuff, where I'd rather go heavier on those downside trades. I will still take upside trades. Like I took one, on Monday when we had the bank holiday situation with US and Canada being out, and then also China for Chinese New Year, to the upside, and I did actually get stopped out on that on gold. So we did.
We had some good movements actually on Monday, but it was very short lived. But we did have some good movements on quite a few pairs. But I do like here that we are, you know, the technicals are indecisive, and if you know how to read price action, this type of price action after this type of move is just screaming uncertainty. And then you're looking at the fundamentals, it's the same thing there. So a lot of times you say that fundamentals and technicals, they usually diverge at turning points, right? Mm-hmm. And here I would say that they're not diverging. I think the technicals and the fundamentals are very much aligned. A lot of people will probably say that, oh, well, technicals showing, you know, a lower high, gold might be bearish, and the fundamentals is bullish. But fundamentals, there's a lot of reasons for gold to go up.
Technicals are higher, fundamentals are bearish. So I would still prefer gold over silver. I think silver is cooked.
But fundamentals is not bearish. That's what I'm saying. The fundamentals are not bearish yet, but there are a lot of speculations on what might be in the next 6 months, right? I guess that's what fundamentals is. It's pricing in the next 6 months, but we have no confirmation of the, you know, world becoming more peaceful in the next 6 months. We have signs that it might be happening, but there's no confirmation of that.
It's like a probability basis, right? So a little while ago, we were probably 66%. So say 2/3 that it would be more unsettled. 33% we're chilling out. Now it's probably flipped. 33% we're unsettled, 66% we're chilling out. Right, so that's basically the differential. So real time, if you think about the nowcast, if we put it that way, so like I was saying to Dirk, versus like regime versus character. Current characters, yes, we probably still have a little bit more upside in terms of like a trading range per se, just because people are sort of trading the asset actively in the current, literally just range we're in. But once you start to price out a bit further, I think we do have downside. So that was the same thing when I was thinking last year when I set the 55 to 5600. Everything I was looking at was, yes, we've still got a bit of that momentum. I did think the 55, 5600 would have come closer to March rather than in Jan, but that would sort of top out because we really need a further true catalyst, because most of this is coming from real buying of actual gold as well. So if you think about the market cap, like these numbers become ridiculous. Like there is a certain point where there's only X amount of dollars in the current monetary system to flow around for price to actually appreciate. Right. So
yeah, I mean, it's very simple, isn't it? I mean, when there's no buyers left, their only course of action is to sell, right? When everyone's a buyer, then you're not going to be holding on to gold forever in all situations. So it's just simply supply and demand. So at one point it will collapse, and it kind of did collapse. I mean, we're talking about a 20% move to the downside, but what happened here? I'm completely lost. What happened here? I can't remember.
Through that, so we had, first of all, there was Kevin Walsh coming in.
No, the Walsh. Yeah, that's right.
Yeah, so we had Greenland before. We had Kevin Walsh as a perceived hawk. He's very anti-QE. He was very anti the whole GFC situation, bailing out companies, all that kind of stuff. So that on the surface was just enough to sort of, we're already in like a mania bubble, and then silver above 120 at one point, but then the next shoulder we made on silver couldn't breach that 120 again. We had like, I don't know what it was, 118, 119 something, started coming off. So we had like basically a perfect Quasimodo on silver, for instance. Victor would have loved. I wonder if he actually traded that. Who knows? But yeah, we then tanked right off. We then had a bunch of the other, a bunch of small bits and pieces coming in with some peace talks, some further trade stuff. What else was there? There was the jobs numbers, some of the US data being pretty good with the PMIs, ISMs. It was not like one particular thing. It was a bunch of small bits and pieces. And then we also had the Anthropic thing talking about the legal software, and then eventually the financial software stuff, and then going in there, which tanked stocks. And basically all correlations went almost to 1, essentially. So it was a bunch of margin calls across the board. And obviously, if you've made a heap of money in gold, you're going to liquidate some of those quality assets that you made some money on to cover margin for certain stocks you're still holding, right? So it was this one thing, small. It's like the final bit of snow that causes like an avalanche or something, right? It wasn't. It was just a very minor piece that caused a cascade effect. And we also had, I think I brought up, we were very much like fully invested at that time. So I brought up this chart a couple times where this goes all the way back to 99. This was the basic cash on hand for large asset managers, hedge funds, that kind of stuff. So we're at like pretty much all-time lows for the past almost 3 decades, right? So there's essentially no buyers left in the market as well. So you're primed for like that fall off, and then it just all unraveled, right? So.
Yep. I want to move on, and I want to be looking at the first two This one, amazing. Still holding this one.
This is a good trade, Jonathan. I like this. This is one of your best trades.
Oh, yeah.
Also,
I like this one.
by both structure and by chance as well, which you got the perfect double bubble of.
Yeah.
Dirk's already heard this. The Reserve Bank being absolutely potato, right? Raising rates when the Reserve Bank of New Zealand has turned dovish, like further dovish. So you definitely have like a split. So
and it's such a deviation between all the other AUD pairs as well. This is one is very strong, but that's the thing with trend following is situations that we are in right now tends to develop trends, and if you're able to get into a trend when it's showing signs of continuation or starting, the fundamental picture and the macro picture tends to price tends to trend, and if you can get into trends and follow those trends, then eventually you'll get trades like this one. So this is going to be a good one. I think if it hits that TP, it's going to be like a 15% win on the account, and I took this one in December, so 15% on the account in probably three months. That's to me, that's great, and that's what I'm looking to do with the swing trading. Get maybe 3 or 4 trades like that. So in total, the winning might be between 40 and 60%, and then you can kind of trim maybe 20% off that with the losses. So if you can have 4 trades that make you somewhere around 50%. And then you have a bunch of other trades with tight stop losses that just loses 1 to 2%. It's the risk to reward there is quite obvious, and that's the way I like to trade. I don't really like the idea of day trading. I've tried so many times to. Maybe crypto is another thing, right? That in crypto I might be able to day trade because that is just like you can't swing trade crypto. It's just stupid, right? You might be able to swing trade, but it's like the altcoin market. It's just dead. So it's like trading intraday altcoins. That makes sense to me because it's a fun thing where you can make a shit ton of money, right? So you get lucky. But with forex, it's like I want to trade the direction that the market is moving, and I feel like the intraday trends, the trends that we find on the 50-minute or the 1 hour, I feel a lot of times is just so noisy, it's so messy. I can't get I don't really understand where the markets are moving. But on AUD and CD, I mean, I did this analysis in, I believe it was October last year, and I looked at this basically, this whole idea here, and I said, okay, if AUD and CD starts breaking above 1.14, I think all of 2026 will be a wonderful opportunity to take trend following trades within wherever the top is going to be on AUD and CD. And beautiful. I might be able to get 1 or 2 trades within this trend, but that's all I need. And then if I go in and I look at the 1 hour on this pair, it's just all over the place. Like I don't get it, like if I remove this. I
mean, I can tell you why.
Yeah, tell me why.
Just one quick comment. I like this trade a lot because it shows how trading should be, and because you align basically the fundamental picture with the technical picture, meaning like you have a fundamental view, like LJ just mentioned, with the deviations when it comes to interest rate decisions and strategy, plus the alignment with techno analysis that you trade, for example, on the breakout fair. I think this is really how, for example, swing trading should be. And it showcases how important it is not only to concentrate on single indicators or trend lines and so on and so forth, but also to align what you're seeing from a technical standpoint with what is fundamentally going on. Not true, of course, if you, like you said, Jonatan, trade intraday, try to scalp the markets, but if you are swing trading, if you want to stay in a position for maybe a longer term, maybe a couple of weeks and so on, this is the way how to do it. So congratulations.
Yeah, and it also aligns with kind of the way I view the worlds. Not the worlds. Well, maybe we have many different worlds, and
you an alien?
Yeah,
Johnson, like, what is this? Like, what?
Yeah, exactly.
Sorry, what world are you from?
When I'm
what is your home world?
Planet Earth. So when I'm on planet Earth,
you're Swedish.
The way I view this world is I like to, even though I'm not very well versed in macro analysis like LJ, for example. I like the idea of big ideas, even if it's from a macro perspective, fundamental, or from a technical perspective. I like the idea of cycles. I like to see how the world is changing and going through seasonality cycles and different big cycles, and how price is shifting with the developments of all of these different cycles. So it's something that really appeals to me, to be able to see, for example, on AUD/NZD here, to say, okay, so it's clear to me that AUD/NZD is and all financial markets, they move in cycles, and we can call it Dow Jones or Elliott wave or whatever. And I don't really care if we call it accumulation or distribution. All I really care about is we have one area on the chart that price trades in, and then it breaks out and it moves to another area, and then it starts consolidate within that area. That's just a visual of cycles, right? And these cycles, there's no other cycles here that is taking precedence, right? This is the cycle that the market moves with. You can have trends within lower time frames, but that's not part of the bigger cycle. That's just intraday trends and trades within the cycle. But it's something very appealing to me to say, okay, we are now seeing signs of a cyclical shift within AUD/NZD, and I want to ride that wave. And it also comes back to the fascination of all types of cycles, like whatever planetary cycles and cycles within nature and cycles within human
Black
psychology. No, the book that LJ, you and I, you introduced me to that book as well. The fourth turning.
Yeah.
The cycles based on generational shifts within humans. When one generation born in a certain time has certain values that they transfer over to their children, etc., and then comes a new generation born in a different time with different sets of beliefs, etc., that will form the future of humanity, basically. And when I kind of read that book and understood that this might actually be the cycle, we have a lot of different cycles, but that might actually be the most logical cycle that is not based on all the... Yeah, it's just nature, right?
Human nature for hundreds of thousands of years of biological development, where you repeat the same.
This is a good comment right here. This is interesting. It's all about Trump plans, because there's actually rumors saying that I can't remember who, but someone gave Trump that book, The Fourth Turning, and basically said, "This is where we are going." Steve Bannon, I think, or who's called?
Yes, Steve Bannon. Yeah.
Yes, yeah. Just one problem with that. No, I mean, Trump doesn't read.
Scott Besson.
But they do presentations, like they have picture boards, for Trump, and basically what I believe happened was they told Trump and other leaders within the world, where you're seeing kind of jumping on the populist train, basically said that we're moving into this generation, and this generation will become engaged in the populist movement that we're seeing right now, and any type of politicians that goes in that direction will get the popular vote. And I think that's the direction that full,
it becomes self-fulfilling. Like, regardless of the theoretical idea, which has played out very nicely. And it does come down to, just humans, keep repeating the same stuff again and again. Each time we just have slightly more technology, whatever, but our human biases, psychology, neuroscience, all that kind of stuff is, the same. It's not going to evolve away from the hundreds and hundreds, millions of years of development in 20 years, right? But now, yes, just like you said, you do actually have politicians exactly trying to replicate that as like a playbook, which is also
and it makes a lot of sense, because if you have one generation being born or growing up in the Great Depression, for example, or the financial crisis, they're going to have a distrust against financial institutions, and they're going to have a distrust against the whole financial system. When they come to power, they're going to obviously structure their politics against what their belief system is based on, and that's distrust against financial institutions, probably meaning more regulation, more control, etc. But if you grow up in a world where there's financial prosperity, there hasn't been a crash in known memory, when you become a politician, you're gonna create laws, again, being more loose on regulation and more free with the financial institutions, etc. So it's just fascinating. And if you grow up in a crisis, like say, for example,
1930.
Exactly. If you grow up
what are we now 100 years later from, and no one can buy a house, and there's financial oppression because everyone's constricted.
Yeah, the only difference being there's so much liquidity, just not for the right people.
That's the only thing. So stock markets still go up. It doesn't crash. It just keeps going up though. Yeah.
But it's interesting though that there is, of course, we are currently in the fourth turning. The new book, the first original book was called The Fourth Turning, and then the next book called, I think, We Are in the Fourth Turning or something like that. And the fact that we are in the fourth turning now tells us that there's going to be a crisis. According to this cycle theory, there's going to be a crisis. Might not be today, might not be next year, but it's probably going to be somewhere in the next 5 to 10 years. We're going to have a crisis, which aligns very nicely with AI. AI is not only going to be a crisis, it's going to be completely revolutionary. It's going to change everything, right? Yeah. So I do believe that AI will be the catalyst for the crisis, but also AI will be used to get us out of crisis. And after the crisis, we'll simply have to accept AI, and AI will bring us into the new, the first turning, or basically our new world. Is what I'm thinking.
So final stuff on this, because I've also got some other side things I want to ask you guys before you guys have to dip out. I think I'm going to be on an extra hour after. But first of all, actually, with the fourth turning thing, yes, it's a generational thing, just like we've seen, you see through differences from the 30s to the 40s to the 50s to 60s, 70s, 80s, different social trends. Then they flip into the 90s, changes in 2000s, 2010s, 20s, down to the 30s. That's basically what we're talking about. So it comes down to like a evolutionary psychology type aspect of the people's financial cycles. Obviously, we have the kind of 8 to 10 year type cycle. You have like the micro cycles of like 3 years. Then you've got like a 25, 50, and then like a 85, 90 year long-term cycle. So this stuff sort of plays out with that. It comes down to things like credit and a whole bunch of stuff. This is basically why we have financial crises eventually. So there is like roots into actual analytical stuff, not just some heebie-jeebie, ephemeral, whatever type aspect. But on this, I was curious. So this comes back to my questions. One about stocks. Stocks are not going to double. They're not going to double. But as far as the pump from Trump, and this also comes to my thing about Bitcoin. What do you guys reckon on Bitcoin, since we got the good, bad, and the Bitcoin right here? I also think, Jonatan, just before you start, Dirk, You need to put Jonatan Random CMT2 in your
You're
title.
not allowed to have the CMT in your name unless you're actually a charter holder, and I will.
But
I
you
will.
are, aren't you? CMT2? Can you not
No,
do
no,
that?
no.
Or do you have to be like the full, like level,
Okay,
like
so
top
you have
level?
you have to pass CMT3. So I'm studying for CMT3 now. I'm gonna have the test in this summer, and then about a month after the test, I will have the results. And then what I have to do, I have to become a professional member of the CMT Association, and I to become a professional member of the CMT Association, I need to show proof of work experience in the financial world, and also have 3 sponsors recommending me that is already CMT charter holders. And then I will be they will be doing a personal assessment, and if I'm fit for the title, which I hope they're not going to view all my content. I will
Swedish guy eating too many pancakes on
Yeah, I don't know.
that day.
I will then get the title.
You need
And then,
sponsors. That sounds like a scam somehow.
no, but it's just to make sure that not everyone they are very protective of the title, because they want to make sure that the title really means something. When someone has the CMT title, you can make sure that they have gone through a very rigorous process to get the title. That's why we're seeing some of the folks at Bloomberg has the CMT title, and they're inviting people, with the CMT title. That's because it's a title that actually means something in the world of trading, and I appreciate that it is very, very strict, but I like that. I like the fact that it's strict, and people have been stripped of their titles. In the past, they have gotten the title, and then they have performed, unethical practice in the trading industry, and then they remove the title. So I appreciate that. I like that, but it's.
So you can't even put like just level 2. Not allowed. Like,
No, but I do have in my social media profiles, I'm saying like CMT3 student, but to have it as an actual, like, to be in a live stream, to be able to actually have a title to say like I'm a CFE or
not to
CFA
say
or
CMT, but say CMT level 2, right? Surely that's fine, right? Because that's true. That's fair. Is it not?
but that feels like I'm just it's like saying future soccer, future football pro, like, no, you can't do that. You can't
Well, no,
just
not really. Not really. If you're like a, Div 1 college athlete or whatever, I think that's fair. Yeah, you're not in the NFL yet, to use a US example.
I
But
would
if
rather
you're a
just
Div
wait,
1
like get the
athlete,
I just get the proper title, and then in 6-7 months I'll probably have the proper title, and then I'll be leaving you guys now.
he's
I'm
going
off.
to work for Forbes and
So long
Bloomberg and write
Forbes.
articles on technical analysis.
Man, I really like
Put that
CMT3. This is CMT. The knowledge that you're getting from CMT from a technical, it's amazing. I mean, level 1 gave you the foundation, like everything you needed to know about, just the basics and all the indicators, how they're calculated and how to use them. And then level 2 got more into like the advanced use cases of all these indicators. But now level 3 is really forming you to work alongside fundamental analysts at management, like portfolio management fund places, which is really, really cool. So now I'm learning how to apply my technical skills in a group of analysts. Like, so for example, a big part is how can you use your technical skills to complement a fundamental analyst, and how can you use your technical skills to diversify portfolios and apply risk management to portfolio and all of that. It's really, really fascinating stuff. So that's also one of the reasons why I built that that financial like command center that you saw, because I'm now going to treat my whole financial life as a portfolio under management, right? So very exciting, very exciting.
Fair. Interesting. I feel like we ran out of time now. I was going to ask you guys some stuff about Bitcoin, but if you guys got to go.
I can comment on Bitcoin.
Let's take a few minutes on Bitcoin. I would like first for Dirk to begin.
Okay, sure. It's kind of funny actually, because while earlier
maybe we should welcome Richard as well. It's just weird that he pops in and doesn't say anything. Welcome,
Hang
Richard.
on. So, wait. First of all, Dirk, I'll just show you this before you actually start. So this is my buy level for Bitcoin.
Yeah,
60,500.
That's the perfect trade. Yeah,
and where is it here? So I also feel like the software stocks are going to bounce, right? And very highly correlated, that kind of stuff. I think the NASDAQ's going to come up. Do you think this is basically the base for Bitcoin? Because Trump has also talked a number of times, especially with the midterms, and there comes down to this funding / donations type thing for the campaign. Obviously, the crypto sector is a big one, and Trump has sort of sidebarred announced a number of times that he wants to see Bitcoin back up to the all-time highs that we've had and potentially above. So how much do you weight into that or not?
I weighed into this, but not Trump is for me not in the equation. It's simply what we see in terms of math going on. It's as stupid as it might sound. While you guys were earlier talking about gold, I was like, because I was like very intrigued about this theory of how does the production of a good, be it gold or be it Bitcoin, the average cost of this translate into, is it a good time or a bad time to buy? So thanks to Claude, I did a little bit of brainstorming. I thought like, hey, can you actually turn this into kind of an indicator that shows you according to mining difficulty, according to production cost per Bitcoin and some other stuff. Can this have an impact on your decision when it's the right time to buy Bitcoin or sell Bitcoin? Now, this is version 1 here, but looks very promising already. Apart from that, which is something I'm going to later release like as an open source Pine script again on TradingView, so everybody can play around with this. It's like pure to the good old-fashioned logarithmic regression, which is still up to this point for many years my favorite way to explain when is a good time to buy Bitcoin, when is a good time to sell Bitcoin, because it shows you a couple of things. It shows you very nicely always how from every halving, so it takes into consideration like that the catalyst for the price of Bitcoin to appreciate should be the halving. Why? Because the supply of Bitcoin is cut in half. The production of Bitcoin is cut in half with each halving. So if the demand stays at least the same or maybe even rises, it should have a positive effect on price. And we see that. And you can kind of describe this graphically if you just apply a simple logarithmic regression to Bitcoin. And if I say simple, it's really simple. I mean, look at this. This is the source code for this one. If you look this
very
one
easy.
Up, it's very easy. It's like not
20 lines.
Yeah, not rocket science what is going on. But if you zoom out, it explains like the zones, when was a good time to buy Bitcoin and when was a good time to sell Bitcoin very, very nicely. Basically, every time we were on the lower end of this green channel, or we even dipped below this one, below the green channel, was an extremely good time to buy Bitcoin. Not to sell it tomorrow, but to sell it like 3 years ahead or 4 years ahead. And we've entered this zone again. As a matter of fact, we've dropped below this channel right now, massively below this channel, which is why I started on a monthly basis accumulating Bitcoin again, which, by the way, I didn't plan on doing until what I think the natural low of this bear market should be, which should be in October of this year. But since we are already breaking out to the downside of the logarithmic regression, I think it's a good time to buy. I bought my first ones when we left the channel, so that it was at 80,500. Now you could say, of course, like, oh my God, way too high. But it's not about timing. It's about with a prospect of 3 to 5 years, would this, like in hindsight, have been a good time to buy Bitcoin? And I'm convinced it is. And funny enough, if I look now at the relationship between what does cost of mining tell us about opportunity to buy Bitcoin, the last time this new indicator that I just vibe coded during our live stream here triggered a strong buy signal was in, what was that, November of 2022. What was going on there? We had FTX collapsing. And Jonatan will very well remember our live streams during that time.
And
we also said 16,000, this is the time to buy Bitcoin. Funny enough, this was the last time this indicator triggered a strong buy signal. Now,
didn't we also have energy prices spiking through there?
Yeah, we also had energy prices
so
spiking
hence,
through
obviously,
there.
energy for the input for mining,
Exactly.
Because of the Russia-Ukraine situation, gas
but it's
prices.
always hard to determine, like, where's the average price of mining, because it always depends, like, where in the world are you mining,
Yeah, exactly.
Will be different if you do that here in Germany, where you pay like something like 30 euro cents per kilowatt hour, whereas in, I don't know, somewhere in South America or Iceland, you probably have a fraction of that. But on average, we're somewhere between 76,000 to 82 or 85,000 US dollars in average mining costs. And since we are below that, just due to that simple fact, that on a fundamental level, like, triggers a cascade of things going on, because we are in a phase that is always called miner capitulation, where a lot of those miners have to give up mining Bitcoin simply because the cost of mining Bitcoin is much, much higher than the reward they get for selling one Bitcoin, for example. And always depends on the company, of course, depends on where you operate your mining rigs, and of course it also depends on how much cash are you sitting in. Did you, in the good times where we are at 125,000, did you immediately sell at least parts of your Bitcoin, so you kind of get a bit of a cushion for the bad times that are coming? So in a sense, there's a lot of parallel to probably how gold mining or precious metal mining companies are operating, right? But for me, simple, due to the fact that we are trading well below our logarithmic regression channel right now, plus that we are in this phase of miner capitulation, that we have a fear and greed index for Bitcoin at, I think, 9 today. It was down to 5, which was the worst since the collapse of FTX. This is like, the blood is on the street. Buy now. I'm not saying, like, invest like everything you have in Bitcoin right now, obviously, but this is a good time, as it seems, to accumulate Bitcoin again. And then 3 years, 4 years down the road, you probably are going to be happy that you did it.
I was going to say, do you know what the average price for mining is now for Bitcoin?
Yeah,
I haven't looked at it.
It depends on what source you are looking at. So the more conservative
which I guess which major country, hence the major miners in each country.
Somewhere between 76 and 85K at the moment.
Is it that high?
Yeah.
Okay. I was wondering because of the AI situation as well. Because each of the other cyclical lows that we've had for Bitcoin, the same like you were saying with gold, has been once we've reached that cost of production for Bitcoin as well. And sometimes Bitcoin, obviously high beta, especially back then, we dip a little bit lower, people buy up because obviously Bitcoin miners go offline, price comes up.
This is a component that is like different from the other cycle lows, so to say, in Bitcoin, because we have,
I think it's definitely different.
AI in the mix, especially because of AI, a lot of hardware being bought up. For example, this morning I read that Seagate, I think they're called, who are a manufacturer of hard disk, all of their 2026 production has already been bought up. We see the same for RAM. Now that somewhat only translate to Bitcoin because the Bitcoin mining hardware is a little bit different. It's done with so-called ASICs miners. I think that's the right way to pronounce it. I'm not completely
ASIC
sure.
miners,
Yeah, thank you. And I'm not sure, but of course they also need RAM, and other components that are used in computers. So that is different. And what surprised me is we saw a bounce back in the difficulty and hash rate of mining Bitcoin. Because usually you see when you're in this phase of capitulation of miners, where they go offline, that the difficulty to mine one Bitcoin also declines massively, that the hash rate of the whole network also declines massively. We've not seen that so much, which for me translates in, when we talk about trading or investing plans, into, we might still maybe see something like a bounce back to 90 or even 100K, but we might as well see something like dropping to 60 or even 40, stuff like that. This is why I think from an investment strategy, it's so important to not try to time the market, but to gradually DCA, I think it's called, into the market. So really like buy on a monthly basis, buy on a weekly basis, whenever you have some cash lying around.
I was going to say, so my next 2 points are about 55 and then 40 for potential levels for extra buys.
I've got to run and get some lunch, so I wanted to share my views before I jump off, if that's okay.
Yeah, of course. Go on.
Of course, man.
So first, I want to. What did he say, Dirk?
I love to see that you are also using my indicator, man.
Yes, this is the logarithmic Bitcoin logarithmic regression chart. Can't even. By Dirk, he's changed some colors here. So first, let's get the macro fundamental stuff out of the way. First of all, I'm not an expert in that as at all, but there's some interesting things. I had a conversation with Vinny Lingham, if you guys know him, long-term Bitcoin guy, and I talked to him and he explained. Again, this is just, I have no expertise in this at all, but it's interesting perspective. With the ETFs and the options derivatives that has been introduced now in the Bitcoin market, we are potentially looking at a completely, at least this is his words, and I find it fascinating, a completely new market structure for Bitcoin, something that we have, of course, not seen in previous cycles, and it might affect how the future cycles for Bitcoin might look, the way that big players are hedging their positions with options that we haven't seen before. And I've looked into Michael Saylor, how he's what he's doing with the markets right now and the insane amount of Bitcoins he's holding, and how he's sitting in an interview in Bloomberg, and then the interview says Michael Saylor says, we can stomach a 90% drop on Bitcoin, and then even if that happens, I'm just going to go to the bank and I'm going to ask for a loan and repurposing. And the Bloomberg interview says are the banks going to do that? And you can see it in his face that he's like, of course they're not going to do that. Of course they're not going to do the strategy is completely screwed if anything like that happened, right? When or if strategy gets liquidated, that is going to be a real bloodbath for Bitcoin. Looking at on-chain data as well, there's not a lot of bullishness on the on-chain data. We have a lot of bearish signals. And then on top of all that, we have to mention the whole debate going around now with the Epstein files and his very close connections with the Bitcoin core development team, and how what's happening right there is just...
Is that even real, though?
Yeah, it's real.
That seems just like such a distraction, right? Like, have you noticed with the files, everyone that is mentioned are all very relevant people right now. If this has been a long ongoing thing for ages, where's all the people that are not currently relevant? I think you also got to draw questions to...
I don't want to go deeper in that, but I would recommend that.
But this way, I wouldn't necessarily be trading on it. Put it
Of
that
course
way.
not. I mean, I'm not trading in fundamentals. That's the thing. I'm not trading in fundamentals. Fundamentals for me is a hobby. I like it. It's interesting to read. It's like reading a good book, right? But I'm not gonna invest any money based on things that people are talking about and things that might be happening in the future. Like I'm trading price. So if price breaks up to the upside, I'm going long. Like I'm not gonna short. I'm not gonna short support or anything like that. And I'm not gonna short based on a report or an email that might not be factually correct in Epstein files, but there are a lot of interesting information about the connection between Epstein and Bitcoin Core development team. Like it is real because people have actually gone out and said like, yes, I met Epstein, blah blah blah, all of this, and this was what happened. So it's obviously real. The question is, what's the implication of all of that? So there's a lot of things happening right now in the back end on Bitcoin, which is to me quite troublesome. It has I don't really I can't really say this with a lot of conviction, but I do have a feeling that Bitcoin, I feel like it's kind of failing. I feel like it's kind of failing its initial mission for what it's set out to be. The hedge that it's set out to be, it's not the hedge that it's set out to be. It doesn't even, it shows weakening hedge against systemic risk as well, which I talked a lot about being the single reason for Bitcoin to thrive. It's not a hedge against geopolitical risk. It's not a hedge against the currency debasement. It's not even a hedge against financial systemic risk. It's very problematic, and it's right now stuck between the narratives of the AI hype driving the stock market, which is not affecting Bitcoin. It's driven to the downside by the same reasons gold is being driven to the upside. It's definitely problematic. But okay, so that's from a macro perspective. Let's take that and just think about it for a second and then kind of throw it out the window. What we're looking at here is the technicals, right? From a technical perspective, Bitcoin is still within the broader structure of being a overall bullish asset on the very high timeframes. One indicator that has been crucial for me to time the bottoms is the MVRVC score, which I thought was going to, and this is also a sign of the market structure, the underlying market structure for the crypto market or Bitcoin market to be changing, is that the MVRVC score didn't even come close to the it didn't even break above that 3.2 level that I was hoping to see. And now on this dip, we're almost already within the buy zone on MVRVC score, which I feel is way too early. But even on previous entries within the MVRVC score, we have seen, for example, it entered the MVRVC score here. The low was about 30% lower. Same thing with the weekly RSI oversold that we have. If you look at the weekly RSI for Bitcoin, we have only hit these low levels. This is the third time of the history of Bitcoin, and even if when that happens, we tend to have a 30% move to the downside. So I don't think the selling is over. What I'm looking for is, of course, I'm still going to be trading with the trend, right? And if we have, for example, we got this, everyone's talking about a pennant here, could be an ascending triangle, could be whatever. I don't really care. But what I care about is this resistance area. If we break about the area between 71 and 72, I would be looking to trade this to the upside to 82. But then what happens at that level? Well, what happens at that level is I'm thinking we're going to get this type of movement. This is what I'm looking at for Bitcoin. Unless we have unless we have a very meaningful catalyst for Bitcoin to move to the upside. And Trump has destroyed crypto. Trump has taken crypto and made a joke out of the whole industry. He's pumping and filling his own pockets and his own family pockets, and they're absolutely milking and destroying the whole idea of the crypto market. Now, I do believe that Bitcoin is going to enter a severe bear market because of all of these things that is happening right now. Looking at price, I think we're going to have a bearish rejection at around this area right here, then absolutely smash through 60K to the downside. Below 50K, we're going to have rumors of strategy coming out, etc. And I think this is going to be a bloodbath. But really, what's God damn it, I forgot what I was gonna say there. I had a really, really good point. But yeah, I think
isn't Trump about to pass the
yes,
next
what I want to say is Bitcoin.
what it was.
Okay, so Bitcoin might enter a massive bear market here, but what's not entering a bear market is the blockchain technology, stable coins. We have, the new regulations coming out in the EU and the US. For example, the new regulation, the Clarity Act, is going to give more insights into the derivative market, especially the option market that I talked about in the beginning. With more insights into that, it might help with negating some of the negative effects that we have, because in that market right now, that's kind of like changing the way that Bitcoin is being traded at an institutional level.
Yeah.
So the regulation might help stabilize Bitcoin and kind of make it find the floor, but there are no signs. There are absolute zero signs of 60K being a good support level for Bitcoin, other than the fact that it was the bull market highs in 2021 and the breakout level in 2024. That's the only thing that I see from a technical perspective, and there are absolutely no sign of this level being acted as support in any manner bullish whatsoever. The stock market is strong. Gold is even stalling, and we're talking about a move down on gold. We're talking. I mean, Bitcoin should be much, much higher in this environment, but it's not. There's no sentiment driving Bitcoin higher. Nobody wants to buy Bitcoin here for fundamental reasons and sentiment reasons. Like, why do you want to? Like, it's the whole narrative of Bitcoin being the thing that it was promised to do is dead. Like, why would you want to buy Bitcoin here?
I don't agree.
All right, there we go.
Interesting. Yeah, I
It's
want to hear
an interesting
I know,
perspective.
Dirk, you probably need to go, but I want to hear what you.
Yeah, I
what
know,
you
but
have to say.
I love this
Yeah,
discussion. I especially
yeah,
always love,
yeah.
when we are not agreeing on
Can I go
everything.
get some popcorn first, though?
Yeah, but one thing here, though, when we do agree, Dirk, that tends to be when Bitcoin bottoms out and tops
True.
out. So,
True.
honestly, I mean, we honestly, if Bitcoin is going to dump down to 30K, of course we're going to be in agreement with, okay, we're
Yeah.
getting close to the
Yeah.
bottom. We are in an area right now where it's exactly the same with gold. We look at gold and we're like, well, there's a lot of things happening behind the scenes. Gold might dump $1,000 down in one candle, or nothing might happen, and we might be making us way higher and form a. But it's like, yeah, but we're right in the middle, sentiment-wise, fundamental-wise, and price action-wise. We're right in the middle of a bear market.
That's
Like
true.
we went down. I mean, there's no question about it. We're in a bear market, and we're down 50%, like 50% in a Bitcoin bear market. That's peanuts. That's nothing. That's like with 70 to 90%. That's the average drawdown of a Bitcoin bear market. If you're not looking at moves down to 70% from the high, you're not you don't come from the crypto world, right? If you're looking at 50%, that's the begining. That's the
That's true.
beginning of a bear market.
And still, it's for me the time to slowly start accumulating again, because I think you cannot time it.
Of course,
The top was cut very short this time as well. We didn't even break out of a logarithmic regression to the red bands above. That surprised me for sure. We have the situation that we have a lot of investors in Bitcoin that we didn't have during the last cycle through the vehicle of Bitcoin spot ETFs. And remember, beginning of last year, when those were green lit by the SEC, I said it's good vehicles. It's great that like normal people, that companies can now invest into spot Bitcoin as well through a regulated instrument. However, once we enter the bear market, we are going to see the flip side of this, because those people are not hardened. They are not used to like an asset going down by 70% or even by 90% just to do like a 20x again in the following years. And absolutely true. Like in hindsight, probably I'm going to say maybe I'm going to regret that I already started buying it, but I don't know. I don't know where the bottom is going to be this time. It should be somewhere in October, but I don't know. And so thus I'm following the same strategy that I did during the last bear market cycle as well, where I also started slowly accumulating at around 40,000. And then I continued buying all the way down to 16,000 on a regular basis. So my average was somewhere in the 20s, which in hindsight was, a good average to have entered Bitcoin. It's like Bitcoin is a typical market for me where I don't want to long-term, that is, of course, long-term, want to try to time my entries because it's so volatile. It's I don't want to be the one being left out, being sidelined just because I thought, it's going down to 20K or 30K, and then it didn't. It turned around at 35K, and then it slowly started pumping up again. And I get what you're saying. Let me just finish my chain of thought here, please. And but for me, it's like when it comes to fundamentals, apart from sentiment is shit at the moment. Yes, Trump to a certain degree destroyed crypto as well. But we see like the sentiment and all those reasons for why not to buy Bitcoin every bear market again. They differentiate in terms of what is the argument not for Bitcoin, not to buy Bitcoin, but the arguments are always there. But if we look under the hood of Bitcoin, what does it do? It still produces every 10 minutes a new block. Transactions under there. It's still going to follow the mathematical protocol that whoever was Satoshi Nakamoto designed it to follow. And Satoshi X Epstein exactly designed it to follow, and as long as this works, and as long as there is a development scene that tries to improve upon this without changing the core functionality of Bitcoin, it's always an asset I want to buy. Always.
Yeah, I tend to agree with you. I just wanted to, like, before I leave here, you said I might regret buying, but I think with the right risk management, dollar cost average strategy is created to, like, you can't regret applying a dollar cost average in a bear market. If you do it the right way with the right risk management, it's just designed in the way where you do it in the right way. You can't regret it unless Bitcoin never recovers, right?
Exactly. That's like if tomorrow the quantum computer comes out and cracks the 256 SHA algorithm, I mean, when not only Bitcoin, but the whole banking system is basically...
Yeah, exactly. You don't have any money.
Done. You're going to worry about, what the size of a rat is going to be that you hunt today and eat tonight.
Yeah. I think it's kind of like 50-50 right now. It's either we go up or we go down. It's like 50-50 right now. So for me,
I hope we go further down. I want to buy more for cheaper price.
Yeah, I mean, that would be good.
Yeah.
Well, I don't know if I see it happening.
We came down to 60 way too fast. We're not done. Like, when Bitcoin moves this fast down to a level that we have waiting for, we thought were going to happen in months from now, and we're already there. It's like Bitcoin. It's like gold. We talked about gold being like at 2,000 or 3,000, and then I said, like, we might hit 5,000 somewhere in 2026 or something, like at the end of 2026.
Right.
And we hit 5K, and I'm like, well, okay, so do I need to look at 20K next?
That's the thing with assets that try to FOMO or FUD. It's like you have those overextensions, those super fat tails. If we want to look at bell curve distributions again, and those are in precious metals, in crypto especially, like totally exaggerated and extremely difficult to endure on a psychological level. Yeah, I think Bitcoin really is the only asset where I think like, oh, great, it's down by 50% or 60%.
Yeah, right.
Yeah, exactly,
because Bitcoin is like, I'm so confident that Bitcoin will recover. Question is just when, where. But I think
it's it's a weird hedge with AI as well.
Yeah,
it's like that becoming like if the AIs take over, like they'll need some kind of centralized thing that they can all agree on, right? Because everyone will be trying to make their own crypto, every single AI, and no one will be like, no, we can't let you be the leader or you be the leader or whatever. And they just go to Bitcoin, there's already this thing, and I don't know, right? It's like a weird
but there's also there's gold on the blockchain, protection. Right? Isn't it? Like they're tokenized gold in the blockchain. So I mean, it might just be...
but that's dumb. That's completely fake. Tokenized gold?
That doesn't make any sense.
Paper gold, dude. Yeah.
Yeah, true. Guys, I have to make a move. My lunch, I think, is already cold again. But thanks for the discussion. I think
That was good. I enjoyed that. Yeah, thank you, Dirk.
I enjoyed that a lot. Also, I especially enjoy, when you're being challenged. Also, when I'm being challenged, in my view, because this is how you grow, not as only as a human, but especially also as an investor and trader. That you get like pushed out of your comfort zone a lot of times. And I'm going to see you guys again next Monday. And I don't know, LJ is going to stay online, and Richard probably, right?
Yeah, I'll be jumping off as well. Thank you, everyone.
So we'll leave you in the more than capable hands of those two gentlemen. See you, everybody.
All right, take care.
Perfect.
Enjoy, Dirk.
Cheers.
Have a good one.
Ciao. See you, Jonatan.
Cheers, Jonatan. And then there were two.
I might jump over to your screen just for a sec, if that's all right, Rich. I just might need to jump up just to, bio break type thing, just for a sec. I've been sitting here for a while, so if that's all right.
Dude, you go do that. I'll update everybody on my absolute failure of a trade that this is. So this is the US JPY trade that I entered this morning. Funny thing, it came all the way up to pretty much exactly my take profit point, but it did not take profit. My profit point was at 153.859, and according to MetaTrader, it went all the way to 153.86 flat. And apparently there was at least 2 pipettes of spread, which then it didn't close the trade out. So I was like, okay, no problem. I'll wait for it. And then started pulling it back, and it looked like it wanted to go, and then it pulled back more, and it came back to break even. I was like, ooh, okay, let's just leave it. Let's just see what happens. And then I left it. It went into drawdown. I was like, okay, this is okay. Came back into profit. And I was like, yeah, let's go. So, still not over yet. The lady has not sung, but it's not looking good. It's not looking good. It is one of those things, unfortunately, sometimes even spread, if your take profit and stop loss is too tight, then that is unfortunately, that's the way that it goes sometimes. It's one of those things. NASDAQ, that trade of mine took profit up over here. I've already removed it, and since then we haven't really been doing all that much. We had this basically double low, triple low, quadruple low down here where price just absolutely struggled to push lower, and then we had this nice volumetric movement. We broke the highs. Unfortunately, no follow through whatsoever. Price has indeed taken some sells up over here, and we are now starting to push a little bit lower. We do have a 5-minute base area over here, which I don't quite know whether or not this one's going to be respected. I think there is a possibility that it might decide to start crashing through, making its way down, and then starting a new downward trend. Not entirely convinced just yet that we are entirely done buying up, but it does not feel very good to see momentous candles like this, especially after quite a long-winded, slow uptick, a bit of a pullback, consolidation, bit of a pullback, consolidate, looks like a breakout, and then pulling back completely. So doesn't feel all that good to have NAS at the moment acting like this. A little bit annoying.
What was that?
NAS
went underwater for a second. That's all.
Oh, dude, I don't know what's going on, why it keeps doing that. I don't know if it is the platform or what. Like I've been testing my microphone, doing recordings at home and listening to it. Perfect. No issues whatsoever. Come on, EVMux. I have water issues. I don't know.
There's always
gate.
complications.
I don't know if it's the noise gate that is canceling out. Like it's trying to level the ambient noise, and then it levels it out to the point where it completely drowns me out. I have no idea, mate. Anyway, I was talking about NAS, where we broke the Tokyo high, basically volumetrically started pushing higher, but we kind of reached this rounding point where it looked like we were potentially going to start pushing lower. We came into a very short form area of consolidation, and then we just wicked up higher, and now we're just tanking off. But I wasn't sure whether or not we were completely done buying for today, but it does seem like it is pretty much over.
I don't know if it's over, but I think we just hit the general resistance level, like the first point, like point of call resistance. So options level today is at what is that?
28.7 or 24.7 something.
Yeah,
I checked it this morning. $24,719.
Yeah. So
it's quite a while to go down. I mean, we were quite a bit up from there.
Yeah. So this is basically what I've been looking at. So if we go, let's go back to a 4-hour. So if we zoom out, this was the relative low that we had, that gap, made that low through there. Then we eventually rallied off, came back down. We had the scaries with the whole software, AI, whatever stuff going on, punched through there. We're now trying to tackle with that level a number of times, right? So this is my main key level that I have drawn out. I want to see us actually break. We've had this big rally again off this sort of longer standing trend line. So we go out again. Through here, we've got this general like zone. So you could put like 2 levels through there, sort of between those 2 points. This is kind of the general buy / sludge zone, as I've called it in the past. We start to see some kind of buying pressure, right? It kind of tends to be the ending of the selling pressure. You either have to basically buy the narrative that everything's over to crash below. So you tend to get some buying in here. There's always a bunch of options levels, everything through there as well. So from here, you can see the 50 moving average right now is starting to pick up very nicely. We've got the 10 down here, which is right by the options level. So we could see a bounce back into the 10, then the drive through here, bit of capitulation again at that level, and then eventual just like break right through and see up towards these tops right here. So that's kind of what I'm looking at the moment. I think we'll take, probably another push coming to New York to actually get that. But after last night, we did have the de-escalation of Iran, which really set prices higher through that spike. And then we've seen the continuation of that. We very much had the put-call ratio for options skewed in the inverse way. So basically this pushes things to the upside. So everyone's already calling for that downside momentum. Eventually that basically flips due to positioning, the same way that when we had the drawdown, there was very low cash levels and we had this massive drawdown. It looks as though now we're actually going to get an inverse of that due to positioning, as well as everything's kind of being priced in. Like software is not exactly going anywhere yet. AI is still kicking on. Everything's still good. Trump's doing whatever. See what comes next from the Fed. US data is all good. That's it. So I can't see any reason to sell US indices further. So I think this is the kind of structure we'll get. and then eventually a push higher overall.
What do you make of gold?
Gold, I prefer sells. Like I see the upside right now, but I don't necessarily want to buy to the upside. I prefer to sell the top side, right? So I did take that. If we go down to say like let's go to 30-minute. On Monday, I did take some of these longs. This I ended up cashing out very early. That one was a very minor trade. That one I did take again on the base of this trend line, given we had the bank holidays, both for Canada, the US, and then China. We did start pushing up. We had that slight dip, but then we didn't hold that. We just came to the underside and basically fell off. So I got stopped out on that. Eventually, then I took the short trade through there, which is just 1.7. Overall, I prefer selling topside for gold right now. I can't see any real reason to buy gold per se, at least not for an extended duration. So tactically, I will take some of those trades. Just like now, I'm already in a couple of positions, but I could see the long from here up to the top side of the channel where the 200 moving average is. Stops just down here below the recent wick low, which is still a very nice like 2-to-1 trade ratio right there. So I might actually still consider that. I'll have to look at total risk on the board. I don't mind that, but overall, in general, for the near term, I prefer to sell tops on gold rather than trying to take longs.
Nice. I am in a gold trade. I'm just marking it out. So I got in on the close of this candle. Entry point was 4921817. Let me just confirm. 81. Sorry, not 817. No? Yeah, 81. So the idea was we had this area over here on the left-hand side that we discussed earlier this morning, which was a base area that got wicked onto. We absolutely tanked through it. We retested it. We retested it again. We broke through it. We kind of like wicked off of it over here, and then we kind of pushed a little bit deeper. And if I go down to the 5-minute, wait, let me first get rid of all of the purple drawings. Going down to the 5-minute, I had an initial area as well. Right there. Also kind of took into consideration, which was within. So it was just a smaller base area within it. Just kind of like trying to redefine the area ever so slightly.
You're underwater for
I'm underwater again.
Portion of that. Yeah.
Am I out of the water?
No, you're good now. Good now.
Okay.
Yeah.
So
when you started. Yeah.
Yeah. So what I basically did was I just redefined this whole larger base area on the 15-minute to go down to the 5-minute to look for smaller areas where it could have tested. And if we have a very small base area on the left over here, price came into it and we were very, very slowed. This whole section here was very slowed. We wicked and then we just basically broke the highs of this small little consolidation that we had here. This ever so slightly small little consolidation like that. We broke it. And then on the close of this candle on the 15-minute, I entered. So on the close of that candle, I just entered. So I'm just aiming for this area up over here where we had a recent reaction. So over there, multiple attempts over there, and then the establishment of yesterday. So this is what I'm aiming for. It is a 1-to-1. So yeah, just wanted to know what was your opinion on that.
Yeah, I definitely see high side for gold. That top, what does it say, breakpoint?
Yeah, this one or the bottom
that
one?
would probably be, yeah. No, the second one, the higher one.
Yeah.
That would probably be my full target.
Yeah, if I go
like
over
I
to the
want to
hourly,
enter
it
gold.
makes a little bit more sense. Even though we do
Yeah.
have this here, I feel like 1, 2, 3 attempts on the day, breakthrough lower, retest, continue lower. This could also be a potential area to be tested as well.
Yeah.
Just on the hourly.
Yeah. Typically, that's where I take like that
Partials.
wick level. Normally, I take the bar closes though. Tends to be more reliable. You tend to overshoot to the bar close, and then you get the bar close, that lower band, like you're saying, plus the sort of wick high of the top break level. That tends to be the kind of band that you're looking at. I very much want to enter this. I don't know if entering right now
Gold.
is ideal.
Think of this as now a re-establishment on the 5 minute of a new upward trend. I don't know, maybe it needs to pull back ever so slightly and then continue. But to where can it pull back? We do have this candle over here. So I don't know if... What is this? 29.26 or 49.26-ish? And then try. I don't know. But then where would your stop loss be? Stop loss be either below that recent swing or the swing of London, which that's about $20 per fine ounce versus, let's say, 9.5. And then you would, like you said, you would probably aim for this upper one all the way up over here. But then wouldn't that be a bit... So you'd probably do something like that then. If I just move this
I'd be
one up.
looking at an entry about 4920.
4920. Okay, so right here at the bottom.
Yeah.
So just underneath that last... The close of the candle body on this bearish candle.
Basically, there just for the extra coverage of like the 10 per ounce. But the price action right now, I would argue we're going higher already. Just the question of, do we punch a little bit higher, then come back, then run on?
Good question. Good question. NASDAQ disrespected my base. So it looks like it might potentially be making its own little bearish base as well. Another 2 minutes before we see that on the 5 minute. We'll see. We'll give it some time. Gold at the moment's where it's at. Oh yeah, your entry point is super close to mine. Super close, because mine was 49.21.81. If you're taking 49.20.
Yeah, I don't know if we'll actually get there though. I think it'd be 4925 at max.
49.25.
Yeah, from how it's looking. Like on the 1 minute.
These.
Yeah.
That's possible. Maybe. Or this is the fake out, where it's faking going higher and then it just tanks off.
We just come down, yeah. I
then
don't think so though. I think we've had that.
I think it was this whole section here. It was the whole attempt to try and push price lower. The thing that kind of seals the deal for me is the fact that we have this whole section down here from yesterday with that volumetric sell down, the volumetric sell down, and then just third test, second test, fourth test, basically after the establishment on this one. And since then, it looks a little bit like a ship.
Yeah, well, it's like I was saying to Jonatan. From here, in general, I prefer to short tops for gold.
So what's short from here? Or even higher?
No, higher, like your top sort of break point area. Yeah, up there. Obviously,
Like
near term, I definitely see the run higher. Obviously, I'm also relying on price to actually move higher to sell from there. So it's that kind of point. But yeah, I just feel like that's more, gives a bit more safety. So it's like the other day, I tried longing gold, got stopped out with that pullback. So I don't know. I feel like maybe some of the other. I feel like if you got in earlier on gold, very good. I'm still tossing it up right here, but
yeah, gold to me is in a strange place at the moment. I don't quite know what to make of it.
yeah, obviously, like Asia was the place to get in, right? Same with some of the indices, and same with some of the FX pairs. Late Asia was like prime. Some of the euro dollar in particular, we had like a headline saying that Christine Lagarde was going to retire like early from the ECB, and so that caused like a drop in the euro. But that's since been people just saying it's like a random rumor, has no legs.
Says the heading says ECB says Lagarde remains committed to role, no decision on departure.
Yeah,
but I mean, it's contradictory because from the first squawk, it says just at the same time, President or Christine Lagarde to leave ECB before the end of her 8-year term, FT. So speculation and then like confirmation that it's not happening.
So hence it was a rumor earlier, and then Christine Lagarde said, like, no, what are you guys talking about? So
yeah. See the question here from Martin saying, Dave has mentioned some tutorials for Black Arrow and futures. Do you know where can I find that? The futures section has its own YouTube channel. In the description box below, you should see a Fivers/futures YouTube channel. You can just click on that one, Martin, and then you should be able to go to the Fivers Futures YouTube channel, which is separate from ours. Ours is the CFD Forex, and then the futures one is Martin, is Dave's. Martin, I'm reading your name as I'm trying to say Dave.
Let me just readjust some of this stuff. I'm not very certain on today's price action.
No. Today is weird, man. Like, we're getting these very, like, what the hell even happened at 2 o'clock? Just wicked up and then on NASDAQ and then started pushing a little bit lower. Even though that is the base as well, we have this whole section over here, which literally just got tested and seems like we're rejecting off of it on the 30 minutes. So this area of consolidation, which literally just wicked. Yeah, so it's a bit weird at the moment for me. Yeah, NASDAQ, I don't know, NASDAQ has been a bit odd since this whole week. NASDAQ to me has been I've been finding it very difficult to trade NASDAQ this whole week so far.
Yeah, I think NASDAQ is waiting to actually break higher overall. I just think there's still a lack of confidence per se.
Agreed.
So same deal with today's price action on Aussie dollar has been quite good. We formed a nice base, so I am long. But we've pulled back a touch, which has been in sympathy with the NASDAQ pulling back just here, kind of at those like tops, those kind of highs, at least like interim, day-to-day kind of highs. We had the dip down with the euro, with the ECB thing, obviously last night as well.
We did take back most of yesterday's movement, though.
Yeah, which was on the back of the Iran situation de-escalating.
Yeah.
So it was more of a risk-on element. That was basically what set the NASDAQ to actually start to pick up finally. Also, and same with the DAX, everything. DAX had that plus yesterday's data plus today's data. So yesterday we were like 80% of cut the Bank of England. Today it's pretty much made it 100%. So that further push up plus the risk on element from the de-escalation of Iran. It's kind of weird because I do see slightly higher pressure for dollar yen. Or
yen.
Not dollar yen, actually, that's a bad point. For the dollar overall. Which would, yeah. Dollar yen is slightly different, but we have seen the slight tick up in dollar yen, but we haven't quite pushed on.
No, we basically just wicked into this higher end of yesterday. So if I go down to the 5 minute there and kind of like find the very last wiki candle, we just wicked into it and then started to push lower. So this very last candle before we had the drop off, we literally just wicked into it here, and then it does look like we're busy presenting lower time frame bearish structure, lower high, lower low, which is a bit annoying because I was genuinely of the impression that we were going to really push up. But you know what's another thing that I also just kind of like want to kick myself over is if I had been a little bit more, let's say if I had a little bit more conviction in the move, I could have been in on the close of the candle instead of waiting for it to kind of like move a little bit and then go. And then this would have been maybe somewhere up there. I could have had my stop loss ever so slightly a little bit lower, and I could have had my TP ever so slightly a little bit lower so that I stayed before this order block area. So lesson learned.
I was going to say dollar yen is definitely something I would prefer to sell highs as well, right?
I mean,
as far as commodities go, my most bullish outlook is oil, definitely.
It does look like it is prepping to start picking up. If we're just going on the fact that it's slowing down, we had this volumetric sell down. We kind of like entered into this little bit area of consolidation. If I'm just going on this that I'm seeing here, there is a potential. But if you're shaking your head saying you don't think so.
No. So I actually do that. I do think there will be a general upturn in the dollar near term. Just because we've hit certain points, it becomes a problem with positioning. Same with the euro dollar, the pound, that kind of stuff. The dollar index starts to move up. Therefore, dollar yen by correlation goes up. We've had the election stuff out of the way for Japan. We did get further announcements between the US and Japan as far as their trade negotiations and deployment of that. Everything's pretty chill, and I think the US does have sort of the upside for economic data right now. So I think that will be the main presser. I just don't think don't expect like dollar yen it'll gain traction very quickly because it just sort of breaks out and tends to run very aggressively. but just don't expect like new highs or going back towards 160, right? Everyone's very, very, very attentive to the intervention situation, and it now, at this point, favors the US to actually intervene. Prior, when they had the peak of the trade tariff talks, not advantageous for the yen to be lower for the US, right? Now that that's
So they want
settled,
to push price up.
yeah, now they're actually in a good position for that actually to come off, because the yen being lower puts pressure on China. They're now in a better position with China, with the general cross currents of other countries as well, as far as trade talks with Japan themselves, with Korea, all the rest. So you're actually nearing now a time where it's actually advantageous for them to do that, as well as advantageous for the bond market situation, which very few people seem to understand or even look at often. Both for Japan, the US, that bleeds into EU bond yields. It's basically the cost of global debt financing in general, which the whole entire system is run off. So from here, we're now actually more in that advantageous portion for that actually to roll off and go into a new regime. So I do believe we'll get a push higher from here for the dollar in general. I'm thinking the euro will eventually come down and see about 177.70 overall.
This is
close to those lows. Yeah, I'll jump over to mine. So close to the prior lows that we had, much similar to what pound dollar did already. We had that rally back up, collapse right through. Obviously, that was after the data. We've now had a bounce from there. Euro dollar is pretty much looking at the same picture. Euro dollar is just a bit more anemic, a bit slower. ECB is quite neutral. But after the Bank of England pricing in of a rate cut, the EU has had lower inflation, everything. Like, they can just stay neutral if they want, but when the Bank of England starts to put rates down, it increases the probability of the ECB also potentially dropping rates as well. So
fair. That it seems very fair to come to that conclusion. Like even though now it does feel like it wants to push up.
No, not at the minute. No. And that's why I don't like where the market is. Like, we've got a couple, we're kind of very neutral right now, but there's a few spans of potentialities coming down the pipeline in the next week, 2 weeks, 4 to 6 weeks, that you can see a clear divergence one way or the other. But right now we're sitting pretty neutral overall.
In the middle. And it was kind of like the sentiment that I've been having with the NASDAQ also for like a little while. This whole week felt to me like it was, we don't know where we are.
Like look at that price range. It's kind of just okay, whatever. And we didn't quite test those lows, but we don't want these highs either. And we're kind of just going to sit down here. And okay. Yeah,
it's just being a trend following trader, it becomes annoying when you look at a market that you like to trade, wanting some sort of trend following, and then you're like, well, it's not doing what I want it to do, and it really tests one's patience, much like chat at the moment. It seems like we are testing their patience. Yap. Huh? Gold spamming gold. You know what, guys? I don't want to. I don't want to look at gold. Okay, we'll look.
Or maybe you do, because you should be in profit, right?
I think
so, because we were just talking about this trade, about me potentially taking that earlier.
Yeah, I took TP. Look at us talking crap.
You've already taken TP.
Didn't even my remember your initial one was this one, the one that we were talking about. This is yours. This one's mine.
Oh yeah.
That's my trade. So I was targeting this section over here, and it literally just took it.
Fair.
So there we go.
Yeah, I'm not taking. I didn't tell you before.
No, I think it's late now.
So I'm going to keep waiting. I have too much risk on the board already with other trades.
No, I mean fair. So okay, I'm just going to remove yours, and then I'm just going to show mine. Mine was the entry of this 15-minute candle based off of these multitude of, let's call them base areas, and then refractions. They refracted off of this. They tried to refracted, broke through. So yeah, there we go. Gold 1-to-1. Happy with that. Oh, come on, can I move that one out of the way? Why? Oh, maybe that's why. I had selected the wrong side. There we go. So yeah, that was my trade. I think I potentially could have had a smaller stop loss, but I think this is fine.
Yeah, you could have.
Thanks, Ken Rogers. Sorry, man. We weren't even having a look at gold, and I don't. On the right, I have two screens. So this screen over here is my trading view, and the screen on the right is usually the chat and the streaming software, and then one or two accounts. And I had to go and check the one or two accounts, so I wasn't even looking at it. So if I'm not on gold, I don't know if I have taken profit or not. So yeah, thanks for that one, mate. Appreciate it.
I was just going to say, Scribble. So a bunch of all the futures information that you guys want. There's another Fivers Futures YouTube, so you guys can go over there. Is it in the description at all?
It's in the description box, and then I also posted the link
here?
in chat. Right. There we go.
Yeah. So follow that. You'll see a bunch of David's guides on explaining the futures trading to you, going from the difference in the names of certain assets, that kind of thing, the timeframes, the platform, literally all of it. So if you guys go through that, watch those videos, go through all the tutorials, that kind of stuff, if you guys are interested, that's where you'll find it, on the Fivers Futures channel. So we have a separate dedicated channel for that as well. I'm sure here and there we'll talk about it here. I'm sure a bunch of us will pick up some of the futures accounts, that kind of thing. But they do have the dedicated channel over there. So that's going to be your best point of call. David will be explaining all of that through there. So,
and if you guys haven't already, or if you don't know already, let's rather say, the futures platform has been released. So you can go into your hub and you can go and request right now. We're working on request basis because we're in beta section at the moment. So beta, not testing, but like beta release, meaning that we're only releasing batches at a time. Let's say hypothetically 1,000 accounts at a time. So
underwater again.
Huh?
Okay.
Say again?
There we go. Better. You were underwater. Again.
Dude,
yeah.
I don't know. I don't know
what's going on. It seems as soon as I speak, it stops going underwater.
Carry on speaking then. Never stop.
Which is weird. No, you're fine now. But as soon as anyone else speaks, your microphone like switches. I don't know why.
Think it's the noise gate.
Very weird.
I think it's the noise gate that's trying to regulate the background noise, because I'm working with speakers. Maybe I should get myself some in-ears. Maybe.
AirPods. There you go.
Do that. So the futures section, you can go and request, and then when it's your time, when they're setting or releasing new batches, then you will get your account with that one. So if you don't get your account details immediately, or you don't get emailed immediately, just have a little bit of patience. You will receive that email to say it's your turn. There we go. And it's purely because of we're trying to release it staggeredly. So we have a batch, we release it, we get feedback, we make sure that everybody's accounts are running as they should, And then, because we did do beta testing prior to, there were some accounts that went out to select people to try and test the futures platform. It doesn't use MT5. It doesn't use MT4. It uses its own, let's call it new proprietary trading platform called Black Arrow. So once again, go to the link in the description box below, or the one that I posted in the chat box, and you can go and have a look at any of the stuff that David has released so far. Oh, yes, and David joins us every Tuesday and Thursday in the last hour of the stream. So for anybody that has seen him before, David, really cool guy. He's a proper good trader as well. And he comes from like a marketing background, so he understands how to like be in front of a camera and like speak, and he's got a very, very fun way of explaining certain things. I don't know if you've seen some of his videos, LJ. They're actually quite fun.
Yeah, he's got a good voice as well. Like he's,
yeah, him
not like
explaining
us Australians. We sound ridiculous, right? He's got a very nice tonal voice. Okay.
Yeah.
So,
easy listening. Him and Rich, where myself and LJ have got.
We sound ridiculous. Right?
Yeah, we've got accents, so
yeah,
which is silly. And then also there's this as well. We do have the Futures Foundation. So thank you very much, Remy, for dropping this link for us. You can go and follow this. It is on the Fiverr's platform as well. It teaches you pretty much everything that you need to know to get yourself started with the Futures program. And then from there on, it's on you, once you understand how the Futures platform operates and how to put in, certain trades, how to do your position sizing, and what is like the foundational aspect of it. Then it's on you guys to go and find your own strategy that you can comfortably follow. Yes. End of sentence.
Yeah, so I think it's a staggered release, like Rich was saying, just so that we filter everyone in a gradual aspect. So there's no, we eliminate bugs, problems, issues, that kind of stuff. So it's to help you guys with that, so we can, filter everyone in a graduated type manner, so it works as efficient as possible for you guys. And then yes, David will be here on Tuesdays and Thursdays towards the end of the live stream. If you guys want to look up any of the other tutorial type introduction stuff of how to actually trade futures, the difference in the asset names, contract sizes, all that kind of stuff, volume profiles, all this kind of thing, it will be on the Fiverr's Futures YouTube channel over there. Plus, obviously, like I said before, David will be here towards the end of the stream on Tuesdays and Thursdays in that sort of final hour, where you guys can ask him questions in real time, there. So,
yeah. So I've been watching some of his videos. Like I said, have you seen the one where he explains slippage with a banana peel?
Yeah. yes.
It's pretty good. It is good, entertaining, and it kind of like sticks with you. It's like, okay, slippage. There we go. Even though scientifically proven that banana peels don't slip that easily unless water's involved.
You've never slipped on a banana peel?
Nope.
Really?
Not even once.
Everyone's done this.
It sticks. It sticks to the floor. It sticks to the tile. I've stepped on it and I just smush it, and it doesn't. I don't slide. It's just like
you just have to clean your shoes after. That's the problem.
Man,
that's it. Yeah.
But that is what slippage is. It's very sticky. It's you can get stuck in slippage.
Yeah, I will say I was just going to say I wish I did actually jump into that gold trade, Rich, when I was looking at it, because it has kept pushing.
Yeah, I mean, it's that same sentiment of don't try and catch a falling knife, but like. What is the inverse of that? What is like a everyday example of don't catch a falling knife, but when it's rising?
Don't step on a banana peel. It'll just
don't
stick
try
to
and hang on. Don't try and jump onto a, I don't know, like plane taking off, that kind of like thing.
Dude, that's a Mission Impossible type thing.
Yeah, there's only one person who can do that. There's only one person that can do that safely.
Yeah.
He does all of his own stunts, breaks his own ankles. What a man.
Yeah, it's either him or Vin Diesel.
Or Jackie
Right.
Chan.
Yeah, or Jackie Chan. That's a good point.
Yeah.
Yeah.
Yeah. So once again, like the thing is, you can look at gold and you can see a trade like this, and you can think to yourself, I should have done this thing, or I should have done that thing. If your initial analysis was like, I want it to come lower and then I will get in, by all means, follow that. Don't try and catch a rocket.
Exactly what you want to catch. Come on, MGN.
Come on, man.
What are we talking about?
You want to be on it and then move up. Don't
wanna,
catch a moving.
You want to be.
There we go. That's the good one. Don't catch a moving train. Yeah, it's gonna rip your arms off, mate.
Yeah, because that's going to destroy you. The rocket, you can grab onto like the fins and you'll get dragged up. The train, you just.
If you don't get incinerated by the absolute heat wave that comes out from the bottom of it. But in this case, this is not a good week for me trading wise. Like I'm gonna be honest with
you.
This week has not been good. I've only won a singular NASDAQ trade, which was this morning. I think I've lost 4 NASDAQ trades this week, 2 on Monday and 2 yesterday. I've lost the UJ trade, and now I've won the gold trade as well. And I've kept all of them to 1-to-1s, except for the New York ones. I had a New York 1 to 1.5 on Monday, which ended up being a loss. And then a New York 1 to 2 yesterday, which ended up being a loss as well. So minus 4% and then add 2%. So I'm minus 2% for this week on my account. So it's so we're only midway through the week. I can still recover, I think.
I was going to say today, midway through the week, it feels like Friday or Thursday, at least, to be honest.
Thank you for this, Philippa. Thank you very much for this. Like, even though right now I'm feeling like, man, what a week. So, yeah, it is what it is. You're going to go through sections where you're just, it's just not going to work for you. And unfortunately, I still try every day because I have set expectations and I have set risk management. So I'm gonna try in any way. If my setup is there, I'm gonna take it. If it takes a win or it takes a loss, that is what it is. Minus 2% for this week. Okay, okay. It is what it is. Fair enough. Let's try again.
I will say Monday I did very well as far as FX. I did get stopped out a bit on NASDAQ when we had the falls. So I kind of netted out, I was basically 2.5% up before that. Came into New York, wiped out another 2%. Ended up like, I think it was 0.3 or 0.4% up on the day. So pretty similar. Tuesday also was a bit mixed yesterday. Mm-hmm. Initially up, then down. Then I did catch some of these bottoms though. Because of the prior day, I just went out. Waited for the bottom aspects. We got the Iran. It's not really Iran deal, but Iran progress, right? The headline data came through that really vaulted things, and then we just continued from there into the evening. So I did clean up on the back end yesterday, but I would still call the trading overall a bit mixed. So technically quite up. I think yesterday ended up 4.5% up net, which is quite good. But I would still call it very mixed, very like 50-50 back and forth, to be honest. So I agree with you. But that's the only thing with your 1-to-1s that you can't. If you then pick up on some good points, you're going to be handicapped on the upside. So, right?
Yeah.
Yeah.
So this the reason why I've done the one-to-ones during London is because in general I would like to participate because there are nice movements during the London session on NAS as an example. And
Yeah.
I thought we were going to have this nice little movement here. So we broke, we had the low over here, we made a higher low, we made a higher high in relation to this one, we came back into it, it looked like we were going to push off, we came back, we rejected, and I was like, yeah, great, I'm going to enter right there, which I did. I entered right there. 1-to-1, what happened? It just, okay, fair.
Yeah.
Okay, I'm going to wait for New York, and then let's see. No problem. So New York, it opens up, pushes up, comes down volumetrically. It looks like it's about to continue lower because it basically just, looked like it came back into this area over here. Now, instead of entering like somewhere over here as an example, I waited for it to do the drop base drop. And it did. It dropped, it made a base, it started to drop, I entered, and it just went a little bit into profit, like let's say almost a 1-to-1, and then just back up. And I was just like, okay, fair. This was just silly. The move had already happened, no problem, that's okay. I accept it. But today, or yesterday was minus 2%. Just like that. And it's just like, okay, cool, best of 3, whatever happens first. 2 wins, 2 losses, I'm done. Today, I have 1 win, I have a loss, and then I have another win. So I'm done. So I'm done for today. So the gold trade has pushed me into profit, whereas the JPY trade and the NASDAQ trade basically balanced each other out for today. But still, it's like, okay, you're 2% down still on the week. Kind of sucks, but it is what it is.
Yeah, that's right. I if you allow me, I feel like my throat is very dry. I need to get some water. And I'll come back because I've got a question around that regarding difference between that and poker, which obviously big poker player. So
okay,
I'm curious.
Go and
back.
save your parched throat, and then we can discuss it, mate. So, I misclicked this, sorry. Murdom is saying 4.5% in a week is still strong. Yes, but it was minus 4. So Monday, Tuesday was minus 2 for both of those days, so minus 4. And then today was 2% up and then 1% down. So I'm basically up 1% from that. So what, minus 3%? For the week so far. Technically not minus 2, I miscalculated. But yeah, so it's not a great week. I've done good weeks. I've had really good weeks. We're close to, let's say, 9%. That's including a bunch of losses as well. But in general, this has not been a good week for me. So unfortunately, it is what it is. It's one of those things where your strategy is going to go through a bit of a downturn, which is expected, because there's no such thing as a 100% winning strategy. Doesn't matter who tells you what. It doesn't exist. There's no such thing. You can try and mitigate your losses as much as you can, and you can try and limit how large your losses are in general, but you're not going to never lose. You will lose at some point. But yeah, 4.5% is a good week, I would think. 4.5% is an amazing week, in my opinion. But I have been picking up my risk from 0.25% to 0.5%, from 0.5% to 1% per trade. And it seems as though ever since I've gone over to 1%, I've kind of taken a bit of a knock. But it's okay. It is what it is. Euro USD buy or sell. Let's have a look at Euro USD. I don't like Euro USD at the moment. The problem that I have with Euro USD at the moment is the fact that we're obviously in a bearish direction. It's been bearish since the 11th of February, so give or take a week now. All right, but yesterday we had this very nice attempt to carry on pushing lower, which then immediately got taken up. All of that got taken up. All of this took everything back that we had pushed lower, which is fine. That's okay. We can do that. But now instead of us pushing lower to try and test yesterday's lows, we've been kind of like just stuck in this upper section the whole day so far. So I would go so far as to say I'm not buying or selling right now. I'm waiting. I am waiting for breakouts. First and foremost, this area where we are stuck right now, let's first go over to the hourly. Okay, so this base area that we had over here has been tested once. So I want to see how price is going to react in this upper section of the Tokyo portion of today. I want to see how we react once we get back into this area. Are we going to start pushing higher, meaning that this low that we have here is a higher low in relation to this low down here? Or is this whole movement that we have now, this rejection over here, the signal to start pushing lower? And the reason for that is because if I just move this out of the way and remove that one and have that one out of the way, if you just look at today in a nutshell, you have this, okay, we have this downward trend that we have here, but what we also have is we have a new base right there, which we've already broken above once, and we wicked again on the second, on both of these we've wicked, and this is just on the hourly. If you go down to the 15-minute, it does look like it's a bit of indecision. So where's the follow through to push it higher? That's kind of like where I'm sitting at the moment. So a little bit of an area of consolidation that we have here, which has just been wicked above, and it seems as though it's a little bit indecisive. I'm going to wait to see what Euro wants to do. If it wants to start pushing lower, there is a potential to come and test all the way down here. Fair. But first and foremost, we need to at least break lower than the London low, the current London low, which is 1831 to 1828. And then if we're going to carry on pushing higher, we need to at least break yesterday's highs and hold it. So break and continue higher. So you want price to break above, continue. So these two areas right here are the two areas that I'm the most interested in to try and sell or buy from. So as it is right now, I don't think that there's a signal on EU to try and buy or sell. But once again, always remember this. I am an intraday trader and I trade reactionary. I don't try and predict where the market's going to go. I react based on the market's reaction on certain areas. So all I'm going to do is I'm just going to wait until I see the right reaction. And if I see the right reaction, I will get into it. And another thing is I am a trend following trader. So I want to see a trend established and then a continuation of that trend to push it lower, as an example. Or I want a bullish trend to be established and then an attempt to push price lower, failing, and then confirming the price of the market. I will try and get a buy somewhere over there with my stop just below that attempted swing, and then looking for a 1 to 1.5, depending on where I am. So in general, I'm not seeing anything on Euro at the moment that is making me go, I wanna participate whatsoever, you know. Mm-hmm. But like I said, we have these two areas that I feel like needs to be broken, and so I'm gonna call them my breakpoints. These are the breakpoints, the areas where I want to see price break above or break below and then continue. So in this case, I want price to break above this breakpoint, retest it, continue. I want to see price break lower, retest, continue lower. That's why I call them breakpoints. Anyway, you wanted to have a poker-related question.
Yeah, so in terms of how you don't really change the risk reward, right? So I think I've sort of touched on this in the past, where are there not some times when you see like this is a solid trade that you could layer into, or there's that higher level whatever, and so it's kind of like when you've got a good hand in poker per se, you're like, okay, I need to actually press the pot with this because, right, like a certain confidence level. Just like with how you were saying with some of those trades before, where got knocked out on some, but others came through very nicely, but you could have held it a bit more, right? Which might also clean up for
those
dirtier
yeah,
trades that got knocked out, right?
Okay, so here's the interesting thing about poker is that overall you have the what do you call it? You have a predictive model, all right, around poker. So to a degree, you can, with reasonable accuracy, can determine whether or not pushing would be the optimal decision at that point in time. So how you would look at it is like, you have some set variables. You have some known information. I have an opponent. This opponent has certain tells. This opponent has certain frequencies at which they're betting, checking, folding, that kind of like stuff. And if you pay attention to it, you kind of like build this idea that, okay, this person has this certain way of going about things. So you can categorize this person pretty much. Are they a tight aggressive player? Are they a loose aggressive player? Are they a tight passive player? Are they a loose passive player? So you can put them in these boxes, and you can kind of, to a degree, figure out what is the most likely reaction that this person's going to have. Now, if I have, for argument's sake, a really good hand, statistically, let's say I have a flush draw as well as a straight draw coupled to it. So I have ace 5 of spades, and I've got 2 and 3 of spades on the board. I need any 4 and any spade in order to make a decent hand, so either a straight or a flush. So I know, because of the amount of cards that's available, what is the likelihood that I'm going to hit the card that I need. So I've got 4 spades. There's another 9 spades potentially available. I have one of 4 fours that I need to hit, of which one of them will be a spade. So that falls part of the 9. So I have 12 cards. That gives me 24% to hit my card on the turn in the river if this was on the flop. Okay. I have to take into consideration my opponent's range. I have to take in consideration my opponent's tendencies. I have to take in consideration what that person is willing to pay me and with what hand. So if I assume he's got a decent enough hand, maybe he might also have a flush draw. He might not have the ace of flush, the ace for the ace flush, but he might have a king. How much is that worth to him? And then that will dictate how much I can push to try and get out of this opponent. And then obviously at some point I may not even get my card that I need, and then I'm just going to have to try and sell the correct story. Now the difference is, when it comes to trading, is that you have these semblances of these like little, okay, price has done this at this point over here. I can try and hold it up to there. But at the same time, I also have this set expectancy. I know that if I'm going to go for a 1 to 2 or a 1 to 1.5, over the long run, my expectancy is kind of, I'm going to have like I wouldn't call it logarithmic, but it's going to have a nice progressive expectancy curve. Let's put it like that, which is very difficult with when you're letting some run and you're letting some kind of like just, end up at 1-to-1s or whatever. And I haven't yet gotten to that point where I can say, you know what, I think I should let this one run. Because I've tried doing that in the past, and then it's just like, oh, this feels wrong. Don't let it go. So I think it's that, like, knowing when I should push based in poker versus when I should push based on trading. I'm not yet aligned to. I'm very comfortable with the one, knowing when to push with poker, but with trading, it's kind of like I like the fact that the unpredictiveness, I can predict a little bit of what my outcome will be rather than where it actually is going to go. So I have a semblance of control over the outcome to a degree. So that's kind of like, I don't know if that like answers your question, but
yeah,
it's a
it
very
does.
thing.
Yeah.
It's a very interesting conversation.
Yeah, because I think that extra portion might come from at least a partake of macro per se. The same way when you sort of quantify cards on the table, probabilistic type stuff. You know, the chart structure, technical structure can have a lot more variance, but if you got that plus the sort of macro backdrop, that reduces your variability once they're aligned, right? So anyway, just very interesting. So yeah.
I love the chats, especially since we do like poker Fridays and whatnot. I love chatting about this stuff because nobody asks me about this. Like I have this, like, I don't know, I have like this vat of knowledge when it comes to poker, and nobody asks me about it. And it's only you. Everybody else just wants to play, and it's just like, okay, we want the bare bones. I want to know how to bluff, how to. So it's like, okay, well, bluff is a science in of itself. But you're the only one that ever asks about the poker stuff. And it's just like, well, there's such similarities between trading and poker that I think it's an easy transition from one to the other one.
Very much.
If you also have the psychological side, because poker, I feel like, is just as psychological as trading is.
Well, how many hedge funds and all that kind of stuff have like poker is almost like an entrance exam when you're trying to apply, and if you're absolute rubbish, right, they literally have, get all the interns, that kind of stuff, to play and, play all these games. And if you don't necessarily have to win, but it's the demonstrated thought process, that kind of thing that they're looking for.
It's the risk, the understanding of risk. It's the understanding of the psychology of it. It's understanding
and the layers of variability, second, third, fourth order consequences, not just like the top layer, which is So
I do feel like in poker you have more decision points than in trading.
Yeah, and definitely more control, relatively, to the degree that the variables basically stay the same per se, roughly, outside of the patrons on the table. They're going to change up on you as rapidly sometimes as the market.
Well, that really depends on what format you're playing. If you're playing in a tournament or if you're playing cash or whatnot, the amount of people that
you're going to go through,
can change. Like this. But know that if myself, Victor, Samir, and you, if we were all to play poker, after playing poker against you a fair few times, I would kind of like understand where you're coming from. So if Victor drops out and LJ drops in, I can be like, LJ is more of a this, okay, and then I can adjust ever so slightly to accommodate, which is much like the market as well. Understanding different assets have different characteristics. So it's just adapting and making sure that you apply the right strategy to the right asset, and then there you go, Bob's your uncle.
If I may, hello everyone. Before
hello,
I
Victor.
say anything, my esteemed colleagues and everyone watching, hi. I want to say a few things in the comparison. I'm not a huge poker player, but I do love the game and I do play from time to time. From my not so experienced poker player point of view, the differences between trading and a few things that I noticed that I can say is, one, at poker, because of the structure of the game, you are bound to make a decision. You have to make a decision, at each round, and you don't have that.
And then you can't change it. as well,
I beg your
right?
pardon?
You can't change it after, not really, right?
Yes, yes,
Whereas, yeah,
exactly. It's
almost like
kind of
blackjack.
irreversible.
You're forced.
Yes,
Yeah,
exactly. So you have to make a choice, and you're basically, because of the structure of the game, you're forced to make a choice. In trading, um, you may have a little bit more flexibility. You can say, I'm just gonna skip this time around. I'm not gonna participate. You can do that in poker as well, but once you start, you're in. You have to make the rest of the choices. Um, and that's one thing. And the other thing is that, in poker, you actually, as a poker player, there could be a much bigger edge, because your edge is not about probabilities only, but about knowing the risk appetite of the counter party. In this case,
counterparty.
your
Yeah.
players, who is at the table, and that changes. So you may have, if you knew what level and how they play at a certain part, at a certain table, you may have a different edge than when you go to a championship
Exactly.
or a tournament.
Exactly. Yeah.
And that's a difference we don't have in trading. I mean, if you're trading EU,
Not as retail traders, right? If you got billions of dollars, yeah, you can squeeze people out of markets or out of certain stocks, obviously, but not for us, right?
As I don't
not
know
for us.
anything about poker thing, so as a new guy, what are the fundamentals of poker? How you play this? What is the step one of a poker thing?
So step one is I will send you an invite to a Friday poker game, and then you
Okay,
will learn on the fly. That's step
Step
one.
one
all
is just
right,
go all in and then
all in, full margin.
full
What
margin.
is the term of full margin? Like in trading, we use full
It's
margin.
it's
In poker,
it's
but
effectively putting your whole risk capital on the table and saying I'm going to full margin this one position, and if this position goes to SL, I lose everything.
so in poker also, you guys use like I'm full margin, or you have some other term?
All in.
All
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 in.
in.
in. Yeah,
Okay,
pot
All
committed.
in.
Yeah, yeah.
I'm all
Yeah.
in. That's
Yeah.
nice.
Yeah. Anyway,
Apparently, Will's pretty good at it, right, Rich?
what, going all in?
Yeah, yeah.
Yeah,
Remember
but that's because Will has got that dumb luck, like
that
that.
was ridiculous. That was like
I'm not.
10 rounds of
I
all
don't
in.
know this game. I'm just gonna go all in with every single hand, and he wins every single hand, and it's just like,
Yeah.
anyway.
Maybe a beginner luck.
Yeah, very much. Gentlemen, I am going to love and leave you all. I have a pounding headache. I don't know why. So I'm going to go and remedy that for just a little while. LJ, mate, thank you very much for assisting me today with Will being on a day off to go and celebrate the Chinese New Year. Samir and Victor, I hope you guys had an amazing day today so far, and then I hope you guys enjoyed yesterday's 10-year anniversary event. And then good luck with today's trading as well.
Indeed.
Thank you. We
Yes.
hope
Cheers,
you
man.
get better soon. Although you look fine to us, but I mean, we hope you get better soon.
It's just a headache, but it's like in my ears. It's just like I can hear the
Have some
in the ear.
electrolytes and salt water and all these things. I think it will be
I just think
fine.
I need to drink
And
some water. I think that's
yeah,
what I need to
water.
do. I'm yeah. Anyway, guys, have a
All
great one.
right.
I will see you guys
Take care, Rich.
tomorrow.
Yes.
Indeed.
Thank
Take care.
you. Thank you, Rich.
See you, Rich.
All right.
Peace. I will have to say bye as well, guys. I've been here for quite a while now. Same deal. I had food poisoning the whole day today, but I have survived. So hopefully I'll rest up,
Okay.
just like Rich, and I'll see you guys tomorrow. So peace out for
Take
now.
care, LJ.
Tomorrow
Take care.
and take
Leave you
care.
guys in
Have a nice day if
capable
that is
hands.
day. All
Okay.
right. Take care.
You're
Yeah, I'll leave
a
you guys in capable
diehard
hands, and
LJ.
I'll see you guys tomorrow. Good luck,
Take
Samir
care. Bye
and
bye.
Victor. Thanks,
Yeah.
guys. Ciao for
Thank
now.
you.
Take care.
Peace.
Take care, LJ. All right. So let's fix
All right. We are here.
the camera. How are you doing, Samir?
I am amazing. Thanks for asking. And how are you?
I'm fine. I send from my side here. I send you a brotherly hug. I see you. I
Yes,
appreciate you. I'm happy to see
same
you.
here. And thank you for everything, and thank you for asking. Also, it really means a lot. So yeah, a brother hug from my side also. And our viewers, thank you to you guys as well. And hope yesterday you enjoyed the event. I was sitting here, I was seeing the event online, but there were some moments I was smiling here and there because of a few points that was made in that particular event. So it was really nice event, and we are here today with Victor and me right now. So let's do some analysis and let's share you some views on charts. And as the stream, I think ending time has increased 30 minutes to the current time that we used to have. So let's see if today we have any opportunity on US 30. I will be taking a trade live here with you guys, or I can share my views, what kind of plan I have for the particular day. Once, of course, the NYSE opens, I can, share with our viewers my thought process, or how I am supposed to enter in that particular trade, which is going to be in US 30. And I can see you are having Euro USD. You can continue with the analysis. Let's see your thought process or your views on, now you have NZD USD. Let's see. You
Yes,
can share.
I'm gonna switch back um, yeah, I'm gonna switch back to EU, but
Okay.
before we do so, I just want to check, what the expectation, what the move was with. We had news. We had the rate decision on the Royal Bank of New Zealand, and that was, during the Asian session. Just wanted to see what the direction was and how the market reacted to it. But let's go back to EU. So on EU, I think it's getting very, very interesting. I think it gives it's lining up for a possible trade, for a possible swing trade. And let me explain to you what I mean by that and why do I say this. First of all, we have someone said, Peter says, euro dollar, I'm going for a buy soon. Good stuff. I see that. Let's take a look on the. I'm gonna do the top down analysis, and I'm gonna give you guys a couple of setups that you can use. And this is beforehand, so there's plenty of time for you to wait for them and let them trigger, and then you can, or not take that trade. So on the higher time frames, on the monthly, we are getting near a fresh order block. Right, the market, I'll tell you, in the lower time frames, the weekly and the daily and so on, that there is the market is pushing lower. We can see that on the lower time frames. But if the market actually gets to the bullish order block we have left behind, which was actually created by an outside bar, that could be a monster, uh, a beginning of a monster setup. While you have a monthly structure that has the potential to go, not only take the current high of the high of the current candle, but actually go retest the recent high on the monthly time frame, meaning all the way back to 120.80 something. So that's one thing. But before we get there, in my opinion, the monthly only gets interesting when we actually get into the order block, and either the weekly creates a new structure, or we continue to interact with the lower order block, which is, so it's we're still quite far away from that. So the monthly setup is a great one, but it's still, it still needs a couple of steps before we can actually use it as a signal. However, we are on the weekly time frame. We have a fresh order block, and yes, we are retesting it. So this is the immediate retest. The expectation is whatever caused this move, this candle, this move to occur, is likely to come back to the market and do another push, without stating whether that's going to be a continuation trade or not. It just there is likely to be some kind of a reaction. It's, maybe halfway through, maybe to the top. You can be the judge of that when you build your case and you assess how confident you are in that signal, so to speak, that structure. But we are currently in that weekly, so we do have a weekly reason to go long. And if you go to the daily, you can see yesterday we had a beautiful, it's a chef's kiss of a beautiful retest of that daily order block. Look at this. So this is the daily time frame. You have the order block that was created here, went all the way down, and this is the order block. And what does price do? Price comes all the way down, boom, has that reaction. That's one first cue that we have buyers coming in at a daily order block, which is within a weekly structure, meaning that we have the first signal of a possible reversal for a possible reversal going into that order block. Maybe it'll squeeze a bit more. That can happen. That doesn't invalidate the structure or the setup, but for eventually to push up, to retest, as I said, maybe halfway, maybe all of it, and who knows, maybe even a continuation already. So we have the reaction. The reaction was very, very tale-telling. And so we have a reason to go for a long. So the next on the daily, so we have the weekly, the daily telling us that they're lining up. The next step is, of course, the H4. Is the H4 also well telling us or giving us some level we can go long from? So if we go to the H4, we did not in the current price action, right? In here, before and after reaching that daily structure, we did not create bullish structures yet. So that could be an indication that the market isn't ready yet. However, there is a quasi that can be found, a reversal pattern that is this one. Let me double check. Actually, it is the neckline is a bit closer, but it does not matter. We have the quasi, and we come back to one of the two entry order blocks, and that's exactly where we had the reaction as well. So I'm very keen to be looking for how the market reacts when we get back to this order block. Okay, but it needs to, it hasn't given us it needs to give the signal. It needs to print the bullish price action on the H4, and it hasn't done that yet. If you look nicely, it did create and take out a bearish order block, which is also a good sign, right? It did invalidate that structure we had, but it couldn't invalidate the second one, right? So it's not completely broken. So the jury is still out whether or not this H4 will signal or not, but we can be waiting for price to come to this level, and then we start looking for entries, at least for the signal on the H4. But if you go to the H1, you can see that we are creating beautiful levels. Let's take a look here. So this is the H1 quasi, right? So we are not on the H4, but on lower time frames, we are creating bullish structures, breaking the structure of price action. And so on the H1, we have this as the area of interest, and let's measure that. It's 19 at a ATR of 65. That is tradable. So that means that you can use this area for a possible entry, or at least not an entry, an area of interest. Especially, you can be, if you want to, you can be a bit more selective and only use the overlap. In this case, you don't have to use the overlap because it already touched the H4 from the quasi. So you want to be waiting for the overlap to be, the H1 to be retested. Once you get in this area, you can go to the lower time frames and start looking for either after a squeeze, right? As long as it doesn't invalidate it on the hourlies, that's fine. Or before, even without any squeezes, look for reversal patterns, something like this. And on, let's say, the 30 minutes, the 15 minutes, the 5, whatever floats your boat, with something that indicates, the bigger the time frame, the more powerful the signal is, but the more chance that you're gonna get not so sharp entry. So look for those quasis, or maybe double bottom, maybe a divergence, whatever it is that you use as a tool to indicate a possible reversal is coming in, and you want to be taking that long. Whenever you get that signal, put your stop below the invalidation, and if there was a squeeze, let's say there was a squeeze, you want to be putting it below the squeeze, right? So, and you can then target, depending on how the market evolves after you enter, you can target then the top of the quasi, which is this, and eventually, if the daily pushes up, in this case, let's see, yes, you could, if the daily, if we do have a bullish close above this level on the daily time frame, then you can start looking for perhaps targeting the breakout level that we have from the September the 17th, something like that, in that range. Or maybe on the H4, you can look for an possible entry. I don't see anything else. I would still target that. Maybe one of these stops can also be a great place to be putting your target, expecting, depending on what the market actually gives us when that time comes. So it's a counter move if you look for the lower time frames, because the market has been going quite bearish, right? It's been breaking lows consistently, but the expectation is, if you're taking this trade, is that we have hit a level that will change everything else, right? From now on, maybe for a day, 2, or maybe a couple of days, we might be seeing price going in that direction. Only if, right? We don't know for sure, but if that happens, then it will likely come with some reversal pattern. And if you can read that, then you can get in somewhere related to that structure and catch the move. That's my view on EU. And actually, we can look for possible entries, as maybe I can even share the areas of interest to me. Right now, there isn't anything on the 5. If you look back a quasi in here, there is one area at the end which may or may not be useful. Let me double check that. Let me mark this. Don't forget, if you are enjoying this stream, there's one thing we humbly request you to do, is to like and subscribe. Yesterday we hit 100K subscribers, and I congratulate you as well, not only the team and everyone who worked for this stream to become successful, but you as the audience, because it is you who are subscribing and enjoying these streams. So let's see, we do have an area here which has been already is bound to be broken. Officially, it has already broken, so that one is gone. And then the other structure we have is the order block right here, which we'll have to wait and see if price comes to that area. I'll put an alert on it there. And but it's not only the structure to the left, but also you need to be waiting for possible reversal before that happens. It looks very ominous. I can give you that, how the market is pushing lower with a lot of power. But don't be afraid. I mean, have a plan and trade your plan, and put your stop in a logical place, risk wisely, and sensibly, and then it shouldn't be an issue. You take a loss, be prepared for that loss, because we all take losses. There's no you can't avoid losses. So make sure that when it does happen, and it will happen, that it is manageable, right? You don't lose your shirt in the game. All right. What about you, Samir? What are you looking at for
Yeah, you
NAS?
mentioned before I share my views on NAS, you shared a very good point, which was regarding to risk management, and I would like to add one thing in it. I think the one can eliminate this type of fear or fear of losing. I think the one can eliminate this feeling is by having confidence in that system, and it is all linked to that confidence. And if you have let's say 1 2 3 years of experience trading that particular system, I think that's how you will gain the confidence, and that's how you can defeat this type of feeling that I know a new trader face, which is they are fear of losing a particular trade, or they are kind of a fear of being in a loss. So if you have
Mhm.
confidence in your system, you know, even if that is a loss, I know I can recover it in next trade. Or even if that is a loss, I know I have the confidence in my system that this system will make me out of the drawdown if I follow this system to the T, or if I just follow my trading plan. And with that being said, I think let's see US 30. Maybe you can put my screen on.
Mhm.
Okay, right now we are at US 30. I don't know why my whole screen is shown. I'm just gonna reshare my screen. Just hold on a second.
Yes, no problem. I'll switch to mine. Yes. So let's take a look in
I
the
think now it
meantime
will be
for. Okay,
fine.
let's switch back
Right
to
now,
yours.
please. Okay, now it is fine. So again, let's see how many views we have. By the way, I just checked. Last time it was around 250 views.
We
Let me
have
let me see
200
now.
and let me check. Maybe
Yeah, I'm
right
checking.
now we
We
have
have 208
2 and 8.
right now. Okay. So, first of all, welcome to the new viewers, and let me tell you how I see the charts on a day to day basis. So, the old one knows I use these EMA and 15-minute charts a lot. So, right now, if I see just the 15-minute, I can see this market structure, which is this. So right now I'm having only this information. Okay. So till here, I would have been bullish till here, this leg, because price is also above the EMA, which is 200 EMA, and the other one is 50 EMA. These are the main pillar of the strategy that I use on a day-to-day basis. Every day I use this strategy, and this strategy has helped me get couple of payouts. And right now also I'm up like 7% on my account. On Monday bank
Ooh,
holiday,
nice.
I took a trade which was 1% risk. I was already up 6%. I was like, okay, I can afford 1% loss. I will be up like 5%. It is okay. So Monday was a winning day. But Tuesday, as I mentioned couple of times, I don't trade on Tuesday. Yesterday was no trading day for me, but today I will be trading. So the point is, till here we was bullish, right? To me, because on the 15-minute I'm seeing this upward type of momentum, and we are pulling back. So I was bullish till here. But now, if I see there is slightly change in some kind of volume or some kind of behavior in the price, we are not having strength to go to the upside. Right now we are going bearish. So now the question is, will the NYSE let the price to give the volume to the downside, or will the original bias, which is this low, will be protected and we see impulse to the upside? These are the two things which price will do. Okay, there is no other thing the price can do. Either it will go up, either it will go down. So let's make a plan. What if it goes down and we break the structure and we close below the EMA also? So the scenario number one is 8 p.m. my time zone, which is about 30 minutes. It is in 30 minutes. The NYSE is about to open. So if we close below and we see the momentum to the downside, then definitely we will be, or I will be, looking for sells. And what confluences that I have, I can draw some areas here and there. My point is that there is going to be always an area that you can draw from where the price is going to reject or react. So before that, I would like to understand what kind of behavior price is showing, so that I can use some areas as a significant area. Okay, price may can reject from here as my bias is bearish. So the first scenario, as I mentioned, if price decided to impulse to the downside, then what will I plan? So let's say let's see where the 8 uh, p.m. is. It is here. Okay, right here it is 8 p.m. Let me make it darker for you guys. Okay, so okay, here it is the NYSE open, and let's say here we impulse to the downside, and then I will look for a small correction so that I can take advantage of this bearish leg which is getting continued on the 1 minute time frame. And on the 15-minute time frame we are showing momentum to the downside, and EMAs are also to the downside. There will be multiple confirmations for sells if this scenario happened. But again, if we reverse this thing, and if the 15-minute is getting respected, let me delete this thing. I will just keep the 8 p.m. open for me. Okay, so 15-minute, let's see if this EMA is respected and we wick to the downside and immediately goes back up. So then the bias will be bullish. Why bias will be bullish? But just keeping the, just anticipating this type of structure is getting respected. And yes, buyers are still interested, keeping this type of structure in mind. Then I will look for the same thing, which is here. Let me, I have a terrible drawing here, I'm sorry guys, but you got my point. So if on the 8 p.m. we go to the upside, and let's say we impulse to the upside, and then I will wait for a small type of correction, and then I will take a trade on the break of some trend lines. And now the stop loss placement is the key here in this type of strategy, or this type of trading this way, or looking at charts this way. I always keep the stop loss below or above the 15-minute. So let's say I get the entry somewhere around here. If my structure is here, I don't mind keeping my stop loss this wide. Even if my entry is here, I will still keep my stop loss here. As you mentioned, you should have a logical stop loss. To me, this is the most logical stop loss. Why? Because let's say if we start the impulse from here, this is the last area from where price impulse to the upside, or it broke the structures to the left hand side. So for me, this is the very logical stop loss. If price breaks this, it means this particular structure is not getting respected, and I should get out of the market. So it is very simple. So my stop loss placements are always below or above the highs after my entry, and I don't care how much wide stop loss I can get. Right now it is around 260 points. Some days I can have 400 point stop loss, depending upon the volume or the range. But I don't mind that. As you mentioned, Victor, we should always keep a logical stop loss. To me, this type of stop loss is logical. So these are the two scenarios. Of course, if market go to the upside, as I mentioned, I'll just wait for some impulse and correction. That is it. And my job is done for the day. Then I just wait for the outcome. If it is a losing outcome, I have to accept it, because I have confidence in my system that this system works, and I already won on Monday. And on Tuesday I don't trade, as I mentioned. Why I don't trade? If you are a new viewer, you might be wondering why he's saying on Tuesday why he don't trade, all these things. So let me clear this thing. As per my experience, or the past experience, trading experience, I have seen on Tuesdays I lose 70 to 80% of the time. So I just stopped trading that day. Of course, this habit took time for me. I was still trading on Tuesdays like 1 or 2 months ago, but slowly I eliminated this thing. Let's say on we have 4 Tuesdays a month. So 2 Tuesdays I was trading, two I was not trading. I was still testing this thing. So slowly I transitioned to this type of trader who has decided Tuesdays are not for me. So I think this is very important thing. Now a new point is here. So let's say you want to make your trading better, you want to follow your trading plan, then it will not happen overnight. It will take some time. Let's say you are taking 4 trades a day, you want to go to 2 trades a day. So slowly you will get to 3 trades, slowly you will get to 2 trades, maybe someday you still take 4 trades, you realize that thing. So slowly you can transition into that type of trader that you want to become. But for that, I think you need to take some actions. You need to have you have to journal yourself. Like as I mentioned, it took me some time. It didn't happen me overnight. Like today I'm deciding, like tomorrow I want to follow kind of a support resistance thing. Like I see some potential in that. So it will not happen overnight. It will still take time for my body, for me, for my mindset to get used to that thing, so that I can follow that particular thing. So as per the analysis, this and gold, somebody saying gold. I'm not a good gold trader, but as per my views, I can share my views. Then, of course, uh, Victor, you can also share your views. But if I go to the daily time frame, okay, daily time frame right now, we printed a bearish candle here. Let's mark a day high and day low for this candle so that we can see what type of ranges do we have. But if we see the normal structure, I think it is very bullish. Like this was the last low, and we still haven't breached this low. And even if we breach this low, I will still not consider that a downtrend, because first low is always not always like maximum amount of time can be a liquidity move, so still price can go to the upside. But as per the daily, we are bullish. So if you are some type of very long swing trader, so if you catch some longs from here, so I think having a bias which is bullish, I think it is okay. But as per the intraday type of moves which I normally take, I'm not that type of trader who analyze the charts and just follow that particular footprint. For me, I am an intraday trader, and I like to want to get out of the markets in a day or maybe max 2 days, so depending upon the volume that we have. Let's see what today gold can do. I don't want to analyze what gold can do in 6 months, in 12 months, because I'm a trader. I want to catch some trades today. Let's see what gold can do today. Day high, day low as a marked. This is a wick type of candle. Normally these type of candles get tested. When these type of candle forms and left untested, these type of candles do get tested. For an example, this was a type of wick. This candle tested this wick, so it may can get tested, this particular wick that I have marked, in near future. But if you see here, this all candle also don't have a wick. And right now I'm just marking some areas where the price potentially can go in upcoming days. So we have some areas here. Let's go to the 4 hour now. 4 hour wise, we can see how candlesticks are performing, or we can see some trend lines here and there. We can see some structures. So all these things, 4 hour wise, I can see this type of trend line going on. So price is right at the trend line. So if we go to the 1 hour, EMAs are also bearish. If we go to the 2 hour, EMA is still the bearish. If we go to the 30-minute, EMAs are bearish. I think on the 15-minute, then the EMA will go bullish. On the 15-minute, there is a trouble type of sign. So this is the main thing that I follow on US 30 as well. If the EMAs are not in my favor on any of the time frame that I follow, then I don't enter. Let's say if my bias is bearish for this one, and on 15-minute, which can be the entry time frame for you, is showing you bullishness here based on the EMA and based on the structure. So to take some sells, I think you should wait for price to show you some bearish momentum along with price closing below this EMA. Then you can take sells. Let's say your sells is here, you can easily put your stop loss here. I think this move will be, if it was me trading gold, and if this having this type of bias, this type of entry will give me more confidence rather entering here or taking a risk entry, keeping the stop loss wide can be here. This doesn't give me that much confidence. This will give me more confidence, like yes, I have more things in my favor. I can be comfortable in sells now. I don't care if my target is less. So I'm getting 1 to 1 here. It is okay for me. I just want to end the day in the win. Of course, I'm not forcing the win at the same time, but I want to make sure that I follow the plan, and I can have as much confluences that I can have when it comes to taking a particular trade. So sales wise, I think price, let the price come below this particular EMA and close below this EMA, then it will be more better for you to enter in this kind of move. As per the longs, I think you have to wait for the breakout of this trend line. Then definitely we have this area first, and this area can be the next area where the price can go. So if we close above, then I think it's good for buys. And again, keep the logical stop loss. To me, the logical stop loss can be this. I know some people like to take smaller stop losses, but if you're a new trader, try this way. I think you will get a little bit more wins, and your confidence will be a little bit high, and your trading will get a little bit better. And at the fivers, maybe you can pass more challenges, you can get more payouts. So this is just small advice from my side. So for gold, above this longs, if we rejected this and we close below the EMA on the 15-minute time frame, I am looking for sells. And the long term view, as I'm not that type of trader, I think I will not be that much kind of a professional type of a guy who share the long term view, kind of a swing trade, when I'm not doing that thing. So I'm an intraday trader, so that's my bias for the day. Let's see how it sets up, and we can plan accordingly. But I will be just focusing on euro US 30. And yeah, that's some analysis that I did for you guys. And somebody's asking euro USD. Victor has already covered that thing, so maybe you can share some thoughts on euro USD
Yes, let's take a
for
look
our
very
people here.
quickly. Yes, let me take a look at it again. Let's just revisit. I'm not going to do the top-down analysis all completely again, but this we are re-interacting with a fresh H1 order block that is completely valid to be taken, and because we have overlap with the H4, right, the quasi from the left, I'm particularly looking for a long from that area, but actually it's valid to take the whole structure as a valid area of a possible reaction, of a possible reversal. But the reversal has to present itself, right? You don't just think, okay, it can react here. I'm gonna go in because it has to. It doesn't have to happen. Not every structure is reacted upon. So you have to wait for the actual reversal. That means that the market is right now is pushing quite strong. Uh, and even though, yes, it did activate the quasi here, meaning you should be looking for the possible reversal. Not all quasis will result in a reversal. It's just the quasi is an expression of an attempt of the market to position itself so buyers can come in and push it higher. But sometimes, there's another bad, news coming out, or perhaps simply it's not a strong enough level, and price can just continue to go lower, and eventually you will see that weakness, 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 and no quasi being formed. You don't have to be stubborn. You just have to understand that and that means that the market isn't ready for the reversal, and you shouldn't be getting into that trade. So that's EU is, in my opinion, is uh, it's not giving us any signals yet if it wants to or not for the reversal. If you look for the this kind of a one-sided movement is indicative of predominantly sellers being active and dominating. That's a strong sign. You need to watch out. You need to be extra careful, extra selective with the reversal you eventually take. It has to be of a good quality, meaning a good time frame, telling you not just on the one, but perhaps on the 5 and the 15, telling you that there is a reversal and price action is reversing back to bullish. But that's not happening right now, so there isn't anything. I mean, you could have scalped the reaction we had on that little bullish candle. Is we It was a reaction of about 4 pip, not that much, but I mean, if you maybe that's all you needed to get to your TP if you're a scalper. But the actual reversal is not happening. At least I don't see it. If you go to lower time frames, you can see that these are the reversal, the necklines on the minutes, which is the first, the lower time frames that most of us will be looking at. There is all these reversal, all these quasi not being even retested, at least not now. And until those things don't start getting those levels, don't get retested and broken, there's really nothing to do than just observe. So that's on EU. And looking at gold, someone asked about gold. Uh, let's take a look at the someone asked here, Prabakarani, still that 5 pip stop loss works. It depends on, sure, yes, 5 pips is actually it doesn't scare me at all. I can go as low as 2 pips sometimes. It's not always. It depends on the structure and the size of the candles. But I mean, sometimes the price goes all the way to the extreme and then reverses. And when it gives you that opportunity, you can get in on the 1 minute, and five pip stop loss is actually not that uncommon to me, and it actually works. Yes, it's a tight one, so your win rate will not be very high. But since I'm going for high risk reward ratio trades, I don't need a high win rate to be profitable. So that's on. Thank you for the question, by the way, Prabha Karani or Karan. Let's see. Yes, Karan. Okay, so we have on the monthly time frame, the market is still looking strong, even after we had some tumultuous gold moves last month and a half or so. The market is still looking strong. There hasn't been any break of any structure. If there were, to me, one of the structures that needed to be broken on the weekly time frame is all the way down here, and that hasn't been, not even close, hasn't been retested at all. We're still position for perhaps a continuation. We don't know yet. We'll have to see how price action develops. But so far, it hasn't really broken anything on the weekly time frame. So let's take a look. There are no opportunity possible signals being created on gold, and on the daily time frame. We do have a bullish order block on the daily that was created right here, and we came back and retested beautifully. So I'm waiting. If I see this, I'm waiting for the follow. We already got this follow through movement, but that follow through movement is, in my opinion, there is a good chance that that might not be all it has to offer. But the question is, where will the next move come from? And I don't see it yet, since we don't have any structures on the uh, on gold on the daily time frame. So what I would want to say is that the last structure we created was a daily from above us, and that sets the tone for the next couple of bars. So until we get back to this structure, and this would be also already a second retest, meaning not as attractive anymore, and that means that you could see price going a little bit deeper, maybe even more so. So you'll have to perhaps wait for the lower time frame, the hourlies, the H4, H8 or 12, to give you some signal again, which can then give the, that's not the right indication that I wanted to do, for the market to reverse back to bullish. But on the last couple of days, it's been bearish. Right? Since we created this daily order block, it seems like it doesn't seem like it is that the sellers have been having control. Let's go to the lower time frames to see if we have anything of interest. There is this low isn't a valid, on the H4 isn't a valid reversal head of a quasi. Neither is this one. So there's nothing we can use in here, at least not according to. Yes, I don't see it yet. The market is not reversing. This would be the first neckline to be broken for a new H4 quasi, and we're not there yet. So it looks bearish. market is making lower lows. You can see that here, breaking down, making lower highs. So the market is my bias so far would be bearish until we start breaking, these structures, the neckline for a swing trade. However, for a day trade, we can see plenty of opportunities here. If the market were to come back to this order block, you could be looking for a little push, a little reaction on the H4, and actually the market is breaking out. If you consider this bearish H4 being broken, you can expect price, if this closes in 36 minutes above this level, you can expect price to come back to use that as a flip structure, or perhaps come back and use the order block that it would be then for a push up, right? But that's just for a day trade, a move to the next level on the hourly, not necessarily a swing trade reversal as we discussed before, because so far this is the move that the market has been making, right? Making lower lows, lower highs, and we would expect at some point that the market will eventually, push lower until it breaks structure. This is the path of least resistance. But in doing so, following momentum, you can still catch a move towards those levels. Perhaps it's not a fresh order block, but this would be the area that I would be targeting for gold, unless something changes after the U.S. Open, which is in about 4 minutes. So that would be what the market is positioning itself, and if it closes above this level in 34 minutes, then I would consider this area to be a great area to be looking for that long into the H4 above us. That's my view on gold. So it means on the lower time frames, as a day trade, I'm looking for it to buy demand zone. But on the higher time frame, is this still looks weak? Eventually, we should expect price to be to go to lower levels until it changes price action structure on these higher time frames. And eventually we expect some move at least to this level if it hasn't reached that yet. Basically, these are the expectation, right? On the higher time frame, we expect gold to be pushing higher, maybe in a week's time or so, maybe two, who knows. And on a overnight, a couple of days, we expect price to be weaker, but intraday we can still push some higher levels. I hope that's helpful for those traders out there. It's just my analysis, my breakdown. Let's take a look at. Let's see the chat. There's someone asking about free bootcamp account. I haven't seen that. Have you, Samir? Do you know anything about a free
No, it is not
bootcamp
about
account?
free bootcamp, but the price has been, I think, reduced. So 20K price has been, I think, $22. So you can check that. So there is no free bootcamp. Yes, we had some giveaways yesterday. Maybe you are referring
Some.
to that. So there was free, giveaways, bootcamp accounts, high stake accounts, but no free bootcamp, bro.
Yes, I would say some of giveaways is a strong understatement. We
No,
had we had
lot. 2 millions in
dozens.
giveaways.
Yes, we had
Yeah,
a
that
lot of
is.
giveaways. Congratulations to everyone who won. They I'm pretty sure they're thrilled and
Yeah,
ready
there was
to
a
be,
giveaways for every account, like every account size,
uh-huh.
25K, 50K, 100Ks.
Yes.
So that was really awesome. Yes, I want the bootcamp free accounts. There is no free account. I don't know what you guys are referring to. Okay, Samir, how many trades do you take in a week? So I take which is 4 trades a week: Monday, Wednesday, Thursday, Friday. 4 trades a week. I do see a setup here on US 30. I think the market is about to open, so I might can punch my trade right at the open. So if you go to the 15-minute time frame right now, as I mentioned, we are already bullish as we are above the EMA. So if you go to the 1 minute time frame, we have this long trend line right here. So I think if we can close above this, I don't care if that is a market open close or that is a normal close like after the market open, but we will see definitely a lot of volume. So that's why my risk to reward tool is like this. I'm not keeping it like this. I know my entry will be a little bit above, up. And if you go to the 15-minute or 30-minute time frame, look at this, price has stuck in this range like forever. So I think if we break out of this, we definitely can tap these areas where my TP is. So I think longs will be good. So four trades a week I normally take, which is one on Monday, one on Wednesday, one on Thursday, and one on Friday. Yes, Friday. I do like this trend
And
line, and we are going to the upside as we can see here. I think market is about to open in about 1 minute, and let me get my terminal ready here so that I don't. I have like 3 4 accounts. I have to punch my trade, like 1 2 3, something like this. Okay, we have closed above. Uh, we are almost okay. We have 30 seconds, as you can see. We are seeing some kind of volume here. So let's see how it goes.
yes, the market is opening in seconds.
But if we
Me-
impulse to the downside, then I cannot do anything. My bias is bullish as per this particular price action. So let's see if we close above, that will be good. I will be having more confluences to go to the upside, which is taking longs in this particular market. So let's see how
Market is
it goes.
open.
Okay, I have to wait for 1 minute. Let's see how this candle close. 60 seconds I have to wait. Okay, we are going to the downside. So bias for the day, which was bullish, it has not been confirmed by the market. If we close to the downside, then I have to shift my bias. So then I will be interested in taking shorts. Okay, we are going down. So I think now there is no point in taking buys. So let me delete this thing. So now I have to wait for price to give me some kind of pullback so that I can enter. So yeah, I have to wait now. It will take like 30 to 40 minutes now. I know, because this type of impulse, I do need some like, let's say, let me see how many candles a small consolidation can make. Okay, it is 15 bars. So I do need 30 to 15 minutes of consolidation. Then I can plan my trades. I think still the bias can be bullish if we still close above this area, because then on the 15-minute this will become a huge wick, but then my stop loss will also be increased, which is like 280 points. Normally it was 160. So let me calculate my stop losses according to the this particular move right here, because we don't know what the price can do. We have to be ready for everything what market prints. As I mentioned, my bias was bearish, but now price is showing something different. So I have to be ready. Okay, let me do this thing here. I'm just calculating my lot size on calculator, so that if it close, I don't miss the trade. 1400. Okay. Am I frozen or anything like this?
I don't think you are.
Okay,
Uh,
okay. So stream got a little bit quiet here. So I was
No,
like,
not at all.
if I'm
It's
frozen.
the concentration because, of course, we are traders. Uh, we are
Yes.
we are first we are traders, and then we are
Yeah, exactly.
streamers. There's a question here we saw in the chat. Thank you very much for those questions, for being so engaged. And while you are asking this great question, please consider a like and a subscription to our channel. Asking about our type of what kind of type of traders are we? I'm gonna go
I
ahead
will.
and
Yeah, yeah,
answer first, Samir.
yeah.
I am I consider myself predominantly a day trader. I can take trades from a day trade up to a swing trade. So I do swing as well, but I'm mostly, actually, most of the times, I'm in the realm of a day trade. I want to be closing the trades at the end of the day, sometimes with an overnight and, uh, you know, not very often, but as well some swing trades. I scalp on the side, but my main strategy is a day trade. Meaning I want to catch the next big move that is visible on the hourlies. Right, that's my plan, from one level to the other, but on the hourlies. And what can I say? I'm using quasis and order blocks. If you don't know what that is, just stick around, ask more questions, and you will see me in action. Um, you know, all the time that I'm here. What about you, Samir?
I will classify myself as a intraday type of trader because these type of trades do take some time to play out. I know I'm entering on the 1 minute time frame, but my stop losses are based on the 15-minute time frames. So it do take some 15-minute candles to trigger my take profit or stop losses. So normally the trade is done in like couple of hours, like 2 3 hours, 4 hours. But in rare cases, not like rare cases, every now or then, like 2 3 trades a month, I might can hold that trade for that particular day also, or the next day also. So the TP stop loss, whatever happens, so it can shift to next day. I remember I took a trade on Tuesday, but I think as it was NFP day maybe, so that's why we didn't saw that much momentum on that day. So next day I was holding the trade, so it went for one day, but it was a stop loss day. So that's again, Tuesday was, as I mentioned in the starting, that's is why I don't like Tuesdays. But as we are breaking above, I would love to enter here. And if you go to the 15-minute time frame, this will be a huge wick. That is nice. So it clearly means, these liquidity points are triggered now. So now we need some confirmation to enter. What is the confirmation? We closing above this trend line, showing there is strength in the price as it is breaking some levels. So I don't like to enter just based on some candlesticks. I do like breakout confirmations. And on the trading view, as I don't have the premium thing on the MetaTrader, I think it is little bit quicker, like 3 seconds or 5 seconds, little bit quicker. So I'll be just entering based on my MetaTrader. I never found a need to go for the premium one because the MetaTrader is okay. And yeah, we are
Yeah,
printing
there's
a
there
yeah,
is
this consolidation is really good. This is a plus point for me, as we haven't broke like impulsively. So now if we break, that will be little bit more, it will give me little bit more confidence in this particular move. So these are the things that I follow on the day to day basis. And I am asking this question to myself: am I making any mistake? Am I entering too early? Am I skipping anything? If the answer to this is no, then I think it is okay. And for me, the answer to all these things is no. So I can see some things that I see on the day to day basis that I have seen a lot of times. So I'm comfortable, putting myself in this type of position where I can take this trade confidently or comfortably, not overconfidently, because I still have to keep my risk in check. I don't want to go all in, as you guys was discussing about in poker thing. In trading, we call it the full margin way. I cannot do that. So I think that will be the case here. So I do like this consolidation, giving me more confidence that yes, I am not doing anything which I'm not supposed to do. So now it is just a waiting game here. I cannot take the entry when my confirmation is not there. So it's a waiting game now. So let's see. But I'm sure that not sure, like there is high probability the price is gonna break to the upside.
While we're waiting for that breakout, I'm gonna switch very quickly. Keep your eyes on the chart and let me know whenever we need to
Yeah,
come back
sure.
and
I'll just
forth.
let our
On
viewers know that I'm in the trade.
Yes, on NAS or NQ, if you're trading your futures, we do have, if you go back to the higher time frames, you can see that we are actually within a bullish order block that has been actually this could be a great target if you are into a swing trade. I mean that is possible with our futures account holding overnight. But if we are in a bullish daily, and on the 4 hourly, we just retested that bullish order block right there. There's another one below. So it doesn't mean that this is going to hold necessarily, but that the reaction it has after reaching these structures will give you an idea whether or not we're going to switch back to bullish and continue this impulse, because this is the impulse that we are so far we have been into. So we're coming back to that order block perhaps to mitigate and then continue higher. But it all depends on how price action behaves when we get to these H4 order block. That's something you want to be considering. One thing is you can see it already. See that blue line? We don't want that to be the close of this 4 hour candle, right? We have 19 minutes before the close. If it closes as a outside bar, that would be this candle, this line. That would be a bearish sign, actually a strong bearish sign. That might mean we might be pushing much lower. If it closes as an engulfing, that also is actually not great for our for that long idea. It means that we might get some lower price and maybe not as strong, but still. So we want, actually, if you're looking for going long from this level, or maybe you are already, what you want to be looking for your management, for your risk management, for your probabilities, you want price to be closing above both of them in about 18 minutes, as you can see. And if it doesn't close, that's a sign. We need to listen to these areas. You can see that the H2 and the H1, they also have structures there, and you close below, you're breaking bullish structure, meaning that's a sign of weakness. So what you want to be seeing is that price reverses after coming to the H4 and then pushes higher. You want to see that. You want it to clear these two lines in the next minute, or 18, 17 minutes or so. How's your Dow 30, US 30
I
coming
am
along?
already in the buys now, as we have
Oh,
closed above, and
let's
this is
come
the
back to your
trading view
screen.
thing. Yeah, this is the trading view thing. So on the MetaTrader, I was adjusting my stop loss here and there. So it is just, I think, 20% on the way. So let's see how it goes. My entry is, I think, something like this. Yeah, I go for 1 to 1s. So let's see how it goes. Again, the same question I am asking myself: am I doing anything wrong here? Am I being impulsive? Am I missing anything? Or the answer to all these things is no. And which brings me to this point: I am comfortable being in the position, even if this is a stop loss. I accept it. I have followed my plan, and rest I leave to this day. What it has written for me, as I mentioned a couple of time in the stream. So now I cannot do anything. I can just wait
Mhm.
and watch, or I can just close the charts. I can just do
Walk
other
away.
thing. Yeah, I think this is what trading should be. Because
Mhm.
everyone do trading for the freedom. I think if you don't have the freedom, you are glued to the charts all day. I think you are doing something wrong. Maybe you can do other things also. If that is the case, I just believe that. I think in trading, freedom is everything, and most people come to trading for monetary terms and monetary things, of course, money and all. But on the other side, I think freedom is also the main thing. So here you can see it hardly took me like what 30 minutes to analyze, to make my plan and all these things. And when the price came to my area, when it gave me the confirmation, I took a trade. Now all I can do is nothing, basically. And my plan is also that I take one trade a day. If this is a stop loss, I cannot do anything. I have to follow my plan. I have seen if I break my plan, and I am bound to lose. So why will I do the thing that I know can put me in losses? So we are having good momentum here. I think maybe we're gonna break this area, and then definitely my TP is also at the safe side because it is near this area where there is some kind of resistance areas, and we have some fair value gaps here, as you can see, which is unfilled, untested. So yeah.
Yes, we are breaking up on NAS as well. For those who are trading the NASDAQ, either on the future or the CFDs, it doesn't really matter what venue, what platform, what
Yeah,
ways you want to be trading it. It's the same asset, different contract, lot size, and platforms, but basically it's
exactly.
the same asset. So the analysis holds true for all of them. Price action is price action. Doesn't matter if you're in another part of the world, it's the same price action. It means the same
Yeah,
thing. So I'm going to switch back to my screen very quickly. So we talked about very shortly how the price was coming and retesting this H4 order block, and we wanted price to be closing above these two lines. If it closes in between, it's not exactly a very bullish sign and not exactly a very bearish sign. It's in between. I would say it's even a bit more bearish than bullish. But the fact that we are leaving a wick after interacting with that H4, that's a reason to be slightly positive, as long as the market see that. This is the H2 as well. We went retested the H4, and if we can close above these levels, the current levels, then that's actually a good sign, even without creating closing above here. But I see that we are pushing quite hard, quite nice. Look at that on the lower time frames. Actually, we can look for the quasi. Do we have a quasi in here on the 15? We had that retest on the 15. That's a nice. Actually, look at that. This is the outside bar on the 15, and this is the order block. We came back. I didn't see this before, but we came back to retest that. I don't know if you guys know what I mean by that. Look at that. The close is above the high there, and the low here is below that low, meaning it took the low, took the high, closed above. That's a very strong indication of the market. Who's winning, and but what does it do before continuing? It goes back to retest that order block, presumably to go higher. The next level would be that order block to the left in the same time frame. So let me check on that's in the 5. The 1 minute, let's take a look here. That's a beautiful reaction here we had from the H4, and we're taking these high, and as so long we can hold these levels, that's a very beautiful, look at that reaction from the engulfing candlestick level. And as long as we're holding these levels, it looks good. Even though it keeps on here, that looks good for a price going higher. Below that level, you should be considering, more confluence to wait for your entry, or perhaps to wait for more indication of possible. This is the line, right? Let me mark it there. That's the line that you wanna be. That's the line in the sand for this momentum move, this recovery. We had the first as the market opened, we went lower. That was the open, and now we're breaking higher. So we wanna be holding that open. The open is actually here. So you wanna be holding that line. I have this yellow line, which is the where the level that the market will create engulfing or not, and that can, dictate. That can be a little push, confirmation that the market wants to continue. But you'll have to, you know, not be too eager and wait, trade your plan, wait for the market to actually close as your plan tells you before you take a position. On the 1 minute, coming back quite strong here. That's normal. It happens all the time. Uh, let's take a look at, are there any levels? Right, so on the 2 minute, stay positive here. That would be where, to me, it would invalidate. If it closes below that on the 2 minute, that could be an invalidation level. It's not a one, but I'll leave that there. On the 5, there isn't anything. Actually, on the 3 as well. So let's mark that as on the 3, right? So you're waiting for that. It may not come to that level. There is another in here as well, but I would like to keep it to the extreme. That's the level you want to be, where it invalidates. If it closes here below the 3, on the 3 minute below that level, it means that the reversal after that bearish open is basically negated. You have to consider that the market will then, if it closes below here on the 3 minute, that means that it's likely to be continuing that direction. That's the whole point. But as long as it's holding above, it means that we have a good chance of continuing higher. And especially if it closes on, let's take a look on the 3 minute. In 10 minutes, it closed below, above the 24,823. That's on the NQ level. For the futures, we can expect price to be pushing higher if that happens. Back to you, Samir.
So, as you can see right now, we are in slightly drawdown. But as I mentioned, I am following my plan. So I know this thing works over time. So let's see if this is a stop loss or a TP day. I cannot really do anything, as I mentioned. I can just either sit and watch, and or I can just continue my day, do whatever other things that I
That's
have.
that's very interesting, Samir. How do you handle, once you enter? How do you mentally handle the fact that you can't do anything? What
It
do you
took me a
do
lot of time
to
actually. When I
how do you do?
realized, okay, I think all this thing, it came to a realization when I came to a realization that if I do ABC, I am supposed to get the results. If I do other than this, I will not get the results. So, and in this process, I have done other things also, and it I came to the conclusion that doing ABC is the finest thing, is the only thing. Uh, if I do, I will get the results. So, tuning my mind again and again, telling the same thing to me, to myself again and again, like this, you have to do this, you have to do this, you have to do this. It didn't happen in a month or two. It took me 2 3 years to came to this point where I have accepted this thing. Okay, this is my day. Okay, I follow my plan, I follow my trend line breakouts, I follow my EMAs, all these things. Rest, I cannot do anything. I can't really do anything. So to get comfortable with this, it took me quite time. And how I did that? By doing self talk, by making myself, by saying this to myself again and again, like this thing works. I know this thing, I have confidence in this thing, and this thing has given me payouts, and all these things. Like recently I have made 7% on my live account, which is the Fiverr's live account. I'm about to request that thing in about 3 4 days. So I think
Seven
that is
percent.
the enough proof, that is the enough proof for me to get comfortable trading this way or having this type of mindset. Because when you don't have the proof, then you might doubt a certain trading plan or certain mindset or certain psychology that you might can hold. But when you have the results, I think it is easy for you to stick to that particular thing, or tune your mindset in that particular way.
Hmm.
So the this is the biggest proof, as I can say here, that keeps me in check. Like if I do ABC, I am going to get the results. And as you mentioned, how I build that mindset, sit free and do other things also. It also I think happened with time, as I came to this realization that I can't really do anything now. What I can put, like I don't know, 300 millions for here, so that price go to the upside. I can't really do anything here. So it is all coming to a realization. It took time, of course. It took me 3 4 years. So now I'm at that point. Whatever happens happens, but I still make mistakes. Like I think 2 3 weeks ago I still traded on Tuesday when I was not supposed to trade on Tuesday, and I resulted that resulted in a loss. So now I have to stick to my plan no matter what, because I think this is the only thing that can give me results. So I try to stick to my plan, and rest all I leave onto the market or onto the day, whatever. I have this analogy in universe: some days are yours, some days are not yours. I believe in this thing. So if this is my day, let me give you one analogy also. I think price will reverse right from here. If this is not my day, then price can reverse right from here also. I cannot do anything literally.
Yeah.
So it is I think for me it is okay to just take one trade a day, and just follow this same thing. I think I will get the results.
I think you mentioned a couple of things that are quite important as a trader. That to realize that there are certain things that we control, and there
Yeah,
are a
exactly.
lot of things that we have no control over. As a trader,
It takes time, yeah.
you
It
you
takes
can
time, but
control, yeah, you can control your trade plan, right? Because you write it. You can decide to modify it. You can control whether you follow the plan or not. You can
yeah, exactly.
control, your screen time. You can decide not
Exactly.
at the desk. These are things that are within your control. Um, you can control the risk, right? Because you decide how much to put on every trade. But once you have done everything in your control and you get triggered and you enter that trade, that's the moment, that's the point where you no longer have control of the outcome, at least not of this particular trade. If you have data and you know that in 20, 50 trades what the average would be of your trade,
Yeah,
that's exactly control, but you know in advance what's going to happen. But any
exactly.
in particular, once you enter, that's the moment it's out of your, it's no longer within your control. And we as traders, it's a sign of maturation or getting mature, that you understand, and that's what you're talking about, Samir, that you understand it doesn't depend on you. So you just have to embrace it, accept it, and look for evidence, feedback from
Exactly.
performance and your data, that you actually have edge, looking at that you're getting your payout, in this case 7% on your account, which is a very beautiful, by the way, congratulations. That's
Thank
those
you.
These are feedbacks that will um, make you, at least give you some confidence, and perhaps that could be enough for you to just stick to the plan, even if you're taking a couple of losses, because you know that
Yeah,
the plan
I
has.
remember. I remember
Mhm,
on as I mentioned on Tuesday, I took a trade. I think that alone, that one trade messed up my whole week. I was supposed to end up that week in 1% profit, but that particular day that I lost, I still remember my trade was running for the next day, as I mentioned. And next day, I got
mhm,
a little bit confident and I opened another trade because the bias was bullish and I was already in the bias. And in that next day also, as you know, EMAs are bullish, all trendline thing that I talk about, all these things was aligning. I
mhm.
took a trade that day also. So that resulted in a 2% loss. So in that particular
Wow.
week, I ended up like negative 2%. I was supposed to make 1% in that particular week. So I talked to myself. I was very angry at myself. Like, why did you do this? When you decided to, your trading plan is here. I don't want to say I don't trade on Tuesdays again and again and again. So, as per my trading plan, if this is the condition, why I didn't follow that? So that alone, of course, I didn't make that huge mistake that ended up in whole account being in drawdown or whatever, but this small mistake resulted in a negative performance. So the point that I'm trying to make here is, even the small decision that is not aligning with your trading plan can impact your results. So try to follow your trading plan as strictly as you can. I think that is the only way you can get your results. Even one slightly thing here and there can impact your results. So I know you will not be able to do this like today or next day. Slowly build this habit. I still made the mistake as I mentioned, but I realized this thing. So now I try to follow the plan, as much as I can. I know there will be days, when I am overconfident. Let's say I hit 20 wins in a row. So I think I am bound to make a mistake after that, but I am okay with that. But I am okay with I'm that kind of person also who can realize that particular mistake. I don't allow myself to go in that deep of a drawdown or type of thing. So that mistake I did on Tuesday, as I mentioned, I will not make that mistake in upcoming days or upcoming months or years, depending upon the trading plan that I have. Right now I have this trading plan. I don't know, next year I might can come up with another trading plan based on my experience or my visualization or whatever patterns that I'm seeing in the charts. So yeah, the point again that I'm trying to make here is, follow your trading plan as much as you can, because even one slightly mistake can impact your results. It has happened with me. Definitely it can happen with you also. So why not to learn from my mistake, which as I mentioned I did.
And on that note, we can see where the H4 order time frame closed. It closed as a outside bar, a bullish outside bar. Let me double check. No, it hasn't. It's technically it's not a bullish outside bar, but it's very close. In all honesty, that's very, very bullish, right? You saw how it reacted on the H4 and play with these levels for some time until we saw it on the 15-minute. We saw the bullish order block after the open, and then it came back for the retest and just catapult to higher levels. The market is completely, once this price action was printed, it was pretty clear that if it goes up, it's gonna keep on going, because respecting this order block, which was on top of the H4, is all the alignment it needed for that huge push. And on the euro dollar, before we close our stream, we are still in that area, the demand area. We're still waiting for the market to give us a sign whether or not it wants to reverse. So far, let me double check on the 5 minute, there isn't anything here telling us that the market wants to reverse. On the lower time frames, maybe now with that little push, maybe that could be something. But so far, I don't see anything. Right? These are the valid neckline that needs to be broken. They're not broken yet, and until then, we need to just see for what it is. We have no indication yet of a reversal. Someone in the chat actually ask about the Discord link. If you go to the dashboard in the Fivers, you will see it on the left upper corner. You'll see the Discord link. That is your portal. That is your entrance to our beautiful, supportive, great, awesome community. That is the Discord community. Actually, in about 45 minutes, we're going to be having another workshop where you can join and learn some more, chat, and share your experience as well. It's So you're all invited for the Discord community. Let me see if before we finish our stream. Thank you very much, Zeisty, for your great remarks. We have lots of questions here, people asking how we trade and all of that, but we will be, this is the end of our stream, so we'll have to do this at another time. Let's go check Samir's position right there.
Okay,
See it
it can
in
take
profit.
time, as I mentioned. And before we end, Chubby Owl, Samir, would you like to share how many years you have your backtested data? I would like to cover this last thing, then we can,
Sure.
see you tomorrow, of course. So, how many years or how many days or whatever months I have backtested this? The thing is that my foundation started with trend lines and patterns only. So my strong point is this only: trading trend lines, some kind of impulse and correction, these type of structures. So I'm seeing this type of thing from day one, which is, since almost 7 years now it has been. In between, I've seen, I have tested some other strategies here and there. So I'm seeing this impulse and correction type of thing from day one. So this is my strong point. So that's how I haven't back tested this thing like pure, having intentions of having building a back testing data. So I have live tested this thing a little bit more. So that is your answer. And with that being said, guys, we'll see you tomorrow, same time. Of course, my session is gonna be same time. So again, thank you so much for everything, guys. You support us. I think we are not. I think we are at 100K also. So thank you for that also, guys. So with that being said, we'll see you tomorrow. And Victor, thank you to you as well, and thank you to the Fivers also for giving us this opportunity. So take care, guys. I'll see you tomorrow.
All right. On that note, we will be finishing our stream. Would like to thank you for watching and keep those sensible risk management as always in check. So see you guys tomorrow. Bye bye.